in the NBA, not only do we have really all of the Knicks coming that just won the championship and many of the older guys as well, but you've got LeBron James, Kevin Durant, James Harden, SGA,
Cooper Flag,
Anthony Edwards
is going to be there.
Wemby's coming.
Oh, is he?
Yeah, and we're going to make sure protect him. And New Yorkers are nice to him when he comes to Fanatics Fest.
You're not handing out eggs?
There will be no eggs at Fanatics Fest, and he will be well protected. But look, I think New York deserved this championship. They got this championship. Wemby is he's a force of nature, and he's going to be, a really tough team for, I think, decades to come. And it's going to be fun to have him here, and it's going to be fun to just have most of the top NBA stars, the top NFL stars.
Is there anywhere your tentacles don't spread at this point between the World Cup, the NBA, the Major League Baseball, you've got the NHL? I mean, I just think about everything you all do at this point. And I remember you from 15 years ago, just how far you have taken this company.
I'll tell you this year, Fanatics will be about $14 billion in revenue. We got 22,000 people. We feel like a startup. We feel like we're just getting going. I think, I remember, I've told this story a couple times. I remember watching the Nike movie a few years ago and Googling how old Phil Knight was. At that point, he was 85. I think I was 50. I thought to myself, look what I could do over the next 35 years with Fanatics. We're just getting started. I mean, our business today is still 85% domestic. That means the whole world is a great opportunity for us. I mean, we're opening up Fanatics collectible stores now. We just opened one in London last year. It's probably doing, we thought it was going to be a $5.5 million store. It'd be a $35 million store this year. We're opening one in Paris in October around the NFL game that's going to be in Paris. We're opening one in Germany later this year. We've got stores opening in the Middle East. So, for us, I feel like this is still very much the early days. When you think about everything you can do for a sports fan digitally, we're just getting started. And our
when
job.
When are you going to go public?
Well, I was going to say, our job is to relentlessly enhance the fan experience in everything we do. How do we keep making everything we do better? And that's the way we think about the business. That's what Fanatics Fest is about. And that's why we love bringing fans. We're going to have 200,000 fans come to Fanatics Fest and really get to understand what Fanatics is all about and have, lifetime experience. I remember last year.
But I asked because of what we just saw with the SpaceX IPO.
Yeah.
And the appeal to the retail investor that SpaceX had a pretty unique way. I could see this being a unique thing for retail investors as well.
We agree with you. That said, we're focused on just building a great company. We have no need to go public. There's no pressure at all.
No AI company you want to buy?
I'm the largest individual shareholder. I love building this business. I'm going to do this for the rest of my life. I think we have an opportunity to build something great. We're just in the early days. So I think going public doesn't really make you a better company. It makes you start worrying about quarters and earnings. And
you like being the controlling shareholder.
And I love doing what's in the best interest of the fan. And from my perspective, we're getting better every day, and we need to get better every day at what we do. I don't want to worry about, hey, Fanatics Fest is going to cost $80 or $90 million to produce, and can we afford that? I want to just say, this is a great give back for fans. I want to get every star, every athlete in the world there. And I don't want to worry about managing earnings. I want to worry about how do we do the best thing for the fan. And it's the same thing when we launched our gambling business. We said, we're going to give fan cash every time you gamble. So for guys like Joe, who likes to go to, and play every day, we want to make it a better experience. By the way, your player gets hurt in the first half of a game. We take him out of the player props. We raise the bar for the gambling space. So we like looking at every business we're in and saying, how do we do it better?
Which sounds very much like Jeff Bezos when he started Amazon. It's all about the customer.
I agree. I think we benefit by being private. And so will we eventually go public? Is there a possibility of it? Sure. Is it something we're thinking about today? It's not, it's not in my near-term bingo card.
Okay. Michael, thank you. We always appreciate having you here, and it's, again, been really phenomenal to watch what you do.
Can I buy a Scotty Scheffler item from you?
You can generally buy most things from us. Golf is not our biggest business. I'd say we do run several big golf events.
There's something happening this weekend,
I do, and I want you to know, we want to make sure that you're buying your merchandise from Fanatics, that you're making your bets at Fanatics Sportsbook, that you're buying your collectible cards from Topps and from our store.
Golf is not.
And you're coming to Fanatics Fest so that we can find some way to embarrass you.
Thank you. It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. Andrew is off today. Among our top stories this morning, retail sales figures for May just about a half hour away. Forecasters are expecting a rise of 0.5%. We'll bring you that data when it hits. The Fed is set to deliver its decision on interest rates, which are expected to remain unchanged for this meeting. The new Fed chair, Kevin Warsh, though, will be center stage. His news conference will begin at 2:30 p.m. Eastern Time. And shares of SpaceX this morning look like they're up about 1.3%. That stock is up 51% since its IPO debut on Friday. This morning, the company's Falcon 9 rocket launched 3 direct-to-cell satellites from Cape Canaveral. Those satellites, which are known as Bluebirds, are part of AST Space Mobile's low Earth orbit broadband service. Also, check out shares of Dutch drug maker Unicure. They're soaring after the U.S. FDA agreed that existing clinical trial data could support an accelerated approval filing for its gene therapy to treat Huntington's disease. Unicure said that it plans to submit its application in the third quarter of this year. That stock is up by 67%. This is a cure that had gotten kind of stuck through the administration in previous versions of what it had put forth. Huntington's disease is really a horrific disease that steals people's abilities along the ways.
In my lab at MIT, or in my actual lab, not on the 5th floor, there were unbelievable people on the 5th floor, like David Baltimore and Robert Weinberg and Phil Sharp won a Nobel Prize. But in our lab, my guy, Professor David Hausman and Jim Gisela, went down to South America, figured out where the Huntington's gene was, looking through families, and were the first people to actually find the Huntington's gene.
Horrible.
It is terrible, but they were working on it. I watched it in real time, like 1,000 years ago.
I mean, this got caught up in the FDA. It's given a CRL.
It's a tiny little company, Unicure.
It is,
1.7 billion.
but for the Huntington's disease community, this has been a battle that's been hard
gene
fought,
therapy,
and they've been waiting and waiting and waiting and waiting. As you're waiting as a patient, abilities get stripped away that can't be restored.
I don't remember which. It was one of the. It was very prevalent, and they had to make trips down there to find families where it was very elegant the way they figured out how to. Back then, it was different in how you actually identify a gene. Yeah. Auto retailer CarMax just out with quarterly results, and investors are looking for more signs of optimism from the company. Phil LeBeau joins us now with more. Hey, Phil.
And they got those signs, Joe. With the results for Q1, take a look at shares of CarMax moving a little bit higher after the company beat on the top and the bottom line for the first quarter. Remember, they've had a whole host of problems over the last couple of years trying to grow their business. New CEO came in March, and these first results, look, this is just the beginning of the new CEO's tenure, but the results are encouraging. Look at the numbers within the numbers. Retail used sales, they were flat, fractionally higher for the first quarter, and then their gross profit per used vehicle, $2,177. Now that's down $230 year over year, but the whole plan here is to make the car buying experience, especially in the used market, erase the friction as much as possible, make it easier for people to find the vehicle they want, to buy the vehicle they want. And the used market, it's important right now, especially when you look at the average transaction price for a new vehicle. It remains close to a record high, almost $50,000, waffles back and forth. One quarter it'll go over 50,000, one quarter it'll drop just under 50,000. The bottom line is this: used vehicle prices are important to watch, and that market's important to watch because for all the talk about more affordable vehicles, new vehicle prices are not dropping. We'll have more data on that a little bit later this week. Quickly take a look at CarMax over the next year. The analyst call is going to start in about 5 minutes, guys, and we'll hear what the new CEO has to say as far as the game plan for the remainder of this year and continuing to grow the business.
Big business, right? A lot of old cars out there still, right? So,
Tons of old cars out there, Joe.
all right. Thank you, Phil. We gotta go. Squawk Box returns in just a moment. Futures, right now you can see our mix. NASDAQ getting back some of the losses from yesterday. Joining us now, Monica DeCenzo, Head of Global Investment Opportunities at JP Morgan Private Bank. President Trump would like you. He was just talking about how the market, I think he said the Dow, had thousands of points in the last couple of weeks. Kind of, I guess, if you go back to a certain point, that is true, and the S&P as well. And now, you midpoint 8,200 by the end by
a year from now.
Oh, it says year end.
Yeah, I think there was a typo there. That's ambitious. Maybe
That
possible.
would be okay.
Yeah.
So 12 months
7,800 a year.
midpoint though.
Yeah.
78.
Year end 26, 8,200 a year from now.
Okay, not everybody's there. We have people on all the time that are still down at 7,000 and have no idea. It seems like at times.
That's what makes markets.
Right, you're not afraid to be bullish.
No, and I think all the fundamentals we see, we just wrapped earnings season, it looks pretty good. And so I would struggle to argue for a very bearish scenario right now based on any fundamentals. Then you have the geopolitical picture clearing up a little bit more, and I think that's another tailwind.
Well, you've I don't know whether this includes $76 oil.
Yeah.
Because that's where we are today. So
Our base case was oil moderating into year end.
What?
We still think there's going to be a risk premium built in there because I don't think we know enough yet about what this deal looks like.
But the easing bias for the Fed might get removed, but no hikes.
That's our view right now. I think you have to assume, I don't know what the benefit would be to come out with something strong or very differentiated today. I think they probably want to see some more data, obviously, in the coming months.
How important is the recent results that we saw from U.S. corporations in earnings to your thesis?
To me, it's probably the most important.
Everything.
Like, the headlines have mattered, but you've seen the market sort of brush them off, right? Because there was always the assumption that the skirmish in the Middle East was perhaps short-lived. Now, then you look at earnings, you see fundamentals are really strong. And a year ago, the debate I kept having with our clients was, well, it's just the Mag 7. But then when you look underneath the hood this quarter, we really saw breadth across sectors. And importantly, it wasn't just tech. You X out the Mag 7, the rest of tech was up, I think, 50% earnings growth. Then you look at revenues. We saw revenues accelerating across the board, most sectors, and margins expanding. And so you look at all these different pieces, and it just tells you the fundamentals remain pretty healthy. And then importantly, the consumer will get a benefit if you do see some moderation in oil prices and gas prices.
The gains in the stock market the last couple of years would be tough to replicate, and you don't think that it'll continue to go, but moderate.
Rolling 3 years, I think we're at 77%, so it's annualizing at over 20% a year. I don't think you can assume that continues, and that's okay. The market probably pulled forward some of the AI benefits. But again, in any normal year and cycle, we expect mid to high single-digit equity returns. You'll probably get a little better than that over the next year because of some of these AI benefits, but that's still pretty good. I think the debate I keep having is I still see a lot of cash on the sidelines. So if you're trying to get into markets here, are you leaning heavily into equities now, or are you adding maybe a little more balance just in case we're wrong and in case inflation is stickier and rates do need to go higher? I think you just want to have a little more in your portfolio that could work under that scenario as well.
We know that the stock market is not the economy.
Correct.
And we hear that, that only a certain amount of people own stocks. I don't know whether that includes in 401ks and everything else, because it's much more, the benefits of a strong stock market, I think, cover a lot more of the economy than we give it a credit for, a lot more of the K-shaped economy.
Yeah.
Why are people so downtrodden right now? Because the media tells us that, or what?
I mean, I think it's hard to ignore headlines, right? Like if you're an average person just picking up the newspaper or looking at your phone, you are bombarded with a lot to scary stuff.
People
right?
are saying they prefer the Biden economy where real wages didn't grow for 4 years. People didn't get a raise for real weekly wages dropped over a 4-year period. Why?
It's funny. I think the most important thing for people who are employed is that you remain employed. And that's what we're watching in the job market, right? The job market has been stable. It's not strong enough for people to feel really great and they're going to leave their job and go find another one at a higher wage, to your point, somewhere else. But as long as they still have a job and they feel comfortable with that, they're going to still spend money.
Consumers are spending too.
They are.
So where is the biggest, is it, and even inflation, we got readings in the 3 or 4 for PPI, but not at 9, or not, you didn't average 5.
I think the challenge is you had that spike. It remains elevated,
And
a
it
little
was up
higher than people would like.
23%.
And people remember what they paid a few years ago, and that's totally normal. We all have that recency bias. We'll start to recalibrate in the next year or two. But again, as long as I've got the job and then I feel good that I can keep spending, you can probably spend through that. And one thing we were watching the benefit from the big beautiful bill last year, if oil prices had remained elevated, we were going to completely erode that benefit by the end of June. If you see prices start to come down, that gives consumers a little more of a tailwind, and that's a good thing.
Some of the tax refunds and no tax, all those features that.
Yeah.
Okay, remember the 7,800 year end, 8,200. So only 6 months after that, only maybe 3 or 4% gains in next year.
And by the way, that's okay. Again, normal equity returns, mid to high single digits, kind of right in line. That does beg the question, though, if I'm moving out of cash, maybe I should buy some bonds as well, because we don't think you're going to
Mortgage rates come down from here or go up from here?
I mean, for our sake, I hope they come down at some point, but I don't see near term how you see a significant move there. So hopefully, over the longer term, they come down a bit. It'd be a good thing for the housing market, obviously, to see a little bit of stimulation there and people start to feel comfortable moving. I don't know about you guys, I'm not going to move given what my mortgage rate is now, so I'll stay in New York City.
This is J.P. Morgan Private Bank, Becky. I mean, people like us, it's nice that she comes in and tells us these
To deal
things.
with us?
Yeah, and because we're not going to take our.
If you're not clients, we should have a conversation. Because
Okay. You don't.
it could help you a lot.
You don't want us. Thank you.
Thank you.
Thanks.
All right, when we come back, President Trump delivering a warning to Iran at the G7. Permanently give up your nuclear weapon aspirations for lasting peace, or face the ultimate consequences. We will speak to a former nuclear weapons inspector next. And later, former Kansas City Fed President Esther George on today's rate decision and what she is expecting to hear from the new chair, Kevin Warsh, this afternoon. We'll be right back. right, here's what's happening right now at the G7 where world leaders are gathering. This is that luncheon that we've been telling you about where they are sitting down with top technology executives, including OpenAI's Sam Altman, Anthropic's Dario Amodei, Google's Demis Hassabis, and Salesforce CEO Mark Benioff. Also, the Mistral, which is a French company, Arthur Mensch is there to talk about all of these issues. Right there you saw Dario, who we were just looking at, Dario Amodei. This is taking place right now. The luncheon of all of these world leaders sitting down with these technology leaders in the AI field. And we'll continue to watch and bring you any updates as we get them.
I was just checking that a couple of thousand points in weeks. So on June 4th, we were at 51.5.
Points for the Dow.
Yeah, we were at 51.5 on June 4th. The low on June 10th was 49.9. And we're now at 51.99.
So it is, a couple thousand.
So in 1 week, we're up 2,000 points. So he's exactly right. Trump was saying that. President Trump was saying that. And I was like, well, a couple thousand. But we had been at 51. That's why I was thinking, well, I thought we got above 50,000, a while ago, and we did. We did a record, but it did go back down and test 49.
Right. I think Monday was the day we broke the all-time high again.
Right. So strictly speaking, but it is 2,000 points in a week.
All right, some new developments emerging about the framework of a deal to end the war between the United States and Iran. President Trump pushing the idea that Iran can never have a nuclear weapon, but the question remains, will Iran go along with it? Joining us right now is former nuclear weapons inspector David Albright. He is the president of the Institute for Science and International Security. And David, I think we'd all like to see the world without Iran having nuclear ambitions. How likely do you think it is that they will give up those nuclear ambitions for some of the things that they seem to have been promised?
I think based on just reading the available memorandum of understanding, I mean, you can't have a lot of confidence. This deal is giving away a lot of U.S. leverage. I mean, it's paying a very high price to get the Strait of Hormuz open, and there isn't going to be a lot of leverage left to deal with the nuclear questions. And the language in the memorandum of understanding isn't very good. I mean, it's not even using kind of the standard language that's been developed to say a country shouldn't develop or test or manufacture or produce nuclear weapons. It just uses the word produce. And we know from experience that creates loopholes, and countries have exploited that. Iran included has been exploiting that kind of imprecise language for years. And so
you mean the idea of the words not being able to test, not being specifically in the memorandum?
Yeah, they're not in the memorandum that is available publicly. Now,
this
Trump
isn't the
has
finalized version, we should say, right?
I mean, but Trump's been making statements that he wants to see improvements in it, and this is one area where I think he's been less than satisfied. But still, this is the version out there that's being said as final, and it has leaky language, and it also has some language that talks about the nuclear issues will be addressed that are mutually agreed upon. I mean, that's not normal language in a deal. I mean, it should just be the issues that need to be dealt with, and mutually agreed could actually exclude robust International Atomic Energy Agency inspections aimed at making sure that Iran doesn't have undeclared nuclear material. I mean, Iran rejects that point of view of the IA completely, and so it's highly contentious view from Iran's point of view, and it will never mutually agree with the United States to look into that. So I think this paragraph, there's two nuclear's in two paragraphs, but this one in particular really needs some serious amendments and work, and I hope that this is not the final. Now, there may be side deals. I mean, we had that in the 2015 Joint Comprehensive Plan of Action, but the side deals back then, which took a lot of effort to flush out, and the media was important in doing that, made things worse. So it was, since the side deals can hide the even further problems and are there to hide embarrassments and weaknesses. And I saw Vice President J.D. Vance recently saying that, there are these secret arrangements. I think it was him. Let me not quote him saying it, but there are these secret arrangements. But we should know what this deal's about. It shouldn't be, okay, it's a great deal because you don't see the secret part of it. We should know exactly what it is, and on its surface, it has some serious problems.
David, I mean, this has been the question of dealing with Iran going back decades at this point. The idea that we don't want them to have a nuclear program, the idea that they will give as much as they have to, but they've never been very open or forthcoming. I'm sure you have the sense that they have not followed the spirit or the letter of any of these agreements to this point, that they've tried to evade detection of any of their programs that are there. How do you work within a regime like that?
Well, I think you have to be very tough. I mean, that's the bottom line. And the language should be very clear that Iran has to accept robust International Atomic Energy Agency inspections, and Iran should cooperate. I mean, that's the key word. I mean, this whole nuclear issue can be settled in a few months if Iran cooperates. And I think the language in this memorandum of understanding is kind of timid. It's not enough to push Iran to feel that it needs to do something. And the memorandum's a bit open-ended about, could just be renewed. There's no obligation that Iran complies before it gets the vast benefits that are being given to open the Strait of Hormuz. So I think you have to just be extremely tough with Iran, and I think that could require a return to military strikes. I mean, this is a ceasefire deal fundamentally, and I think if Iran doesn't perform, it should understand that military actions could resume. And so I don't think we should see this as an end to the war like World War II ended. I mean, this is an interim process that we're in, and military conflict could resume because Iran will not abide by even the basic requirements of international obligations like the Nuclear Non-Proliferation Treaty. And so I think perhaps it's not good news for the economy per se, but I do think that this memorandum kind of reinforces the idea that we're in a very unstable situation.
Do the threats ring hollow now, David? I could make the case either way, because the president has threatened many times in the last month or whatever it was. We're going to do it again. We're going to do it again. We're going to do the bridges and infrastructure, power plants. We're going to do it. And then it never happened. Yet, he did do something right at the start that no one ever did before. So it's not like Iran can say, oh, we don't, this guy's all talk, because he really did do something initially, destroying the Navy, just destroying some of the missiles. So the threat is there. But at this point, I don't know whether they think they have gotten beyond that, I think, to where they're acting with impunity in a lot of ways for the last month.
Yeah, and I think the deterrence has to be reestablished. I mean, Trump did, and with Israel, did serious damage to the nuclear program, including the parts of the program aimed at building the nuclear weapon itself. And so they've been seriously set back, and that's a real victory of these two wars. And it actually puts Iran in a weaker position, and that's why it's surprising to me to see that it's like the U.S. has put itself in a weaker position on something that was a U.S. victory or almost a U.S. victory. So I think they have to reestablish deterrence, and I do think that President Trump has just made one too many or 10 times too many threats that don't mean anything, and Iran is reading that very accurately and pushing for an advantage.
All right, David, thank you for joining us this morning.
Thank you.
Okay, up next, retail sales data. The futures this morning are been mixed for most of the session. NASDAQ's up, S&P is up, but the Dow giving back fractional losses. We're coming right back.
Welcome back to Squawk Box. Rick Santella here live at CME HQ with the breaking news of the morning, which is our advanced release for May retail sales. Headline number expected to be up 0.6%, comes in stronger, up 0.9%. That would be the strongest since it was up 1.6 in March. That's the high water mark, and that was a one-year high. Now, if we strip out autos, and remember, auto sales were only up about 1% in May, but it still remains rather strong. You strip out autos, you're up 0.8%. That would it would be the same area, up 1.9% in March, so that's where it comps to. So these have been running on the strong side. If we strip out autos and gas, knowing that gas prices were up about, what, 7% in May, which is a couple percent more than they were up in April. So gas station sales are going to boost this number, and indeed they did. We're expecting up 0.3. It comes out up 0.5%, and that equals where we were last month. So it's back-to-back up 0.5%. The high water mark there was February, where it was up 0.8. And finally, if we look at the control number, which is core retail sales, it is quite strong, up 0.7. That would be the highest since it was 0.8 in March. It was 0.9 in February. So it's not so much that it's a bit lower than that. What we should look at is that it's been running pretty strong all year. We finished up last year unchanged, and the month before that up 0.2 in November. So these are rather strong numbers on the control side. And do remember, there's an inflationary element, of course, in retail sales we need to pay attention to. If we look at yields, yields are hovering in a 10-year at 4.44, which is virtually unchanged. And if you look at a 2-year, 4.06, same scenario, virtually unchanged on this Fed day. And I would like to point out one thing here, and that is, if we look at the oil market did briefly in the July contract, and I'm sure you know this, Joe, in the wee hours of the morning, it actually traded under 75. I believe the low is around 74.60. And I know that your guest is disappointed with what he's seen on the deal, but in the end, I can't tell you about the geopolitics here. What I can tell you is what the market's telling us. What the market's telling us is that at least some of the negative aspects of the conflict seem to be disappearing, and maybe the most overriding issue ought to be how we look at the economy outside of the conflict. If you separate it, it certainly seems as though the baseline economy is doing quite well, and that's what the market seems to be concentrating on the most. Joe, back to you.
Yeah, when the president said that, we're like, a couple of thousand points in a week. 2,000 points in a week on the Dow.
It's incredible. It really is incredible.
Yeah, I don't know if your ears were burning. We were talking about whether this is the biggest drought and then a championship. How happy should the Knicks fans be? And I thought about you, because I don't think you were there for the whole drought for the Cubs, but you were there for a lot of it. That was a pretty big deal.
Oh, absolutely. I think it was a big deal.
Bigger?
So,
Bigger than the Knicks, or the Knicks is big?
Yeah, the Knicks is big. You know, I'm not huge into basketball. My interest peaked in the Jordan years, which was decades ago. But yeah, I see where you're going.
100 and what? Becky looked it up. Was it 100?
108.
They call them law. Most Cubs fans during that, they never saw it, right?
Nobody in their life.
They lived and died. They lived and died, and the Cubs never won. That's horrible.
And I'll tell you what, though, Joe, in the
Like
end,
the Bengals.
2015-16 was great. However, there was something more romantic about being a Cub fan when they were more
Right.
the lovable losers.
Right.
I know I shouldn't say that, but we all know it's true.
If you want, you can. I know that. What do you think of that, Leisman? Rick just said he's okay being a lovable loser. Show me a loser, and I'll show you a loser. They usually say, don't they say that, Steve?
Yeah, they do.
Yeah, I'm only talking baseball. Come on, Joe. Only baseball here.
I
You
will
gotta
cop.
be a winner.
I will cop to having been a diehard Knicks fan for most of my life, but the last 5 years or so, I had to give it up, but now I'm back on board. with the
Oh
Blue
my
and
God,
Orange.
fair weather.
Yeah, totally fair weather. But I really suffered through it for a long time. When I was young, my parents took me to see the New York Knicks at Madison Square Garden in the early 70s with the great Frazier, Monroe,
Yeah.
Willis Reed teams. And That's where I was, and I tried and I tried and I tried, and finally I just couldn't do it anymore. But can we talk about retail sales, or I mean, I'll talk about the Knicks forever if you like.
No, we can definitely. I think Nick's merchandise might have boosted retail sales.
Yeah, whatever was going on, Joe, the consumer was not only strong, but stronger than expected. And what we're not seeing, and I'm going to repeat what I said when we did our CNBC NRF Retail Monitor, but for one story, did the surge in gas prices cause consumers to give it up elsewhere? And it did not. And Rick is 100% correct to focus on that control group, because that's the number that feeds into GDP. And it's not inflation adjusted, but you can imagine this strong number, a bit of a downgrade, I believe, to the prior month, but this strong number could flatter again some of the GDP forecasts that are out there. So here's the question. I'm looking at a report from Pantheon which said you had refunds of 18 billion in March, 21 in April, but the added gasoline costs was 9 billion and 11 billion respectively. So there was money left over. What did consumers do? What do consumers always do? They spent it. So the question becomes, if those refunds were fueling the strong retail sales numbers, is it come off a little bit come June now? But when I look at it, I see strength throughout, and so the consumer did not give it up. We had 3.4% higher in gasoline prices. Autos did well. Some of the other discretionary general merchandise did well. So it wasn't as if people just said, hey, I'm only going to buy essentials here. They continued to spend. Whether or not there was some kind of interesting breakdown in the income groups, that's something we can't answer from this data. But right now, the story is that the consumer did not give it up in the months of April or May because of those higher gas prices. Oh, and sorry, Joe, one more thing if I could add. It does raise an interesting question for Kevin Warsh today, which is this. When you look around this economy, where do you see any effect of a restrictive funds rate? Not in the stock market. You don't see it in consumer spending. You don't see it in capital investment. So what part of the economy now tells you rates are restrictive and holding back the economy such that they ought to be lower?
Okay. Steve, thank you.
Maybe
Rick,
a better question, though,
go ahead,
Steve,
Rick.
real quick. Better question is...
Hold on, let me write it down, Rick. Hold on. Go ahead.
All right, you got a pencil? All right.
I got a pen and a paper here.
What part of the economy is showing you that rates need to go higher, though? See, I agree with you. I've never said, well before the conflict, I've been on board for higher for longer. For years now, that's where we need to be. However, I don't know that we need to go higher than we are for any remainder of time either. So I think right now that we could easily say we're right at that point where rates could go either way depending on how new inflation behaves and depending on how old inflation behaves.
So
Do you
with
agree with that?
With that statement, Rick, you have to send me cheeseburgers and I'll send you cheeseburgers. And we'll both have cheeseburgers because I completely agree with you.
Sounds like Goldilocks.
All right.
Everything's just right.
That does.
Can't believe we will settle at that moment. Rick, Steve, thank you both. Still to come this morning, you may soon own SpaceX and not even know it. Sharon Epperson joins us with that story right after this break. By the way, that stock is up another 2.3% this morning. It's up 53% since its IPO on Friday. And then former Kansas City Fed President Esther George on Kevin Warsh's first meeting as Fed chairman and what he may or may not say this afternoon. Squawk Box will be right back.
And SpaceX shares have soared about 50% in the first days of trading. That has some people wondering whether they missed their chance if they didn't buy already. Yet many investors, including retirement savers, may already have access to this high-profile investment without ever purchasing the stock. Sharon Emerson joins us now with that story. Hi, Sharon.
How you doing, Joe? You know, millions of investors may soon gain exposure to SpaceX without ever buying a single share. You may already own this high flyer, or you may soon in your 401k, IRA, or your brokerage account. Of the traditional investment managers that currently own SpaceX stock, S&P data shows that FMR, the parent company of Fidelity Investments, holds just under 1% of existing SpaceX shares across 46 Fidelity funds. Barron Capital Group has less than 0.25% of outstanding shares included in 7 funds. Franklin Resources, BlackRock, and Neuberger Berman also hold some shares of SpaceX in a few funds. Now, those may be mutual funds, exchange-traded funds, or closed-end funds, and they are professionally managed active funds. Soon, SpaceX will be included in some passive index funds as well. SpaceX will enter 2 major stock indexes, the Russell 1000 and NASDAQ 100, which have recently introduced policies to fast-track the adoption of mega IPOs. The Russell 1000 can include a massive IPO after as few as 5 days of trading. For SpaceX, that will be Thursday evening, June 18th. NASDAQ adds a stock to the NASDAQ 100 after 15 days, or in this case, July 6th. So once SpaceX is in these indexes, the stock will be added to mutual funds and exchange-traded funds that track these benchmarks, including funds and ETFs in many 401ks and workplace retirement plans. So if you own these funds, you'll own SpaceX. There's a lot more on investments and strategies for your retirement savings in my Money 101 newsletter. You can use the QR code right there on your screen or go to cnbc.com/money101 to sign up. And the June edition will be out later this morning. You don't want to miss it. Joe?
And how much SpaceX stock will you own if you have it in these funds?
It's a small amount.
Small
It's a small float. You know, they're based on the amount of shares that at the listing and all of that. It's not going to be a huge amount in the benchmarks. But what's interesting is, as I mentioned, you could also own SpaceX in an actively managed fund. And if that is a fund, a Fidelity fund, Barron's fund, there are a number of funds that have 10% or more of their net asset value in SpaceX. And so there are about 8 funds according to Morningstar. There are 4 funds, Barron funds, that have over 20% of their assets in SpaceX. So there are people out there with those funds already who own SpaceX.
You know, the funny thing is, we've been talking about how, should they really be allowed to include it after 15 days or 10 days or
Such a
any of these
non-story
numbers?
for me.
Well, but the point is, man, maybe you wanted it earlier, before it was up 53% over
Right.
the last 5 days. I'd be more upset about getting it after some of the gains you've seen since the IPO.
And the
It-
S&P
they're-
500 is like, we're not fast tracking anything. And so you
Yeah,
won't
but
be able to
there
get
are
into
other
there
funds
to
that
the,
didn't have a reason, that were not affiliated with the NASDAQ, that are putting it in faster than the NASDAQ.
Yeah,
It's,
yeah.
You know.
Why would you not have it's already the 5th
Larger than
biggest
Amazon. 4th
company
largest.
in the
I think
world
it is.
to not have it, or to have it, call it pay for play. It's a
I was just thinking, I
non-story.
would have rather had it at the IPO than.
I know.
Well, a lot of people are talking about it. They're talking about it in their family dinners. They're talking about it at
Great
churches
today.
on the street. Everybody wants to be in.
and a lot
but
of-
people are worried if they didn't get in. Yes,
Right.
should they still get in?
Right.
They're going to be in.
Right, but retail has never been able to participate to the extent it did with SpaceX. I think it's great, and they're all up 50%, which is, they'll probably be in the stock market the rest of their lives. You start with an experience like that, where you get a couple hundred shares of SpaceX. You really do get it on the IPO, which we never could in
Yeah.
the old days.
Yeah, exactly.
Thanks, Sharon.
Sure.
All right, still to come, I'm going to tell you today's Federal Reserve rate decision, and share Kevin Warsh's view of the economy and what investors need to know next. As we head to break, here's a look at the pre-market winners and losers in the S&P. Be right back. Kevin Warsh is going to hold his first press conference as Fed chairman this afternoon. Join us now, former Kansas City Fed President Esther George. I've asked a few people already, and welcome, President George, our former president. It's great to have you on. Do you think he comes in treading lightly, getting his bearings and introducing himself? I guess he knows everyone. Or does he come in guns blazing? Because he's got a lot he wants to do. How do you think he approaches this, the chairman?
Well, I think as many Fed chairmen do when they first step onto the platform of their first meeting, are going to try to be as confident and reassuring as they can be. And I suspect Kevin Warsh is going to do the same thing. He needs to establish credibility in the face of some unique circumstances. I think he's certainly stepping onto the stage at a time when inflation has been elevated. He's going to be doing that in the context of growing fiscal deficits. And of course, as everyone has commented on, looking at the political pressure that has been associated with the Fed over the last few years.
So could he come in immediately and start practicing what he's been preaching in his famous quote, "Stop talking so much, more thinking, less talking"? Do you think he'll be somewhat reticent to say too much about what he's thinking?
I do think he's going to be careful at this first meeting in what he says publicly here, because again, all eyes are on trying to understand, given what's been said ahead of him becoming Fed chair, how much of that is in play right now with the committee. I do think he has the experience to know, though, that he will not be trying to overstate things. He will not be exaggerating when he comes in. And so I think this meeting, while it has a lot of expectation, I think is going to be one that you should expect the messaging will be clear. It will be not overcast in terms of what's to come. And he's been very clear that that's sort of his mode of operation.
Right, but it seems like he would have to defer on a lot of questions, because he's not going to tell everyone everything he's thinking, because that's one of the things he doesn't think the Fed should have been doing and we did hear every waking thought ever since Bernanke. I don't know why, but and I said so. And the Fed speak in between meetings, it was good for us, because we'd have a different person, every couple of days talking about things. But we knew every waking thought the Fed had for years and years, and I think that's going to change.
Well, I think it is going to change, and it probably should change. If you think about the evolution of communication for the Federal Reserve, it's so important that this committee be clear to the markets, but also be clear to the general public. And I think history has shown this is a committee that will take up the issue under Kevin Warsh's leadership and really think hard about not the amount of communication, but what's the quality of that communication, and is it necessary, is it clear? So it won't be stop communicating, and I think it's a good time to say, what should the communication be that actually helps the FOMC transmit its monetary policy decisions?
Supposedly I wouldn't say there's no love lost between certain members that are still on the Fed, but there might be some hurt feelings or ruffled feathers with some of the members that are still there, and we've talked about whether it would be confrontational between Chairman Warsh and some of the people that are already there. Do you expect that to be an issue at all, or will it be welcoming? Will they test him? Will the markets test him?
Well, the market always provides a test of sorts, but my experience, Joe, around that table is this is a quite collegial and respectful group, and I see no reason that won't continue, even under new leadership.
Yeah, so not like the new guy in the cell block, probably, where they definitely. Well, you don't want. That's the last guy you want to be, is when they, when some of the new arrivals
took a turn towards the weird.
No, I know. I'm just, it's a you got to put your big boy pants on, right, Esther? At this point, because he's going to suffer the slings and arrows of the media, of President Trump. Second guess. I wouldn't want that. I know Kevin known him for years and years. That's a bus I wouldn't want to catch if I was chasing it as a dog. Would you?
Well, there's no question, Joe. This is a challenging time for the committee, and this is where I think the committee can do its best work, which is to focus on what are the real issues in front of it. And the real issues in front of it is a persistent, elevated inflationary environment, easing financial conditions. This is a time when the committee really has to be debating and deliberating on how they see the economy unfolding. And I suspect they are going to be doing that. That could mean there are differing views that have to be reconciled. They are always reconciled at the table here, and a consensus is formed. And so I suspect that's what's going to happen today, even as we all expect that there won't be any change in that rate. It doesn't mean there isn't going to be a fulsome discussion about it.
Esther, could one of the tools that Kevin Warsh uses be the balance sheet? Because the balance sheet has ballooned again. If you were to shrink that, that would be another way of kind of getting at the issue of inflation potentially, without having it have an impact on things like mortgage rates.
Yeah, I've heard that discussed, and clearly he's talked a lot about the balance sheet. I think that will be challenging given where the balance sheet is right now to continue further tightening. I hope what the question is to look ahead and say, how do we want to use this particular tool of monetary policy? Should it be used in different ways than it has in the past, so that any future episodes can be informed by thinking about the appropriate use of that balance sheet? So whether they can use it in the near term, I'm skeptical that can happen, but I think the conversation they have about how they want to use that balance sheet is really the important one.
Esther, thank you for joining us this morning. Up next, a wrap-up of this morning's headlines, including some new comments on Iran from President Trump. We'll be right back.
Breaking on Squawk Box this morning, President Trump speaking to reporters at the G7, he said the memorandum of understanding with Iran is not final. If he doesn't like the agreement or Iran doesn't cooperate, he'd go back to dropping bombs on their heads, I think was the exact quote, wasn't it? U.S. retail sales jumped in May. Purchases were up 0.9% versus estimates of 0.5%. And you just took out the next one because we got to get out at 9.
Yeah, we did.
The world will end.
Our time is up. Make sure you join us tomorrow. We'd love to see you then. Right now, though, it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm David Faber. He's Jim Cramer. We are here at Post 9 at the New York Stock Exchange. Carl has the morning off. Let's give you a look at futures as we get ready to start trading. 1/2 hour from now. I don't know. What does that say? You got anything for me there? What is that?
During the show, you gotta talk to me.
Well, just tell me what that looks like. And up, open, up, open. I'm going with up on the NASDAQ.
The NASDAQ's up and the New York Stock Exchange is down, okay?
There you go. See that? That's why I rely on you for insights like that. Let's take a look at oil. How about
You better be ready this time.
All right, oil also moving higher this morning. Of course, that typically has had more of a negative impact on the broader market. We'll see how that plays out a 1/2 hour from now. All right, our roadmap this morning does begin with what else? SpaceX and that stellar run. The stock on pace for what may be more gains, at least at the open. Plus, President Trump adding some confusion surrounding the fate of the Iran peace framework, saying the U.S. will, quote, go right back to dropping bombs if he doesn't like the deal. We're going to take you live to the G7. We'll certainly have the latest from there. And we're also going to get you ready for Fed Chairman Kevin Warsh. Expectations for his first rate decision since taking over that role. He is having a press conference also. Yeah, you know, I know he. Well, he might. He might. You know, not that much corporate news this morning, Jim. So I think a good place to start is SpaceX. Of course, we talked about it a lot. I know, but it is on track for another higher open. Would be, of course, its 4th trading day. As of yesterday, by the way, you're just pushing up the roof. What is that?
I'm trying to get called on.
Oh, you're trying to get called on? Hold on, I want to tell people. It's added about $880 billion since it went public. Remember, 1.75 trillion roughly was the initial market cap at 135. So it's added more than a JP Morgan or an AMD or a Visa. It's larger than the economies of Ireland, Belgium, Sweden.
Yeah, but what kind of revenues they have?
I know. And then Elon's wealth is now equivalent to the next 5 wealthiest individuals combined. So if you add up Larry Page, Jeff Bezos, Larry Ellison, you see them all there. Sergey, what do you get? You get a Musk. What about the move, though, Jim?
Trying to foment some sort of Bolshevik revolution? I mean, what is the point?
I'll leave that to you. I'll leave that to you, Comrade Lenin.
We're going to change things right now.
Really? What are we going to do?
We're never going to talk about SpaceX and where it's going to be a deal anymore because it never closes.
Okay.
I was watching the SpaceX between 2:47 and 4 o'clock, and this thing got pushed up maybe $2. They push it. It's going about a point an hour from say 11 until 6. A point an hour, and then it runs into resistance at 6 when real people come in. But I've never seen anything like it, Dave. This thing trades as if it's 9:30 at 2:30. I mean, it's just people are taking this thing at 2:30 in the morning.
That's weird.
No, but this is the first stock that I've seen where I know that people.
What accounts for that, Jim?
Fervor, enthusiasm, people who think they can walk a stock up so that when you come in, like they used to do with Palantir, you come in, you say to yourself, holy cow, this thing's at 208, I'm going to go buy it. It's obviously on the move. This is a phenomena that I have never seen. I've seen some stocks move up on 300 shares, 500 shares, but this is a point an hour.
Is it being thought of now as an AI company as opposed to a space company?
There's a meme company.
You think it's meme?
Yes,
been memeified.
Now this is a meme company that's ended up being the largest company on earth. So
well, it's close to it. Yesterday, for a period of time, it didn't end the session, but it was larger. It had a larger value than that of Microsoft. Of course. It's still larger than its market cap, still above that of Amazon, just to put it in some perspective.
And the revenues versus these companies is just extraordinary. How few revenues.
Yes, I mean it was. We talked a lot about the 18.4 billion and 25 revenues. That said, they have added those very important deals to sell compute to Anthropic and Alphabet. That could add another as much as 26 billion in annual revenue, at least for the next couple of years. So the revenue number is far larger. A lot of it may be based on that post from Musk over the weekend, where he said we could hit $1 trillion in revenue just 3.5 years from now by 2030. Now, on a 2030 revenue multiple, that's not that bad if you actually were to get there. That is multiples higher than even the bullish analysts are in terms of where they see revenue.
I wrote my Sunday piece for the club, and I said, well, look, I've got to tell you, it is inexpensive if he does the numbers.
Does the trillion. Yeah.
It's not expensive.
No. That said, it's all about right now. I mean, I've made this point many times, but it bears watching and mentioning again. You know, CapEx, right, was only 463 million in 23, went to 5.6 billion in 24, 12.7 billion in 25, 7.7 billion in the first quarter of 26. Much of that, of course, being spent on AI, on building things out. They did the Cursor deal yesterday. They announced it was expected in many ways. That's all stock. But again, they're trying to build an AI because that is by far the largest part of this overall TAM that they have outlined at some $28.5 trillion. Most of it made up of enterprise applications, AI enterprise applications.
But this should be the moment when Jensen Huang's thesis about when you buy it, the more you buy, the more you make. I looked at the numbers, obviously, that Anthropic and Google are paying. And he may have really hit the mother load here. I think that he's making a huge amount of money on these, on the GPUs that he has.
Wait, who's he?
Who else is it?
Musk.
Right.
Yeah. Okay. Just making sure.
He's worth more than everybody else. So why do we have to talk about it?
No, I know. He built that cluster, 1 million of them, and he's selling it.
Microsoft goes down every day just as like a.
So what is again? Kind of a dearth of overall corporate news. We're going to be focused on AI we have a lot of stuff on companies that aren't public. If you want to talk Anthropic or OpenAI, we can. Obviously, some reports about OpenAI's cash burn and how much they're going to burn next year, which gets back to the points I was making about the CapEx spending at SpaceX as well, Jim. But in terms of the stock itself, at what point are we going to start to sit here and talk about the enormous amount of shares that are going to become available for a very small float right now stock in middle of August? I'm looking at the second trading day after the first earnings release. So we're talking like the second week of August, 911 million shares. By the way, if the stock were to close, and right now it is well above that, 30% above the IPO price, so 175.50 for 5 of 10 consecutive trading days ending on the first earnings release date, you get another 455 million shares.
The deluge is...
That is...
There's a deluge.
Multiples of what they sold. That's twice as much as.
But you have first. You remember, you got to get through the Russell. This is this week, and then you got to get through the NASDAQ 100. Right. We don't know how much those are going to stop up, and we don't know how much they're going to hurt all the other stocks that are still above him, because these are share donors to him being in the NASDAQ. Well, to his company being in the NASDAQ 100.
Right.
Now, David, you poo-pooed the other day.
What did I poo-poo?
The idea that there's going to be a rather rapid takeover of Tesla. There are many people think it's going to happen
very quickly. You know, I don't know. Listen, I have had conversations about that possibility. I don't believe that anyone has been hired, so to speak, you know, in terms of really working on it. You would need bankers in some fashion. Obviously, these are Musk-led companies. That said, you'd imagine that Tesla would need a special committee to represent the non-Musk shareholders, so to speak.
They do 1.5 trillion.
I just don't imagine that happens that quickly. I know, but also if you're Tesla, at the very least, if you're arguing about a ratio, for example, of SpaceX shares, you want to have seen the thing trade for a while.
Exactly,
you want to get through the lockup, don't you?
That's so right, because what could happen is this may be a completely false price.
Yeah.
But the problem with the false price is that there are a lot of people who are picking it up right here. They could really get hurt.
Right.
I don't think it's going to get hurt.
There's a lot.
You get the NASDAQ 100, it's going to spike.
Jim, if you're asking me in the next 2 years, is it based on what I've heard at least?
That's what I
that
heard.
seems more likely than not that these two companies end up together? I'd probably say, yeah, that seems more likely right now. Things can change.
Look, I mean, one thing's for certain: if he moves, if Musk, I'm not going to say he anymore. If Musk moves fast, he can buy a huge number of companies that could be very good. Not unlike Cursor, which is a fantastic acquisition.
I know. What do you make of these reports? I think it's Semaphore, but others, that the U.S. government is having discussions about taking equity stakes in the major labs. And I mention that because, of course, you could make an argument that SpaceX should also be included in that. I mean, by the way, they do an enormous amount of work for the government in their core business, launching rockets with payloads full of satellites that the U.S. uses. So, I wonder, just overall, what your thoughts are on these, at least the reports of conversations around this idea that, the two, Anthropic and OpenAI being the two key ones, but...
Well, I mean, look, the amount of... The security that we're worried about with Anthropic would make me wish they did own something. But I'm antithetical to this because we have a capitalist system. I know that if it's pure defense like MP materials, rare materials that we have to worry about with China, I get that because they can't produce enough. That's different, though. That's an exigency.
Right.
This is just like, let's take a stake and be sure that things are going fine. And I'm not into that. I don't mind a passive stake, they've taken, but I don't like. That's an active stake.
Yeah, again, this is not our reporting. This is that of Semaphore saying two top cabinet members have discussed different ideas in terms of potential equity stakes, and it's unclear it will happen, but it is...
But do you realize how abnormal this is? A Republican administration.
It's bizarre,
let's
frankly,
take some stakes. It's against everything that we believed in about government and business. But you know what? I mean, this administration has put a new view on taking a stake.
As you know, they are deeply involved right now in the talks with Anthropic about the latest models that are no longer, that they pulled back at the request of the U.S. government. Commerce has been leading the discussions there in terms of what needs to be put in place and what safeguards need to be added, even though Anthropic added many safeguards, obviously, because the original mythos was so powerful in terms of being able to find errors in code that could be that could be taken advantage of by bad guys.
Look, the undercurrent is that Anthropic crossed Trump and takes it, and so their lives are now.
You saw the pictures from the G7. I mean, Sam Altman was sitting next to Trump. Dario was there as well.
I know. I was surprised that Dario was there.
Well, no, they're having a discussion around AI. That's part of the agenda.
This administration can be punitive at times, and willing to make it so that you feel like maybe I shouldn't be an Anthropic. Look at that, SpaceX just went up another. How many did it add? Right? 3 visas and 4.
Yeah, 3 visas. Eurasia. Eurasia, Caterpillar.
But this is what you were talking about. This will not happen when all this stock is released because it'll be too heavy, and there will be people there who just offer stock and offer stock and offer stock. So this meme period will come to an end.
And that's what you consider it right now.
It's a meme period. Yeah, because
and by the way, there's the video I was talking about.
Sick of
Sam
getting up
Altman
early and
sitting right
watching
next
it.
to the
It's
president.
exciting.
Dario Modet is not far away around that same table. Just gives you a sense here in terms of there he is.
Benioff doesn't have enough AI. That's the whole reason why the stock's down 11 straight days. He had to get him away if they didn't have enough AI. That's ridiculous. That's how people think.
Is CRM down 11 straight days?
11 straight days, yeah. That's how people think now. They got, he didn't have enough AI. Get him away from it. You have to have a percentage of AI to be at that table.
Yeah.
I'm meeting with SLB today, the old summer day.
Oh, yeah.
Yeah, they had $1 billion in ARR. First quarter. They have AI.
You got it. I mean, there it is. Oh, yeah, look at that. I'll let you pronounce his last name. I'm not going with that. How is it? Lepoux. All right.
He's great. I mean, I've got to tell you, those guys have decided. Look, there's a lot of.
But Jim, I mean, it's funny. What? I didn't bring my pad
Large
down.
language
How can I not bring my pad down?
I don't know.
I was having, conversations. It's not just about, all right, AI is taking up all the room, the air, so to speak, but it's when is the trade going to move away from it? And so when am I going to see some other groups start to outperform?
It's AI and it's hardware, and today is Piper put out a good piece.
Yeah.
Two trades are dominating the market. Earnings momentum, we've obviously got that. Artificial intelligence basket, but what I say is what's really dominating is okay, well, let's raise Have we raised land? Have we raised applied materials? What are you doing?
No, Casey went to get my pad. Thank you. Go ahead. Don't get distracted.
Land, KLA, applied materials, that'll be done Monday. And then Tuesday, we take up Micron, and we take up Western Digital, we take up Seagate, we take SanDisk. And then on Wednesday, you go back and you take up Micron. This just keeps happening.
Is Micron's next week, right? Earnings.
Well, yeah, the DRAM prices are still creeping up. I'm just saying that's what, like yesterday, did you see Lumentum? Okay, so Coherent gets a deal with Jensen, so Lumentum goes down 100 points. But now it's going to be with Lumentum. So then sell the Coherent, buy Lumentum. This idiocy is happening every single day. And we sit there and we watch it. We won't call it idiocy. It's idiocy. It's idiocy. It's...
Okay. It's idiocy. All right. I'm just wondering what part of it is idiocy.
Because these the research departments, they keep playing leapfrog on those six. Those are the stocks. Those are the stocks that matter other than your SpaceX.
All right. After the break, we're going to be live from the G7 summit. This is President Trump gets set to hold a press conference this morning. He has added some new wrinkles, it would seem, to at least what is the U.S.-Iran peace agreement. Let's give you a look at futures. We get started with trading here at the NYSE 15 minutes from now. And as you can see, back to a lot of the names we just discussed, the NASDAQ poised for a higher open. More Squawk from the Street straight ahead. Some new developments around the peace framework between the U.S. and Iran. Megan Casella, she's in Geneva and has the latest for us this morning, or at least this afternoon for you. Megan.
Yes, that's right. Good afternoon. Good morning, David. Day 3 of the G7 summit is now underway, and we are now getting more details on what exactly the U.S. and Iran appear to have already signed in this memorandum of understanding. A version of this 14-point MOU has now been published by Bloomberg, CNN, and some others. And some of the points here tell us a little bit about what's in it. One is an end to the war on all fronts, including in Lebanon. That's something of a sticking point with the Israelis so far not committing to removing their troops from Lebanon. It also agrees the lifting of the blockade as well as the reopening of the Strait of Hormuz. And the U.S. and their regional partners, it says in this document, will create a plan for rehabilitation and economic development of Iran, and that they will ensure financing of at least $300 billion. U.S. officials, though, have emphasized no government money will be included there. There's another line in this document, guys, that says the fate of enriched material and Iran's nuclear needs will be adequately addressed in a final agreement. That gets at what has been some of the steepest criticism so far of this MOU, is that it does not go any further than that in addressing Iran's nuclear program. All of those most difficult negotiations being pushed into this next 60-day period. And the final point is that it says the final deal will be negotiated within 60 days, but that's extendable by mutual consent. Now, guys, I'll emphasize the White House is pushing back on this document. It says that this does not reflect the language of the actual MOU, but officials are still committing to publish the actual MOU, possibly within the next few days. So we'll bring you more on that if we have it, once we have it, if it's any different than what we're seeing so far. But one of the biggest things the White House has been touting with this MOU all week is that it brings this end to the war, and right in the document it says it also should bring an end to even making threats against each other. But President Trump appeared to run against that this morning with some comments to reporters. Take a listen to those right now.
No, it's not final. It's a memorandum of understanding, and if I don't like it, we'll go back to shooting at them, dropping bombs on their head. If I don't like it, if they don't behave, we'll go right back to dropping bombs right smack in the middle of their head.
Emphasizing there that all of this could still change, guys, through the next negotiating window, and that possibly even inside of that window, the U.S. could return to dropping bombs if they don't like the way the talks are going. Clearly a long way left, guys, till we get a true resolution of this conflict. David?
And Megan, we are expecting to have a press conference not long from now as well, correct?
That's right. That's scheduled for 10:30 a.m. Eastern. I will emphasize events are running a little bit behind here in Geneva and across the lake in Evian where the leaders are, so it could slip past that. But that'll be a chance for the president to start addressing a lot of this criticism. We might hear him even in the next 15, 20 minutes or so. He's also scheduled to sit down with the leader of India, Narendra Modi, before too long. So we'll see him again on camera between now and the press conference. But he even acknowledged earlier today there's a lot to talk about with Iran and a lot of chances for reporters to finally start asking some questions since this was signed on Sunday.
Okay. Megan, thank you. Megan Gasella in Geneva, of course, covering the G7 for us. Coming up right here, the Fed's rate decision is going to be on deck. We're going to talk about what to expect from Chairman Kevin Warsh later today. And up next, Jim's going to give us a mad dash. Get ready, man. Counting you down to the opening bell. We've got about 8 minutes before we get started with trading here. NASDAQ adding to what may at least be some potential gains at the open. More Squawk on the Street straight ahead. It's Fed Day, but it's also all about the chips again, isn't it? ASML, you can see Applied Materials, there's Marvell, all the names that we've been following so closely these last few weeks. Moving up yet again, that is when we start trading a little less than 5 minutes from now. Opening bells next. All right, let's get to it. Jim's Mad Dash, minute and a half before we get started with trading.
It's a $1.8 trillion company. We don't talk about it enough. You know what it is. It's Broadcom. Really I have to tell you, sensational research today by J.P. Morgan, Harlan Sur, talking about how that last conference call, which caused the stock to go down 140 points, may have gone down on a false premise. Primary research, which to me means contacts that are real, that you don't have, say that Broadcom's deal with Google is very solid. It's been a long-term deal. It's been 10 years. The question had been, on the conference call, Hock Tan raised the idea that perhaps they're going to diversify away from Google and it could hurt their gross margins. Now, I know that was Hock Tan that said it, but analysts then really ran with it and said, you know what, it looks like this could be the beginning of the end of a beautiful partnership.
Yeah, well, you felt that way as well.
Oh, man, because the research was all, look, this is coming unglued. And I saw some insider buying by the chairman of Strickland, but what really matters to me is this is a refutation of all the sell side that said that. And I think it's going to move the stock very good. My Travel Trust owns it. I'm going to have to rewrite what I'm going to talk at my 12 o'clock meeting because of how depressed I was coming out of that
based on this J.P. Morgan note.
Well, I think he's got the right call, and I think the sell side was wrong. That's what I'm calling this actual good research.
Okay. Here's the opening bell. At the Nasdaq in Times Square, oil battery manufacturer. Yes, back. And at SIBO in Chicago, it's wealth manager UBS, the leading universal bank in Switzerland. It manages nearly $7 trillion of invested assets. Remember Credit Suisse? Remember that name?
Yes, I do.
Disappeared, of course,
I like
into UBS.
I like to look at the companies that ring the bell. Valmont, they do poles, towers, structures for lighting, communication. Well, David, people are arguing that this is a terrific AI play, and the stock has gone. It's up 38%. Now, I used to think it was a paint company, Cody's company.
I know, that's
But
what I thought.
Once again,
AI play.
Well, poles, infrastructure, these are all the things that you need for AI. And
poles?
Well, you go through what Jensen Huang said yesterday about how we're woefully behind when it comes to power. Well,
Yep.
we don't have infrastructure for power. And this is all the stuff of infrastructure. Now, Jensen is not the article that I was reading. It's AP.
Well, he did.
Makes him
Right.
sound like
Jensen
he's
Huang gave an
corporate.
interview to the AP. As I point out, he talks a lot, which is good. Well, we want to hear from him.
People talk a lot.
And in this one, he also talked about we need to create new social norms. I would advocate everybody use AI just to engage it. That was one of the quotes that came from it. But you're talking about what his concern overall, that we don't have enough power
Yeah, and I
for the
think
data
that's
center.
very true, and that comes back to something that I've been talking about with people who build, which is that the amount of weight that a Musk rocket can hold might mean you'd have to take 20 trips to create the smallest reactor that we have to recreate it in space. But if you have trips that can be done every day, then we're talking about 20 days, and you do indeed have. I mean, if you got to put it together, obviously, but let's say you made it like an erector set. It's perfectly possible that we could see, I say, in 6 months. Yes, 6 months. There could be a data center in the.
You mean they could build it in 6 months? Not that 6 months from now that's going to happen.
No,
You're
but
not saying that.
they could build it, and then they have to maybe do it in pieces because it's so heavy. Well, I don't know how else you do it. I mean, because it's just too heavy.
I really don't know the first thing about building a data center in space.
People
Jim,
continue
so
to tell me, stop laughing. Stop laughing. It's going to happen.
Oh no!
And it's cool.
It's not a function of if. I think the question is when. Now Bezos, obviously, who I was with last week, also is a believer that this will happen. Blue Origin, obviously, a very important asset for him. Altman, when I was with him, and of course it's Altman versus Musk.
Yeah.
He, is not as much of a believer. He thinks it could be a long time. So it does vary, Jim, in terms of when.
Yes, it does. But I'm just saying that when I was initially dismissive of it, the people who dismissed my dismissiveness are people who actually built. And just say, listen, look, you put your mind to it. Is it what you want to do? It's going to be very expensive. It won't be initially having a lot of power, but it could work.
It could. Now, I mean, the question, of course, back here on Earth is around power. It's right now the cost of a data center is still largely the chips.
Well,
you save a lot of money on power in space, but you still got to put the chips up there.
Well, but then you take a look at the amount of power that the Colossus, the Memphis Brain Trust of Musk had, and how. I mean, think about it. Google makes its own chips, but who did they need to go to in the end? They needed to go to NVIDIA, but nobody cares. NVIDIA has got, it's epoxied to a knife. There's epoxy, genuine epoxy. I checked it out. I went to the hardware store. I used Valmont. Now look at this thing. This thing can't move to save its life, even though they just did another bond deal, which they were opaque about what they were going to use.
Yeah, and it's just sort of.
Did you think it was opaque? Like
well, I just think it's, as I said yesterday, this is the world we live in, and that one of the most historic gushers of cash flow the markets have ever seen still feels like it needs to raise money in the bond market. It's not enough that now there may be, their balance sheet strategy.
Well, I remember Luca Maestri
and capital structure
came to the market for Apple, but I didn't think that Apple got better prices.
Right. I mean, but you're right. So Apple had debt too. But I don't know what they haven't told us what they're going to use it for.
Well, I mean, it's general purposes. Yeah. But that is, again, I mean, you're looking at companies that I thought the following was going to happen. I thought Google would do its offering And then I thought Amazon would do one, but Amazon did a Canadian bond deal.
They
that
did a
seemed to
Canadian
help.
bond deal. It wasn't that large,
No,
though.
but
I mean,
maybe
again,
Amazon doesn't.
Alphabet raised 85 billion. Then, of course, we had SpaceX come public and raise 85.7 billion. Because remember, it wasn't. They used the so-called green shoe, so they issued additional shares given the demand.
I do think
By the way, SpaceX shares up another 3%
There you
in the
go.
very early going year.
But now, is it going to pass Microsoft again? It's 2.8 for Microsoft. Now, Microsoft's down again. Now, Microsoft acts as if they do need money, and yet they were the ones that held off in the so-called profligate spending for NVIDIA chips. I don't know. The stock acts like it needs to do a deal, but that's just kind of...
A deal? What do you mean when you say a deal?
You do equity.
Sell equity?
But it doesn't need to. But I'm saying this, well, why is the stock so poorly acting?
Listen, again, I've said this many times. If Alphabet can sell equity, then you have to consider that anybody might
Well, that's my thing.
consider
This
selling
Alphabet's the
equity,
strongest.
which is...
Well, how about, do you think Meta needs to? I don't know. Meta.
The CapEx needs are enormous. These companies have gone from being incredibly
Greatest
positive on
balance sheets
free
in the
cash
world.
flow to now potentially negative free
Remember,
cash flow.
the Magnificent Seven started in March of 23 during the mini bank crisis because they had the greatest balance sheets in the world. So they became the de facto banks of America.
Nobody is pulling back for a minute on spending, but it continues to be, and there is a race, obviously. Everybody wants to be a part of it. You could never be the CEO who says, oh, no, I'm stepping aside here. But that said, nobody knows exactly what it even means to win.
No, it doesn't. You just want to stay in the game and you don't want to be left out.
Right.
Which is why OpenAI is still the one that I follow the most. Because OpenAI is burning the cash.
They are burning cash,
Is
yes.
Anthropic's going to front run them in an IPO, I believe.
You think Anthropic will come to market
Anthropic's
before
a deal that
OpenAI?
everybody wants. That's a business to business. That will be another gusher.
Right.
Anthropic will be amazing.
By the way, on Microsoft, you mentioned that stock, which is now down 20% year to date.
Like, how is that possible?
There's reports about token maxing, in other words, using so much compute apparently taking a toll, and that on Copilot, and they're looking at, this is other reporting, but it's out there, the possibility of using its own version of the Chinese open source DeepSeek model. Of course, open source DeepSeek, much cheaper
Yes.
than using Anthropic or OpenAI.
Microsoft is the great conundrum. I posited that there, in some people's minds, that Microsoft and OpenAI would get together. Now, neither would ever go with that. I'm just saying that there is something that needs.
Microsoft still owns 27% of
Well, that's
OpenAI.
why, OpenAI has things that Microsoft needs. They have a product called ChatGPT, which is still very good. But David, have you seen the latest statistics? ChatGPT.
I have, but tell our viewers.
Well, ChatGPT was, of course, everyone knew the acknowledged winner, and now, well, it's Claude by a mile. Claude's looking very secretariat-like.
Is it?
Yes,
in terms of taking over, in terms of market share
Yes.
or users? Yeah.
Now, I use this app at 100x, raw pace,
Okay, there it
which
is.
shows you details. Now, by the way, chat's not bad. And don't look at ChatGPT and say that's bad, but Claude has got among the highest intention to use of any piece of any data that they've ever looked at, any choice that this company's ever looked at. And that is an amazing statistic, how much people that Claude's pulling ahead.
To use.
Now, you know, if you go in early morning when Musk tweet, Leonard, he posts,
Yes.
he's talking about very exciting things now with Grok. And I do look at them, and there's some exciting things happening with Grok. But look at that. David, this Claude is a runaway freight train. You're not going to catch it.
Well, right now, Anthropic's latest models are not available. Well, the U.S. government has said no.
Well, the U.S. government, I know. Yeah,
and so that could be an issue.
So they throw the U.S. government 10% of the company. They will not do that, but that's what I think that Trump wants. I think Trump wants 10%. London wants 10%.
Yikes.
Now they watch the show, maybe they say, hey, let's just say we want 10%. I mean, over in Europe, they can't do that right
There is, look at the G7, that's Dario Modet sitting down with Macron from France, of course, because AI is on the agenda here as an important
Well, that's true. I hope that goes well. I hope that's
area. He has been the most outspoken in terms of having safeguards and the societal impact of AI.
He's determined.
Many have come back and said he's simply trying to create regulatory capture, worry people, make it so that Anthropic is the winner in some way because the most trusted.
The cynical people
but they
are
question
saying
him on that.
And I remember when he came out earlier this year and talked about how they were going to be the cybersecurity company, but left out the fact that insurance will not cover you if you use both Anthropic and their cybersecurity arm.
Right.
They won't cover you. So he said all this stuff, and it cut CrowdStrike in half. And there was George Kurtz came on my show 3 times. Said, listen, you really can't do this. You can't.
Yeah.
They're not going to be. And then it went away. Why? Because you couldn't do it. But did Dario come out and say, you know, I got to take that back? Would a bigger person do that?
Yes. Listen, to give him, I mean, he went from a guy nobody knew to now being one of the most important people
you have to change
in the
your
world, sitting
demeanor
with the
when
world
suddenly
leaders.
everything that you
It's
say
a lot
is
to ask.
quoted. Change your demeanor. Don't just say you're going to take over the world. This is not Pinky and the Brain.
I don't. What are you talking about exactly?
I am saying that Dario makes a lot of claims, and not all of them are backed up. But if they're refuted, that they just go away.
I've read all his pieces. They are interesting.
They're interesting, very interesting. Well, how about did Sam? Everything Sam say? Sam, I am Sam. Did he say what?
No, it's listen. We are dealing with the leaders here being Elon Musk, that man there, Sam Altman, Mark Zuckerberg. These are the leaders.
Yeah, but I'm saying that they all
this next frontier.
They may not know, just like the Fed governors, they may not realize the power their words have right now. Because when I listen to Dario, I think it is going to be Terminator. When I listen to him, and there's no way. I just think that they're going to, whoever they is going to own us.
Dario has warned about the impact on jobs, about the potential for a bioweapon, about many things. By the way, that were shared as concerns by Elon Musk and Sam Altman, hence originally OpenAI.
Right.
Let's not forget.
Yeah, but if I listen to Dario,
to some extent.
If I listen to Dario, honestly, if I listen to every word he said, I think they should just shut it down. And shut it down, meaning his company. And I don't think that's what he intends, and I don't think that's even what Trump intends. Although I think Hexeth at the moment might have said
OpenAI has models that are basically or equally as powerful.
I know, but I'm okay.
Shut that one down. You're not going to shut any of this down. It's a race. We're going to race with China. We're going as fast as we can.
You want to shut? Here's what Dario doesn't seem to understand. That this time, 2 years from now, there'll be 2 candidates. One who's a populist from the Republican, one who's populist from the Democrat, and they're going to say we got to shut this down because it's causing job loss. That's what's going to happen. That's why you have to measure your words, because populist candidates are the biggest enemy of AI.
Jim, I agree that it's going to be a huge issue in upcoming elections.
Well, why don't they seem to realize that they're fomenting candidates?
Well, I think they do, and I think a lot of the I've been hearing a lot more cohesive articulation, so to speak, about the benefits of AI from that world than I had been even a month ago, because they know they're in a war. Speaking of, let's just mention Warshier, because it is sort of his first meeting, his first press conference, and these are issues he's going to be dealing with as well. Certainly on the jobs front, which, again, it's unclear. We've been getting a lot more, I'd say, positive commentary around the impact of AI on jobs, perhaps not being as great as had been thought, but that said, it's still very early days.
Each person's going to have his agents or her agents and become a force multiplier. That's what we hear. We do see periodically companies that lay off people. The vast majority of them are considered to be companies that are doing poorly and are blaming AI. I know that Cloudflare was blamed for it, and I've got to tell you, I think that was completely untrue. Matthew Prince came on the show. The stock has come way back and then up because he demonstrated to me that the layoffs were meaningful and correct and made the company stronger. So I'm not necessarily putting anyone in Square was able to make a good case too.
All right, and
Warsh, what happens if Warsh finishes his statement and then says, I'm taking no questions? Wouldn't that be the greatest? Then we wouldn't have to play the Hollywood Squares games with all those people. Excuse me, when did you stop beating your wife? Excuse me.
It wouldn't really be a press conference, would it? Just be a statement.
Not everybody needs to have a press conference.
No, they don't. And maybe he will.
They didn't used to.
Maybe he'll say, you know what, we're only going to do this. Twice a year.
Best 5.
Yeah.
Put your questions out. We take best 5 questions. That'd be good.
By the way, just to change things up a bit here and talk about some other sectors, financials have had a bid the last couple of days.
Oh my, okay.
And I'm looking at JP Morgan, which had been negative on the year, and it's now approaching right at a $900 billion market value. The stock up now 4% for the year. Bank of America also showing some life. And then the Morgan Stanleys and Goldman Sachs of the world are having a great year.
Okay, so Morgan and Goldman, I think, are correctly issuance and M&A. The other guys do better, you could argue, in a higher rate environment. We know that that's happened, and if people do raise rates, they will pick up a lot of basis points. So their numbers are going to go up dramatically. And some are related to credit. For instance, Capital One has moved up huge, COF. But that's related to the delinquencies not being that bad, and that one was related to whether gasoline kept going higher. If it did, it would break COF, and now that's one really on the way. So I agree with you. I'm glad you pointed it out, because the move in JP Morgan yesterday was positively micron.
It really was.
It's
But is there, I mean, it was. There's no particular news behind it.
Just,
the Treasury
just
complex
the rates may go up.
Yeah,
No.
it's okay. It's just
No, but I mean, it was one of those moves where it's like, do people realize it is a good bank? But they've been doing so poorly versus some of the other banks. But I'm glad you brought it up, because the move in Goldman Sachs is a move from 13 PE to 19 PE on the way to a 23 PE. I think that's possible. Remember, there's
Do
not
you
a lot.
really?
Yes, I do, because I
That's a
think the
little
amount
high
of
for
M&A,
financial.
the amount of over the course of the next 2 years, the amount of M&A, David, the issuance and M&A are so huge right now.
no. You don't need to tell me. The capital raising is enormous. Of course, it all goes back to what we spend most of our time talking about, which is AI.
But the capital raise is just everywhere.
They're everywhere, and then
companies
there's
that
no
don't need
end
money.
in sight.
No, because the appetite.
Yes.
Where is this appetite for all?
I mean, we
Where's
have a
the
shortage of power, but we don't seem to have a shortage of capital as of
You
yet.
know, in the SIBO bell ring, UBS, seven
Yes.
trillion.
Yes.
You think that 7 trillion is in wooden nickels?
No,
I mean,
of course
they're
not.
buying this
By the way,
stuff.
people would point. There's still a large amount of money in money markets.
Right,
There
and
is
King
a-
Dollar, as my old friend Larry Coggo used to say, it's King Dollar, dollar's back. So there's just a huge amount of money coming our way, and these companies are not stupid. They're taking them up on
On
it.
financials, Jim, Charlie Scharf is somebody we both are fond of. The stock is the outlier here at Wells.
Oh, Jesus.
And do you still own it in the charitable trust?
Okay, so I have a meeting today.
Yeah.
And I like self-flagellation. It's a very common
I
trait
really
of
enjoy
mine.
watching you
And in it, I
self-flagellate
say
as well.
that I may have to get rid of this, because I certainly am not going to be in the underperforming.
Really?
Yeah, I say it. I say it. And
But-
it's very
but
painful.
Why? There's not a turn in sight here? You're not going to regret this?
Well, it has just underperformed the others. Now, they came in to me immediately and said, look, we're doing issuances. And don't forget, they were involved in the Netflix deal. But, they were up there raising their hand.
Yes.
But what I see here, David, is a situation where there are better banks. And I have to accept that.
That's
The 12
rough,
times
man.
earnings, 12 times earnings. It's just not delivering the numbers. But I do think the world of Charlie, but it's not happening. The last 2 quarters were bad, David. They were weaker versus everybody else. And it's Ted Pitt that is doing an amazing job at Morgan Stanley. A very loved Ted Pitt.
He's a love Ted Pick? I don't know him. He hasn't shown me any love, so I don't know the guy. Big Rangers fan, apparently. Maybe their time will come soon enough.
Said they have the parade tomorrow, don't they?
Yes, that's the Knicks. Yes.
Oh, shoot. I'm
Yes,
sorry.
they're the world champions, by the way. I don't know if you
sure.
heard.
Yeah.
New York Knickerbockers. Yes, Knicks. Say again?
Messier, good season. Messier.
Messier, yes.
Yeah,
He had, yes, in '94 he had a great season.
Yeah, I thought
It's
he
a
was
long
still
time
playing.
ago.
Okay.
Mets 86, Jets 69, Rangers 94, but the Knicks 2026.
Brunson's got a place in Margate. He's a Jersey guy, I like that.
We love Brunson.
7-0 place.
One of
Not
the
bad.
great New York sports heroes. All right, before we head to break, let's give you a look at the bond market. We were just talking about, of course, that complex in part, maybe behind some of the strength we've seen in the financials. Let's check out how treasuries are faring right now. There they are. Yields on the 30 at 4.93. You got the 10 at 4.4, and the 2 at 4.064. We're right back. There it is, still up, though teetering there on the verge of actually showing a negative print.
Joe,
What?
don't say we're gonna have to interrupt the president. Mention it to him.
Look at that. There's SpaceX, of course. By the way, I'm also a New York Football Giants fan. 2012. I'm not a Yankees fan.
They were a great team.
2009.
That was a great team.
So, but all due respect to those two fan bases, much better than
I used to
my chosen
I used
group
to
of
show
teams.
Carl Banks.
Oh, great guy.
No, fantastic.
Yeah.
Every Friday I would do it with him. It was like the most exciting thing I've ever done in my career.
More championships. That's all we want here. But we got one. Up next, we got Stock Trading with Jim.
Once it froze.
All-time high close that you saw about a month ago. But when you look at some of these names, kind of name by name, look at a name like Microsoft. It traded at $555 a share back in July of last year. That's a significant premium to where it's trading now. Look at a name like Meta, traded almost $800 a share in August of last year. Significant premium to where it is now. But even the names that you kind of feel like are still doing well and still leading this market, a name like Nvidia, it's $25 plus off its highs. A name like Alphabet, which has certainly not seemed to be struggling by any stretch, it traded almost $410 a share just a few weeks ago, back in sort of the middle parts of May. It's pulled back all the way to its 50-day moving average, and it's trading there now at 366. Amazon significantly off its highs. A name like SpaceX, I think, passed both Microsoft and Amazon in terms of market cap. So you start looking at these names that have been the market's generals for the better part of a decade. Yes, there's been new leadership, but is this new leadership that's very concentrated in AI and semiconductor-driven names going to be able to replace the weight of these mega cap tech firms that span across seemingly every industry? I don't know that they can. So the question comes then, are they signaling something with their weakness, or is it opportunity in their weakness?
And that is the question I think many are asking themselves right now when you look at these names considerably off of those highs, as you mentioned. But Sterling, with, of course, gold bouncing from oversold levels and the Fed presser this afternoon, what are you watching more closely? The technical setup, say, in some of these commodities, or, of course, what we hear from Warsh himself later today?
I think what we hear from Warsh himself today is going to be very interesting. We don't have a benchmark to compare it from. And if we remember back to Jay Powell's days, we were always looking at it and we were measuring every word and how many words were said and everything like that. We have no benchmark for this. And I think how he frames this is going to be very important. The new Fed chair is not a fan of quantitative easing. And if he leads heavily with talking about tightening up the Fed balance sheet, reducing the Fed balance sheet, that could be a little bit of a jolt to the rate market. And I think that could create a little bit of volatility across the stock market. I do agree with these ideas that maybe we're getting a little over-stratified in some of those big tech names that have run up. But by the same token, a couple of the financials that I follow pretty closely are outperforming and doing very well for the first time in a while. So maybe that's a canary in the coal mine that we're going to see a broader market improvement here.
Okay, and continuing to see some of that evidence of rotation, as you mentioned, into some of these names that have underperformed that are coming back here. So really appreciate both your thoughts today, Alex Coffey as well as Sterling Smith. Thank you both so much. And that will do it for us for opening bell this morning. Morning Trade Live with Sam Vadas is coming up next.
That triple bottom here on SPY right now. If I was to take the trade,
Schwab, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you.
Cash
with
management
unlimited
solutions.
ATM fee rebates for cash withdrawals worldwide, no
Triple bottom.
overdraft fees, and enhanced
3 black
security
crows.
features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Schwab coaching is concepts brought to life in the real world.
Schwab coaching is learning constantly.
It's relatable, it's practical, clear, understandable, and hopefully entertaining. Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry, around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to engage with you in chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
Going 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Wednesday. Happy Fed Day, if that's what you celebrate. Welcome to Morning Trade Live. I'm Sam Vadas, live from the floor of the New York Stock Exchange. We've got plenty to hit on both here and abroad over the next hour. So here's a look at what is coming up. We will discuss the latest economic data and preview today's FOMC rate decision, while also checking in on the latest Asprey 6 model metrics. And over the next hour, we'll have example trades for Intel and KKR. Intel making some news with its chip production this morning, and we'll also examine KKR and the latest state of private credit and alternative asset management more broadly. But for now, let's take a look at where markets are trading half an hour into this session as we brace for Kevin Warsh's first press conference as the chair of the Federal Reserve. We've got the S&P 500 looking for some direction today. We're just flat on the line right now to the downside, but we are holding on to that 7,500 level right now. The NASDAQ 100 is making up for some of that lost ground yesterday, as it was very much a tech-led sell-off down in the session yesterday, as I mentioned, but we are up at 0.3% right now. The Dow Jones, another record there. We are, of course, continuing to build on the 52,000 level here, up 0.3%, 175 odd points, and the Russell 2000 up 0.7% right now, as we do have yields that have been backing off, although, of course, the markets are still pricing in an 82% chance of a hike in 2026. But let's see what kind of commentary we get from Kevin Walsh later this afternoon. Let's take a look at how foreign markets are trading, because no doubt global investors keeping an eye on the central bank here. We've got the FTSE 100 and the DAX just down fractionally in Europe right now. Interesting, because we actually had the Euro Stocks 50 at a record today. It was a very nice session out in Asia, acting well given the technique weakness we saw in the US yesterday. We actually had a record for the Nikkei 225 and also the Kospi, thanks to some of those tech firms, but the Hang Seng Index down 2% in trading. So obviously this is the positioning. Things looking pretty range bound in Europe ahead of this Federal Reserve decision later today. Let's take a look at some of these futures products, because actually we've got oil ticking higher. So it looks like WTI has stabilized off the back of that fall yesterday. It comes as we've now got some details of this MOU, with a 14-point plan as being reported by some agencies and media outlets, but Trump suggesting this morning it's not final and will drop bombs if he doesn't like the deal. So keeping an eye on that. We've got crude oil
back to dropping bombs again.
Keeping an eye on the 10 years, we are yielding at 443, so we have come off, but of course a lot going into why these remain sticky and elevated right now. The US dollar index is really holding steady there at that 99.40 level right now. Gold
Back to
is
dropping bombs.
It's actually just on the line to the upside, 43.57, but it's made up for lost ground, as it did hit a 6-month low in recent sessions, and Bitcoin is actually lower today, 65,000 and change, despite a little bit of a pickup we're seeing here in some of these technology stocks. So not largely moving in tandem with those. All right. That's a quick snapshot of how things are moving around half an hour into this session ahead of what is going to be a pretty busy afternoon here with Kevin Walsh's first FOMC meeting, of course. So let's get out to George Sellers, who joins me now.
We'll be
George, very good morning to you. Just walk us through a quick sort of market thought here. Looks like things are stabilizing, but very much directionless as we await what Mr. Walsh has to say this afternoon.
Yeah, kind of an odd market so far. I mean, we just opened 30 or so minutes ago, so we'll see how things play out. Typically speaking, Sam, when we have a Fed day, there's an early move and there's some settlement until the announcement, and of course the Q&A afterwards. I think if you look at the Dow, interesting enough, lifetime highs yesterday. I looked at some of the components. J.P. Morgan hitting some new highs, as of yesterday. And Caterpillar, too, after there was a bit of a pullback with our slight correction that we saw early June, late May. That stock is also ramping to the upside today. I did notice
He's always been coughing before I go do my job.
That's trading to the downside, so that might actually be providing some lift to the other categories in the overall market, considering the market cap of SpaceX hit the $3 trillion mark, which is quite remarkable to say the least. So that is actually, with that component down, that is actually providing some lift and liquidity for other areas of the market. I did notice the VIX is slightly higher right now. The S&P, again, just right around the benchmark flat line. The Dow, again, is also higher by 0.4% to the upside. And 2-year yields, I looked at that rate, and it's important because that's a proxy for Fed targeting 4.06%, which places us about 50 basis points above the 3.63 level on the federal funds rate. So I think the guidance today in terms of outlook on the economy from the Fed, also perhaps some tone in terms of either hawkishness or dovishness will pivot perhaps the markets to the upside from that point on, or potentially a pullback, because markets typically top on really good news. I mean, if you look at what's going on as of late, the SpaceX IPO was very good. The aspects of the war also very good. And if the commentary from the Fed is also quite dovish, that would be a good sign. And again, like I said, markets typically top on good news.
Yeah, I mean, there's a lot of questions going into this afternoon. I mean, obviously, we want to know who the real Kevin Walsh is come that press conference, given that, you know, people who remember him from his previous tenure at the Fed, he was hawkish when it came to inflation, but seemingly more dovish as he went through that process with President Trump as far as the interview is concerned. But is this the end of forward guidance? So many questions. Does he say anything about shrinking the balance sheet? He's been quite vocal on that. I mean, does he bend to political pressure? I mean, we have to wait and see, but some of my guests have been pointing out that, hey, look, if you're the new kid on the block, you don't want to really be rocking the boat too much, but a lot of expectations that maybe he'll even drop his dot today. So obviously, as you say, we tend to sort of hang on to every word that these Fed chairs say, whether he sets a very different tone, whether he gets up there and basically says no comment will be very interesting. It might be more about what he doesn't say than what he does say this afternoon. But anyway, George, you and I are going to be obviously breaking down what he says this afternoon following that press conference together. So I just want to get back to the markets and pick up on that point you made about the Dow. I mean, I was listening to Mike Wilson over at Morgan Stanley today, who've obviously got an 8,000 year-end target on the S&P, and he sounded pretty encouraged by the degree of rotation that we've seen into other parts of the markets. I mean, financials, as you mentioned, doing exceptionally well. I've actually just seen, as far as levels here, it's moved up to the top spot in terms of overbought levels. It's 3 standard deviations above its 50 DMA here. Industrials, as you say, Caterpillar performing very well too. What have you made of all of that? I mean, as far as that broadening out we've seen.
Well, I think the broadening out is healthy. I think the financials, you know, if you just look at JP Morgan as the large benchmark or proxy of commercial banks, right now, if you just look at the ratios between 2-year yields, inflation, and where the federal funds rate is, which you could also make the case is, approximate the deposit rate, the yield on lending right now is very good for the banks. It's not great for consumers, that's for sure, whether it's credit cards, autos, or even mortgages, but it's great for the banks. So, you know, if Kevin Walsh comes out and maintains, a hawkish stance on inflation, the banks will probably participate to the upside. I can't say what will happen with the rest of the market. I think the end-of-year targets make sense. But again, there's a lot of positive catalyst as of late, and I'm looking for a short-term catalyst post-Fed. I don't necessarily see one, so that could create some, apprehension and continuation, at least in the short term, perhaps moving into July. So again, if they are a little bit more dovish on the rates, that'll be a boost in the short term for sure for the markets. That actually might be a little bit of a detriment to the financials. So that's something you have to keep in mind. But we'll have to see what the commentary is. But I did notice, outside of the rates, which are high for mortgages, if you just look at some of the data, the pending home sales actually hit a number of 3.8% in May, besting the estimates, which is only 0.8%, and last month, 0.3%. So that number came in. Housing activity is improving. I can see it, just boots on the ground view, and again. That number came in quite a bit above estimates.
Maybe that gives Kevin Walsh a little bit of relief, a little bit of headroom to really focus on inflation and not so much, restricted or bound by, the restraints and constraints, I should say, we're seeing in the housing market right now. As you say, we are picking up and seeing some
interest rates have been too high.
But retail sales, obviously, is going to be taking into consideration. Just a quick thought on that, George?
Yeah, actually really good. If you look at the retail sales month number for May, 0.9 versus 0.5%. The core number as well, 0.8 versus 6. Both these numbers were above last month's print. And of course, year over year, 6.8% versus 4.79 for last month. So it appears, there's activity in housing, retail, and it may be based on pent-up demand because of what went on from the aspects of the war, which might have created a couple of months of lag in purchases from a consumer standpoint, and now people are feeling a little bit more confident as gasoline prices have been coming down, especially in the past few weeks or so.
Yeah. Great stuff, George. Really appreciate it. Thanks so much for the breakdown. Obviously, we'll be talking to you later during this press conference. Coming up, we will take a look at the big picture and the latest information from the Asprey 6 model. Morning Trade Line is back after this.
New York Stock Exchange, live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
You can bet on this and win. You can bet on this and lose. This and lose. This and win. This and lose. This and lose. This, lose, lose, win. Lose and lose, win. Even this, lose. Betting isn't investing. Investing is owning. It often rewards patience and discipline over shots in the dark. The long run belongs to those who invest in it. Own your future. Don't bet on it.
We got triple bottom here on
No politics, no spin.
SPY.
Just the market from open to close and beyond.
Now got it coming up to a triple top.
Any screen, anywhere at schwabnetwork.com.
We're back on Morning Trade Live. Micron is once again higher after Citi upped its price target to $1,200 from $840. The firm also increased the chipmaker's stock multiple, citing the company's elevated gross margins. Micron also had its price target raised to $1,500 at Deutsche Bank. We're up 1.3% right now, trading at 10.33 and change. Let's take a look at some of the winners on the board today, because tech is back in the spotlight here. We've got JBL, up 5.5% off the back of its earnings. Applied Materials up 8.6. Lam is up 6. Teradyne up 5. As we have got, as I mentioned, a lot of the tech stocks back in rally mode today off the back of the pullback yesterday. Carvana down 6.3. JB Hunt down 3. Old Dominion Freight down 3%, and AT&T trailing by 2.6 right now. So just some sort of single-digit gains and losses here as we're looking a little bit mixed as we approach the FOMC decision and meeting wrapping up later today. Joining us now is John Kosar, Chief Market Strategist over at Asprey Research, the portfolio manager there as well. John, always nice to have you on the program. Just walk us through what you're seeing as far as the internals.
Sure. Let's start with the Asprey 6. The Asprey 6 is 5 of 6 of them are green. What does that mean? That means that the internals are mostly conducive, let's say, to the market going higher. The A6 initially went to 4 or more green, which is a positive reading for the metric on April the 6th. We had a little stutter step last week. It turned red for just 2 days, and then it turned back to positive at the end of last week. And I think a lot of that had to do with, it was a noisy week last week. We had a day where we were set to go back to Iran and start the bombing again. That was pulled off the table. The market was sitting on its 50-day moving average. The S&P 500 was. And we've rallied off those lows almost 5%, like 4.7%. So a lot of activity last week, but the bottom line is for most of the time since the beginning of April, the A6 has been 4 or more green, which means the market's internally healthy on a short-term tactical basis.
Okay. The US president, just in the last 15 minutes, characterized it as the numbers being through the roof because of the settlement, obviously, that we came into the fresh trading week with. Are your numbers suggesting the stock market is through the roof right now?
We watch the data and not the noise, I should say news, that is coming out of the White House. I'm really data-driven here. We're not necessarily interested in what opinion might be or what spin might be, but everything shows up in the data. So we're looking at stuff like the VIX, we're looking at volume. You can see in the Asbury 6 here that we're talking about. We're looking at market breadth, and that really tells us what the market thinks, and that's the most important thing. It's very easy to get thrown offside by all of the rhetoric that seems to be coming at you every day. We feel really comfortable following the data, and it served us well.
Yeah, what is it telling you right now? I mean, you know, certainly as far as the sectors as well, because while you did say we got a bit wobbly last week with a lot of the noise, there did seem to be a degree of healthy rotation in this market.
Absolutely there is. Right now, if you look at the CEF model, this is our sector rotation model, you can see the top 3 are healthcare, XLV, real estate, which is XLRE, and materials, which is XLB. That's where the money is going. If you look at the bottom of the graphic, you can see the money is coming from energy and the communication services space. So the rotation has been generally pretty jumpy this year. We were in energy early in the year, and we did quite well there. Why? Because that's where the money was going. We caught most of the move in XLK, which is the technology sector. But as it stands right now, we're looking at healthcare, real estate, and materials. And if you look at the rotation, it suggests investors expect a moderating growth, lower inflation type of an environment rather than either a recession or a strong economic acceleration. So that's where we stand right now for sectors. The other interesting thing that I think is worth watching is even though the market had held the test of the 50-day moving average last week, I think everybody was happy to see that. The NASDAQ composite, which is the larger of the 2 NASDAQ, over 3,000 technology stocks, that's underperforming the S&P 500. You got the Dow is outperforming the S&P 500, and the OEX, which is S&P 100, is underperforming the 500. Those 3, if you just showed me those 3 and didn't show me a S&P 500 chart, I would tell you the market's getting a little soft. So I don't think we're out of the woods here yet.
Okay, and obviously a lot of event risk on the horizon with, of course, the FOMC decision and press conference later on today. What are you watching in terms of volatility this week?
I'm watching the VIX really closely because the VIX is sitting right on top. I actually have a chart here that I sent this morning. 1746 is the 21-day moving average in the VIX. We like the 21-day because it gives us a monthly perspective on what the VIX is doing. It spiked up above there from June 5th to 12th. That's when the market dropped into the 50-day moving average, the S&P 500, I should say. Now it's drifted back under there for the past 2 days. The market kind of had a sigh of relief, and we bounced off the 50-day moving average. If the VIX gets above 1750 this week and stays there, that's going to be, it's not going to be fire yet, but it's going to be a little smoke that the market's getting a little spooky, and we could have another pullback to the
Think so, huh?
All right, we'll be watching. Always appreciate your insights and your data, John. Thanks so much for your time this morning. John Kosar, Chief Market Strategist, Portfolio Manager over at Asprey Research. Coming up, we'll get a closer look at the big picture with the team from Charles Schwab and preview Kevin Walsh's press conference later this afternoon. Morning Trade Live. I'll be right back.
On the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so sometimes, you know.
Next.
Try it again. You could have done better.
Doing pretty good.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
We're back on Morning Trade Live. Bernstein has raised its price target on AMD to $600 from $525 and maintained an outperform rating on shares. The firm believes the company should benefit from stronger server demand, and its existing AMD model was already consistent with the stronger server CPU environment. AMD hit an all-time high on Monday and is up over 135% this year, so quite a run for AMD, up 2.2% right now as we're seeing chips back in rally mode off the back of the pullback we saw yesterday. Welcome back to Morning Trade Live. It's time now for the big picture, so let's welcome in the team from Charles Schwab. We've got Nate Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research. Nate, very good morning to you. Thank you so much for your time. What are you expecting this afternoon?
Yeah, good morning, Sam. You know, I wouldn't think that there would be, you know, you don't want to start your first meeting off, you know, with a big boom would be my guess. And, you know, it's funny how this MOU, you know, the timing of it kind of just preceded this first Warsh FOMC meeting. So, you know, my guess is that, you know, there will be a balanced kind of acknowledgement of inflation. It's nice to see oil prices down at the lowest levels, since, you know, February, March, you know, here at 75, 76. That certainly makes it easier for the Fed. But I don't think the expectation is that we're going to see much of a hawkish surprise from Warsh. But, you know, anything can happen. Maybe he does want to make a statement in terms of being or declaring kind of the independence of the Fed and the acknowledgement of the dual mandate. We don't really know just how aggressive he wants to be there, but given it's his first meeting, I would just expect that it's going to be fairly balanced.
Yeah, that certainly seems to be some expectations. I mean, you know, the fact that being the new kid on the block, he probably doesn't want to be too controversial straight out of the gate here. But Coop, now that you've joined the conversation, Director of Fixed Income Research and Strategy, what are you thinking about what's going to happen this afternoon? I mean, you know, as far as what we hear from Mr. Warsh and then the subsequent market
There goes the breakout.
Yeah, thanks for having me, Sam. Really, in terms of the outlook for interest rates, we're not expecting any sort of a move today. I think that's largely baked into market expectations, so not really going out on a limb. Our view for the Fed funds rate over the rest of the year is it's likely to stay unchanged, so we don't expect any movement there. But looking at the short term at the meeting today, I do expect that he'll probably make some sort of mention, or I would not be surprised if he makes some sort of mention about the communication strategy for the Fed. We know that Warsh has been kind of critical about how much the Fed in the past has spoken. So I would not be surprised if we hear mention of the SEP or the dots plot, potentially removing every press conference after every meeting. So I think those might be some areas of interpretation or some areas to watch today. One of the other things is watching at the dots plot. I think it'll also be notable to see, does Warsh actually put a dot down in the dots plot?
Oh.
He has said in the past that he thinks that the Fed has communicated too much, and that really ties their hands in terms of policy and doesn't allow for as much discussion as maybe he would ultimately like. So those are some areas that we'll be watching, because I do think that that could really shift the narrative for the Fed going forward.
Because the markets have been so conditioned to see the Fed communicate in a certain way. I've just been looking at so many charts historically of what has happened on first Fed day for Bernanke, Yellen and Powell. All 3 times the S&P higher heading into the 2 p.m. rate decision, only to finish red on the day. Let's see if Warsh can get the first green close. That's what people have been pointing out. That's thanks to Bespoke Invest this morning. But I'm just wondering, you know, Nate, what have you noticed about this rotation that we've seen under the surface here? Because I've been looking at some of the levels on, you know, the financials. I mentioned that to George earlier today, and the industrials. It looks like the financial sector has actually moved to the top spot in terms of overbought levels, and the industrials also the next most overbought. How are you thinking about that?
Yeah, that industrial's all-time high, right? Yesterday, a close. Russell 2000 all-time high, S&P equal A all-time high, Dow Jones all-time high. So that speaks to the broadening trade. But, you know, underneath the surface, and so, Sam, a lot of that, I think, even if you look at the Russell, for example, it used to be in the past that it would mimic the KRE, the regional banks, and it would be very interest rate sensitive. If you look at the composition of the Russell now, you've got industrials, you've got technology that are powering the Russell higher. There's been at least some discrepancy between that correlation between the KRE and the Russell. But this still speaks to the AI infrastructure build-out, power, all the electrical equipment. Look at Jabil this morning. They reported, you know, all-time high, gapped up, beat and raise. It's another read-through on AI demand infrastructure. It's still there, meaning that theme is still powering the likes of industrials, financials to some extent. Yes, I know interest rates are playing into that. But then technology, you know, Sam, if you look at single stock volatility versus the VIX, I mean, it's hit a record high earlier this month. In terms of the discrepancy, the disparity between the two. Underneath the surface, I mean, you're looking at the stocks, you're getting 6,
Netflix
8,
7777
daily, that are occurring there. So this AI infrastructure trade, it's still intact, but it's certainly seeing, you know, a lot of this, you know, under the surface volatility. SpaceX might have something to do with that. SpaceX had just, you know, it was the most highly traded volume stock yesterday. There was the 3rd most active option traded stock there. There's a lot of speculation that's still in the market. The 380 strike on SpaceX that expires tomorrow had 32,000 contracts traded yesterday. So underneath the surface, within technology, within these high beta areas of the market, which is still chips, infrastructure, tech, you know, that's a whole nother playground, but it is encouraging to see a lot of these more cyclicals advance to fresh highs as well.
Absolutely. And Coop, just getting back to you, I mean, how much does it matter what Warsh says this afternoon for yields right now, given there are so many factors that are driving what is keeping them elevated at this point?
Yeah, that's a very good point, because we do think that obviously the Fed does matter, but if we look at the direction of longer term interest rates, Sam, we do think there's probably a floor on how much lower that they can go, likely because of where we are with inflation. We're still seeing sticky inflation above the Fed's target for many years right now. We're also seeing concerns geopolitically. Maybe the Iranian deal does stick, maybe it doesn't stick. I think there's still a question mark in the market as far as how that plays out. And that impacts the short-term look for inflation. So I think that that's an important piece of it. Also, we're seeing a lot of uncertainty, a lot of instability in the market. So that leads to a little bit higher of a term premium. That's another potential reason why yields might not move too much lower. and then a Fed that's likely on hold because we are seeing a stronger than expected labor market or some stabilization there, and also we're seeing a little bit of higher inflation. So even if you just look at today's retail sales number, they came in higher across the board. So it does show the consumer is in relatively good shape, which should feed into GDP. So even though we are seeing higher gas prices right now, Sam, that's not really a pinch to the consumer. So I do think that that is supportive of higher longer term yields, or at least a floor in terms of how much lower they potentially can go.
Great stuff, guys. I really appreciate it. Thanks so much, gentlemen, for joining me today and giving us a bit of a preview of how the markets are likely to react to the FOMC. Later on today, Nate Peterson, Director of Derivatives Analysis, and Cooper Howard, Director of Fixed Income Research and Strategy over at Charles Schwab. Coming up, it's time for the Morning Trader. We'll get a closer look at Intel and some chip production news. Morning Trade Live will be right back.
Markets. Download the Schwab Network app and stream live coverage wherever you are.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
While others recap the news, I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall, and connect with me on LinkedIn for more.
Right shoulder coming up.
You could have done better.
Could have, but you didn't.
Same goes for where you invest. Level up and invest smarter with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
We're back on Morning Trade Live. Let's focus on the chart for Intel. It's been quite impressive. Obviously, the chips came off yesterday. We're back in rally mode once again today. We've got some news out of Intel specifically, but we are trading almost 3%
Back in rally mode already.
So let's focus on this for the morning trade, get a closer look at what is going on here with Marley Caden. So we've got some chip production developments here, Marley. Just walk us through the details.
Yeah, an exciting morning for Intel here after they made their announcement at a conference in Hawaii. They are moving about 3% higher on this news that they've begun production of their most advanced chip node. So it was first announced last year, the concept of this chip node, but not the production. That was just announced yesterday. It's called the 18A-P. It's now known in what's called risk production. It's an early production stage with data that's indicating it will meet customer requirements upon final qualification. So it's sort of the final step before full-scale production. The 18A-P node is an upgraded performance-focused version of the 18A. That is what's currently in its Core Series 3 processors for laptops right now, Intel's primary chip, and that's designed for improved efficiency and output. Now, after this initial manufacturing phase, the 18A-P will go into high-volume manufacturing. The head of Foundry at Intel called the development a, quote, signal to Intel Foundry customers and partners that we are fully committed to leading-edge process innovation over the long term. And for Intel, this 18A-P is another milestone in their ongoing turnaround efforts and efforts to rebuild its foundry business. That foundry had continuing to say, quote, this is a journey, and while we have more work ahead ahead. We appreciate the opportunity to share the progress we are making. Now, they had years of missteps and low yields at Intel. Then they
One
tapped
more
the
red one.
18A as a key part of their turnaround that would finally convert the company into a competitive chip manufacturer for non-Intel products. Now, if this 18AP does go into full-scale production, a lot of the commentary I'm seeing is that it will bring them one step closer to a possible deal to potentially develop chips for Apple, that this would be a product that Apple would be interested in. They're also working to build their customer base as a part of its turnaround for its foundry business into a competitor to TSMC. That was the goal here. Now, earlier this month, there was several reports, I think the information was the original source, that Google and NVIDIA are turning to Intel to produce chips for them. Google has reportedly already put those orders in. NVIDIA continues to test to see if they're a fit. So this could certainly help the founder business going forward. I did see one analyst upgrade in the wake of this as well. Bernstein raising the price target on Intel to 100, up from 65, keeping a market perform rating, saying that they see them benefiting from stronger demand. But right now we're at 120.50, so that price target's still below where we're currently trading, Sam.
Yeah, and it looks like ASML is having a good day off the back of some of this news as well. Obviously, the chip equipment maker too. Marley, really appreciate it. Thanks so much for that. Let's trade this name now with Scott Bauer, CEO of Prosper Trading Academy. Good morning to you, Scotty. So we're trading up almost 3% right now on shares in Intel. It's been quite a run for this company. Just walk us through an example trade.
It has been a really nice run, but it also hit really significant resistance just above where we're trading right now, and it dropped pretty hard. The news today in this small rally that we're seeing, I think it's another opportunity to actually take a short position. So if the stock rallies just a couple dollars more towards 125, what I'm going to do is buy the July expiration 115.105 put spread. I'm looking to pay about $3 for that. Right now, that put spread is somewhere 350 to 375 with the stock around 121. But again, on any further rally here, I'm really looking to fade it.
Great stuff. Any thoughts on the market just quickly ahead of the FOMC later this afternoon?
Yeah, I don't think we're going to move much on FOMC. The market is kind of taking a wait and see a little bit here after the the big rise that we've seen. But obviously, the geopolitical news coming out of Iran, especially for the Dow and the industrials, the market really likes it.
They like it.
Yeah, and also, of course, the strength of some of the economic data that's been coming through as well. Scott, always appreciate it. Thanks so much for jumping on with us today. Scott Bauer there, CEO of Prosper Trading Academy. Coming up, we'll take a closer look at the sectors on the move this morning and the international headlines impacting global markets. Morning Trade Live. We'll be right back.
I'm going to go get me some lunch. I haven't done a trade today. Haven't done one. Do.
Morning. Find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to what moves the markets.
Well, I didn't jump in it, so I'm glad I didn't.
Anytime,
I'll wait until I get back. So I'll be heading out.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
I'll be right back. Get ready.
Live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. We're joined by Alex Coffey over in Chicago. Good morning, Alex. Well, we're seeing a lot more of a mixed picture under the surface here. Industrials financials continue to pull ahead here. Just walk us through some of your takeaways just an hour into trade here.
Yeah, it's a good point. It is a much more mixed market, and I would say it's a much more contained price action today. Now, some of the semiconductor momentum stocks are still moving with quite the margins today, but all in all, a relatively mixed contained
75,
market.
60s,
not a lot of really bright
or 50s.
colors on that heat map, as you can see. Information technology is contributing 20 points worth of upside, but it's largely being offset by communications services, which is providing about 16, 17 points worth of downside. You mentioned financials, you mentioned industrials. They're providing about another 10 points of upside, but being offset by consumer discretionary and healthcare, which are also contributing about 10% or 10 points rather of downside. Now, equity markets as measured by the S&P 500 did just turn red, but we're talking 0.07%, 7 basis points here. So looks like kind of a wait and see maybe ahead of the Fed.
Yeah, definitely in a holding pattern as we speak right now. Walk us through the Mag 7. All of them in the red. I mean, Apple's sort of just teetering on the line here, but what gives with some of these big names today?
Yeah, I think this is really the story under the surface today, Sam. The breadth generally is not super strong. Only 45% of S&P 500 names are higher. But I did talk about how some of those momentum stocks are leading, and that does do a lot to keep things afloat. But it's really difficult to offset your big companies when they're under pressure. And today, the Mag 7 is down about 1.5%. So if you were to look at sort of the downwards pressure being applied by the Mag 7, Microsoft, Alphabet, Amazon, Meta, Tesla, and NVIDIA are your top 6 in terms of contributions to the downside, contributing, well over 20, 25 points worth of downside here for the S&P 500. It's just a current that we're swimming against if this doesn't improve.
Yeah, it's pretty clear where the money is flowing right now. I mean, particularly out of the big spenders, more into the bottleneck areas. But there is an expectation that these companies are still likely to pull their weight throughout the course of the year, even if we do see that rotation. So, Alex, thank you so much for breaking that all down for us and giving a snapshot of what is happening with these sectors. Checking in on some international movers now. European auto stocks have been under pressure after BMW cut its profit outlook. The company says margins will fall to as low as 1% from 6% this year, and a combination of disruptions from the Middle East conflict and slowing Chinese demand. BMW is also planning on more cost savings this year, but shares fell to their lowest level in more than 5 years in European trade. The ADR is currently doing this, down 2%. Shares in Samsung rising overnight after a report that Google, AMD, Tesla and BYD are among a number of companies looking to the South Korean tech firm for contract chip-making services. According to the Nikkei, Samsung has been seeing a surge in inquiries from customers wanting to use its manufacturing capacity. We've got the South Korean ETF up 2.3 right now. On the macro front, UK inflation holding steady at 2.8% last month, which is below rates here in the US and the Eurozone. That should keep the Bank of England on hold for now. Markets are pricing in a 95% chance of the central bank sitting on its hands tomorrow, but it's expected to hike rates before the end of the year. And Japanese exports grew at the fastest pace since November 2022 last month, thanks to strong demand for chips and cars. Outbound shipments jumped 17%, an 18% rise in exports to China, 12.5% of a jump here to the US. Those are the 2 biggest trading partners, and chip exports rose 61% in the month of May as well. Coming up, it's time for Inside Out. We'll take a closer look at the state of private credit and alternative asset management and bring you an example trade when Morning Trade Live returns.
Hey, Investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I can do that, you can do it too.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Let's go inside out on private credit and alternative asset management. Joining us now is Jay Hatfield, CEO and CIO, Infrastructure Capital Advisors. Very good morning to you, Jay. Just walk us through how you're thinking about some of these issues right now, because sometimes you just feel like it's being put on the back burner because we obviously giving so much attention to the Iran war and obviously what the FOMC folks are up to as well. But I mean, you have a name like KKR that's down, like 20% or so year to date. I'm just wondering if the worst is behind us yet, or we've still got some more downside?
Well, that's a great question. You pointed it out earlier. We had actually held off on recommending KKR, and the reason is exactly what you cited, that we were confident that stock was not going to work while the strait was closed, because there's fears, we think irrational fears, of a rate increase. And that's just not good for financials. And with high oil prices, there was concern about ordinary consumer credit, and of course private credit. So now that the straits reopened, oil prices are already coming way down. So we think we're correct about them going below 70. That's going to make the consumer stronger, people less nervous about credit. And we do think that fears of private credit are massively overblown. There are going to be defaults. The high yield public bonds have about a 3% default rate. Maybe private credit is 3 to 5. But we picked KKR because it's kind of the easy trade. They're only 15% private credit. Their stock has come off because realizations have been delayed. But now with the strait open, I think there'll be more non-AI IPOs that will benefit them. Super cheap stock, locked in capital, best brand name in financial services. So we think it's a pretty low risk, easy trade at this point now that the straits reopen.
KKR, if the war does come to an end here, but I'm just wondering, was that it? Because there seem to be some other concerns away from the Middle East conflict that had been obviously hanging over this particular sector, particularly with respect to some of the redemptions that we've seen and those caps, and also just with respect to what we saw in the software sell-off that wasn't necessarily caused by the Iran war, but was being exacerbated more so by some of those concerns. I mean, have those worries gone away?
Well, I don't think they've attenuated somewhat. We think they were massively overblown. That not all software companies are going to go bankrupt and private credit unhinged. Now, it has scared retail investors and they are redeeming, but that's to be expected. That's the terms of those agreements. But So we think it's overblown, but like I said before, we're not even really making that bet. KKR isn't really a private credit manager. They have some. We just think they got swept into this, and it's created this huge buying opportunity. It's not going to fly up like it's a semiconductor company, but it'll grind higher, and you're not really taking a lot of risk because they have locked-in assets. Even if you believe that private credit's horrible, it's only 15% of their assets, and they will benefit once the broader IPO market opens. So I think it's a pretty easy trade. You can buy a preferred stock that has a yield to it that trades on the stock exchange as well. So not as exciting. We recommended Marvell 200% ago. It's not going to be like that. But if you're a value investor, like income, like these great financial franchises, a great pick.
Okay, and where else would you be sort of weighing up where to allocate if we do see a resolution to the war beyond a name just like KKR?
Well, it's what you just mentioned. I mean, we want to be, since we do have a 9,000 target, I think that's the highest I've heard. And by the way, that's a reasonable target. It's 23 times. If we have low rates, it's not a crazy target. Earnings estimates are going up. You want to be in the sectors you just mentioned, financials, industrials, and tech. Those are the high risk, high reward sectors. So like GE Vernova is an industrial. We like other financials like Bank of America, CFG is a regional bank. And then instead of just going into the chip low names, which we've recommended in the past, Broadcom is well hated by hedge funds. We think that's a big opportunity. Trades about half the multiple Marvell, similar growth rate. And Amazon, you were talking earlier that all the Mag 7 were down. Well, that's because when chip stocks are rallying, and hedge funds will short the Mag 7 and go long chip stocks. So we think that Amazon's become discounted for that reason. We have a 370 target. It's not that volatile. So the same thing like KKR, you can just hold it over the long run, and probably in a year or two, it will be way higher. And it's probably a better value than SpaceX. Same market cap, trades at 20 times instead of 60 times revenue.
Mm-hmm. Jay, always appreciate your insights. Thanks so much for joining us today. That is Jay Hatfield there, CEO and CIO, Infrastructure Capital Advisors. Appreciate your time, Jay. Let's trade KKR now with Tom White, host of Fast Market. Good morning to you, Tom. Just walk us through an example trade.
Yeah, the stock's been under pressure, down about 21% so far this year, and it did just bounce about 20% off of those 2-year lows that we recently had, but still under pressure if you look at the chart on this. One of the key areas I looked at here was this 50-day simple moving average around the $98 level. It seems to have bounced above that. Maybe that becomes a near-term area of support. Now they report earnings at the end of July, so you got to take that into consideration. So I looked at an option strategy that takes advantage of some upside exposure, gives myself some duration, but also limits my costs on this bullish call vertical. Went out to the August 21st monthly option series, so 65 days to expiration. Got over 2 months in this position. Buying the slightly in the money 97.5 strike call. There's the bullish portion of this strategy. It's got the higher delta of nearly 60 on that 97.5 strike call you're buying. Then against it, sell the 115 strike call. So in essence, you're buying a $17.5 wide call vertical to the upside. You're paying roughly about I've got a 630 debit on here. It's trading closer to $6 now, so a little bit less. But the debit you pay is going to be your risk. So if you pay about a $6 debit, $600 in risk on this one, you can more than double your money on this if the stock goes back above 115 over the next 65 days. The break even on it, if you pay that 630 debit, is 103.80. That's only about 4% above the current share price in there. So if you're going to use technicals on your trading, this will set up with, hey, if we bottom out here at this $98 level, which is a 50-day simple moving average, and move to the upside. And another key is going into that August expiry cycle where you're doing this trade in 2 months, the plus or minus one standard deviation move is about $15, $16. So that sets up with that 115 strike that you're selling in this strategy and offsetting some of the costs on that bullish call purchase on the 97.5 strike call. So if you think maybe earnings is going to be a catalyst, or this stock continues to grind higher off of those 2-year lows and remains above that $98 level. This strategy takes advantage of that upside exposure and a pretty good risk-reward setup here, Sam.
Great stuff, Tom, as always. Thanks so much for the example trade on KKR. We'll be checking in with you at 2 p.m. Eastern, straight off the back of the FOMC decision later on the watch list as well. So obviously we are seeing stocks in wait-and-see mode right now ahead of what is going to be a very busy afternoon here. The S&P 500 flat as a pancake. We're seeing some up arrows, though, for the NASDAQ. The Dow Jones, which hit another record, up 160 points. The Russell 2000 also gaining. Thanks for joining us. I'll catch you later on the watch list. You've got Trading 360 right now with Marley Caden.
Schwab Bank, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With investor checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden, coming to you live from our Chicago headquarters. Here's what we have coming up in store for you. The team from Adobe just released some eye-popping data on AI and how it's impacting online shopping and the overall e-commerce experience. We'll break down those numbers and also the new tool that Adobe is releasing to talk about machine readability and how important that is for businesses right now. Today's Disruptors is ARM's Holding. We're going to take a look at ARM. It's up 250% so far this year, hit an all-time high yesterday. George Tillis will weigh in and also have an example trade for us in the Disruptor. Then in our 360 round, we are going to preview the FOMC meeting today, what we can expect. Consensus is that rates will remain unchanged, but investors will be watching for any signals from Kevin Warsh in his first meeting as head of the Fed about potential future cuts or hikes or any other tone in either direction. Let's check in with the markets, though, in advance of that announcement. Mixed picture today. The S&P just fractionally lower right now. We're down less than 0.1% at 75.04, but in positive territory otherwise. We've got the NASDAQ up 0.25% at 30,046. The Dow hit another intraday record today, also up about 0.25% this morning, 52,135.97. And the Russell 2K is up about 0.2% right now, 2958.62. Taking a look at the 10-year, we're at 444. The dollar is at 99.48. Gold slightly higher, 43.67 a troy ounce. Crude oil at 76.93 a barrel, a little bit higher than we were yesterday, but still under that $80 mark. And Bitcoin at 65,145. Mostly range bound for the cryptocurrency. We've been kind of lingering in this 61 to 66,000 range since dipping below 70K. Do want to bring Alex Coffey into the conversation, though. Take a look at another name that's on the move today. Alex, we're talking about Intel making a big announcement at a conference in Hawaii that they have begun manufacturing or early manufacturing of now what will be its most advanced node.
Yeah, there's a lot going on here, Marley. Good to see you. But Intel, as you mentioned, moving its most advanced chips process, this so-called 18A-P, into what they refer to as risk production, which in layman's terms is an early manufacturing stage used to validate performance before a big full-scale rollout. Now, this is a milestone that is seen as key to Intel's turnaround in its foundry strategy, as again it continues to try to win external customers and compete more directly with TSMC. It's also thought by many to kind of help move closer to a potential partnership with Apple, though there's no deal that has been finalized on that front, and Apple is likely waiting for more of this upgraded node. Now, some of the performance improvements for the versus the prior 18A are 9% higher performance or 18% lower power, 20 to 40% better thermal resistance, 10 times reduction in voltage instability or droop, and a fully it's seen as fully compatible with these existing 18A designs, which would lead to lower switching costs for customers who decide to do so. The process is on time, which is also reinforcing Intel's general message, Marley, that their turnaround strategy is on pace and they are making progress on that execution after what seemingly had been years and years of setbacks for this company. The key swing factor is seen as yield. Analysts suggest that upwards of 90% in an early yield could be critical to landing major customers. It's important to note, Intel still hasn't actually landed any of these major external foundry business clients just yet. Shares are moving higher, as you can see, not quite to the highs from the last few weeks, but getting back there after a little bit of a dip. And this is seen as a big part of the turnaround for Intel, so investors are going to want to see continued progress on this front. All in all, though, what I would say is this is seen as not more just a story of can they do this, but can they do this in a full-scale way that's going to lead them to more clients like an Apple, for example. So that's going to be the big question mark, but a good first step on that path.
You bring up a great point, too. We've had a lot of headlines around Intel and potential customers, but none of them are customers yet. There are reports that Google has placed an order, but we haven't gotten confirmation about that order. NVIDIA also reportedly evaluating their process, and then, of course, you bring up Apple as well here as a potential customer now with this new, soon-to-be, hopefully for Intel, full-scale production of this increased node. But it is a good point to reference that there aren't customers yet for these products. And as far as what you're seeing from the sell side, have there been any adjustments or anything or any commentary after this latest announcement? Because most of the commentary we've seen is off of the prospective customers.
Yeah, what I saw more so was kind of the challenges laid out to this, and I can list some of those. One of them is, look, TSMC dominates this space, so you got to win some of that market share from them. They're not going to give it away. The other is supporting ARM-based chip designs. This is what companies like Google, as you mentioned, or Apple that I mentioned, and many, many others actually use. So you need this new validation and this manufacturing process to support that style chip. And then it's not just can you do it again. It's can you do this in a consistent, high volume production at scale. When companies like Apple or Google or NVIDIA do business with different businesses, they expect that execution. They do so at scale. So it's not just do you have a nice process, it's can you actually do it.
Well, Alex, really appreciate you breaking that down for us today. Intel seeing a nice 3% pop on that news there, and that was Alex Coffey, our senior equities contributor and co-host of Next Gen Investing here on Schwab Network. Do want to welcome in our next guest, though, joining us this morning, Jay Mehta, co-founder and chief executive at Viraz Advisors. Jay, great to have you back on the show. Would love to get your thoughts on this action we're seeing. I mean, looking pretty much green across the board. The S&P just fractionally lower right now, but we still got quite a bit of trading day to go here. I mean, the market just is grinding higher despite the fact that we've still got geopolitical risk. We've got a slew of macro headlines. I mean, what is giving investors such confidence right now?
Well, I mean, I think that's kind of the headline right now, right? That the bull market is intact. I think part of this is, you know, what's happened over the weekend with the Iran peace framework and where that might be headed, I believe on the 19th with the signing in Switzerland. I think that starts to alleviate some of that inflation risk, starts to give some positive tailwinds towards continued growth. And I think that that's driving a lot of this sentiment right now.
The SpaceX IPO, because I was just looking at it ahead of the show, and we are seeing a little bit of the wind coming out of the sails here, but how much did the successful IPO contribute to the rally we're seeing and the durability of it?
Yeah, so I think that one of the key headlines from the IPO itself is just a commentary on investor appetite. I think what we're seeing is that investors right now are still willing to invest in long-term duration growth and innovation itself. And I think that speaks a lot about the risk on, kind of going back to the bull market's intact story here, that that there's an appetite. And I think that some of the concerns about the the liquidity drain have probably been a little bit overstated, and I would just reference to ongoing buybacks within, as a trend right now. But also when you look at the sheer size of it, while it's very impressive in a multi-trillion-dollar market, I don't think it really is quite the same concern that it was voiced earlier. So I think that, it speaks a little bit more to that continued bull market.
And as far as IPOs going forward in the year, and particularly in the tech sector, because we've had a lot of successful IPOs, but we haven't seen a ton of tech names in the IPO space, a lot of crypto names coming forward. When you're looking at OpenAI and Anthropic potentially coming next, I mean, what's most exciting to you?
Well, I think that, this is just I think there's a lot of focus on innovation right now. We're going to see things that we may not have seen in the past. This is an entirely different market for IPOs, just given what's coming out. What are we really invested in here, right? I think that, again, this innovation and long duration growth is really a key story here. I think it's exciting, but when we kind of focus on tech and the tech sector itself, when I look at earnings as a whole right now and what kind of the EPS forecast is, we're looking at possibly double-digit growth, which is continuing. But I think it's a bifurcated story where tech and communications is really leading that, and everywhere else in the market we're seeing kind of flat to mid-single-digit growth. So I think tech and communications remains the story, and I think that there's going to be some continued excitement around that, including the new IPOs that might be coming out later this year.
So with tech and communications staying the story here, do you have concerns about that, Jay? Because, I mean, it is very, very focused leadership at this point.
Yeah, I mean, I don't think that can be overlooked. And I think that's, I think it's kind of hidden in the numbers, right? It's easy to say that EPS growth is going to be, 20% plus double digits here. And when we look under the hood and we look at across the 11 sectors, only 2 of them are driving that growth. I think that brings up the opportunity to look at, what are some of the sectors to stay focused on. If tech and communications is where the growth is, then what might be some of the defensive strategies if we need to start to see maybe a flight to safety, something that we're not expecting right now, whether it's a recession shock or maybe a growth scare or possibly a black swan. I think we need to look across the sectors.
So as you're looking across the sectors for some of this more defensive positioning, where are you looking?
Well, I think that, when we look at right now, we look at consumer staples and we look at healthcare. I think those two are very interesting. You're seeing here, again, that kind of flat to mid-level growth. But looking at their valuations, they're right now priced relatively cheap historically compared to the index. And I think in a normal environment, normal meaning with kind of the low value plus strong fundamentals, earning fundamentals, this might look like a buying opportunity. But when you look at the earnings and the margins pressure here, I think what you see is cheap for a reason and not necessarily a value buy.
And as we head into the second half of the year, you mentioned defensive there. Right now, if you had to pick one way you were leaning, are you leaning offensive or are you leaning defensive right now?
Well, it's great because, we're guiding our clients towards long-term planning and not really looking at the 30-day, but more like the 30-month strategy. But I still believe that the bull markets are intact right now. I think that there is some opportunity. And without making any predictions, I think that right now is a time for discipline. And it's really focusing on long-term frameworks rather than short-term plays.
Jay, always great to talk to you. Thanks for joining us again on Trading 360. I look forward to our next chat. Jay Mehta, co-founder and chief executive of Varaz Advisors. And we've got plenty more on Trading 360 today. We've got the big three coming your way next. 3 stocks, 3 charts, and 3 trades. Kevin Horner taking us through the technicals today. Don Kaufman will be taking us through his trades for Humana, Bank of America, and Microsoft. That's next on Trading 360 on Schwab Network.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need, all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Kevin Horner joining us today to take us through the charts. Here to take us through the trades, Don Kaufman, co-founder at Theo Trade. Great to have you both with us. Don, it's Kevin Warsh's first Fed day here. I'd love to get your thoughts on the market action we're seeing in advance of the announcement later today.
Yeah, we should get some fairly exciting volatility, but I would look at this as a bit of a risk event, specifically for the financials, which have had a pretty staggering run to the upside lately for no apparent reason other than, Kevin Warsh is in. It's his first meeting, but look for some real volatility to hit those financials later in the day.
Watching, and you're not the first person who's mentioned this as a risk event, despite the fact that we're not pricing in any actual rate change today. But let's dive into the big three here. Talk about your first pick. You brought Humana today. They're a little lower today, down about 1%. But I mean, as I look at them overall year to date, they're performing better than the broader market.
Yeah, this is a staggering move inside of Humana, and often you hear me say this. It's like it's a move to the upside, maybe for all the wrong reasons. So right now, we've seen some really, if you will, manic rotations into different sectors. One of those happens to be healthcare, and more specifically into Humana. We are looking, though, at 40% year to date. Now, look, you can make all kinds of fundamental arguments. This is clearly a technical move, but we're at the point, if you will, of the technicals are getting rather exhausted in here. At a 40% move, literally straight up, technicals are getting exhausted. I think rotations are moving into healthcare and specifically Humana, as I said, as more of a defensive posturing. I would look for this, again, in just the weeks and months to come to be a great bearish opportunity. And I'm going to take advantage of exactly that. I'm going to go out to the August 21st options expiration. Again, August 21. I want to give myself a little bit of distance, a little bit of time, because I'm going to be buying an out-of-the-money put spread. I'm going to be buying a 345 put and selling a 335 put against it. So it's a full $10 wide put spread done for a $2.75 debit. I'm not asking for the world over here. I'm asking for this underlying to pull back just below 335, be profitable, move out, move on with it. Again, it looks like defensive posturing more than, if you will, real buy-side opportunity.
All right, and Kevin, as you look at this chart here, I know you brought us a longer-term one, and I was looking at the full length of trading for Humana, which goes back into the 80s. Between 85 when it started trading and all the way out through 2015, 2016, it was pretty sideways. So I'm glad that you've captured where that all changed. So you take us through what you're seeing here, and if you're seeing Don's thesis hold up, that we might be looking for a pullback in this.
Yeah, I absolutely am, Marley. I mean, we've had on this 10-year weekly chart, I've got the 200 period, 200 week moving averaging here in blue. We broke that down, and as you can see, made a huge move all the way down to the 165. And Don's right, a 40% rally into that same 200 week moving average. Remember, it was support, 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 and support until it wasn't, and now it's resistance potentially. So the setup here makes sense from Don's approach. Watching this, we've also got the rally into the 50% retracement of the entire move lower. So this is an area where it makes sense from a pause standpoint. And even if it doesn't become bearish immediately, the pause could still play to Don's trade clearly.
And as we zoom in and look more closely at this recent action, this 40% move year to date that we've been talking about, what are you seeing specifically there as we zoom in on this action?
Well, a lot of what Don said validates this too. We had that huge breakthrough, major resistance at 312. 340 is our supporting moving average at this point right here. Any pullback to that is going to make this trade likely work out for the trader. So, this is an opportunity that makes sense from the standpoint of what we've gotten to the upside in the short run and the possibility of the pause. When you have today's action as well, we'll notice we made highs really close 3 days in a row, and now we are well below, or at least dabbling with the potential to close below the low value on our highest trading day in the last week, and that could be the short-term signal that some traders are looking for.
Yeah, and Don looking for us just to move just slightly below that support, that resistance level there of 340 that you highlighted with the moving average.
Yeah, Murray.
365 and some change here. Don, your next pick is Bank of America, and they've had some momentum on their side over the last month here. I mean, up almost a little bit more than 15% here as I look at B of A. So how are you feeling about Bank of America? Bullish or bearish?
Yeah, no, this one's going to be bullish. It's definitely also going to be bothering me to get bullish in here, but I'm going to go with the logic that it's already cresting literally today into all-time high territory. I think it's got a little bit more juice to the upside. I want to be clear about something. I am bullish right now, but this is bullish, okay, in the very short duration. So clearly, Kevin Warsh and crew can change maybe some of that later in the day, but I'm actually going to be buying a slightly out of the money call spread, looking for the stock to appreciate, which it did today, into literally new highs. This is a trade that we've seen so often lately. To me, it's less about the technicals where it's cracking into new highs. It's much more, if you will, about retail traders that are looking for stocks that are butting up against highs, and then they're jumping on and buying calls, and it's actually causing these gamma squeezes to the upside. Lo and behold, I'm going to take advantage of it. I'm going to go bullish, but I'm only going to go out to the July 2nd options expiration. As I said, a little shorter duration because I think that the pop is going to happen and then possibly subsequently the drop. But I'm going to be buying the 57 call, okay, and selling a 59 call against this $2 widespread done for about a 70-cent debit. You know, this underline's already moved up quite substantially today. We'll see how that momentum continues through the Kevin Warsh speech today.
All right, we did touch new highs already today. We got up to 57.98. We're just barely below that at 57.56 right now. So, Kevin, when you look at B of A, what are you seeing?
Well, as you said, we're at the top of the range here. You know, 56 has been our highs, and here we are at 57.5 approximately. So, $10 range ballpark here. A breakout could be quite significant, but once more, when we're at resistance on the heels or in front of news announcements and FOMC, pausing up here wouldn't shock any of us, but a short-term breakout could be significant. You know, and I drew that in as well on the daily chart here. Let's slide over to that real quick. You can see we've had a fantastic move up since we took out the downtrend line, and I think traders tend to watch these key levels. When you move through the downtrend line, it shouldn't be a shock to get a little bit of an explosive move. We got exactly that right into 57.50. So, you know, any clearance on a closing basis over 57.50 is going to look pretty bullish in the near term.
Yeah, right now we're above that. We're at 57.63. We are up 1.33% for B of A right now, which will bring us to your last pick in the big three, Don. We're talking about Microsoft here. Has been under some pressure, again today as well, too. We're down about 2%. Year to date, down about 20%. So how are you feeling about Microsoft?
Not good. This is really bearish, but you know, I'm just going to throw this out here. You have some of what I would term like the tech titans. You want to call them the monsters of tech, the tech titans, including Apple, Microsoft. Now, Microsoft at least has investment in AI. Apple doesn't even have that, and yet it's still continuing to appreciate. But you have some real players right now in the game that really do not have, if you will, great and positive exposure to AI, Microsoft being one of them, and it's got considerable exposure, of course, to software, which there's been a very much a love-to-hate relationship with software-based stocks recently. They got a bid back under them, but I got to tell you right now, taking a look at like the CRMs and the SAPs and Microsoft, they're getting hit and hit hard again. Again, with all due respect, I think you're going to see Microsoft have to crest again through new lows, and that new low, you're looking at 356. As the one of the recent lows, but I think we're actually going to crest through that. And again, it's going to be done on some fairly strong momentum to the downside. There's just not a lot of love right now in this marketplace for Microsoft. So I'm going to go out to the July 17th options expiration. I don't think I have to go very far out in here because it looks like it's, you know, we're ready to go. We're ready to break at this moment. I'm going to be buying, again, a 380 put and selling a 370 put against it. So in buying a 380 put, like that's the position, right? So I need that product to get below 380. So why am I selling the 370 put against it? To mitigate some of the volatility exposure, to mitigate, you know, some of that expense, if you will, of the 380 puts. I love to use spreads to control risk over here and define my risk. In the case of this trade, my risk is $2.75. That's it. Upside potential, just over $7. I mean, again, it's a nice risk reward, and what am I asking to have happen? Again, the stock needs to get below 370, but as I said a moment ago, I think we have to retest that 356 low and then some. Again, some of the tech titans, it's just not there. It's, you know, is Azure going to save them at this point? Possibly not, and I think that people see that fundamental future for this underlying.
And Kevin, as you look at this chart here, we're at 380, 584 right now. Are you seeing the potential to retest those lows around 356?
Yeah, I sure am. I mean, this is an interesting chart to me for a number of reasons. The levels that Don called out certainly work with the technicals as well. The last low we saw back here, clearly on the level here. But the other thing that's very interesting, this will maybe throw a little cold water on Don's bearish thesis perhaps, is just the idea that we have been above this 200-week moving average since January of 2012. This has been a test and participate zone for traders in Microsoft for 14 years. So the question now is, does that really continue? It could surely, come back below the 200 period, the 200-week moving average. Maybe we get another horizontal test at that 356 as Don called out. That's certainly a possibility here. I think it's very interesting in the short run because as we navigate through and we go over to the annual chart, he's absolutely right. It is not pretty. It's ugly. A failure, clear failure on the gap above the 200-day, immediate reversal back to 380. Here's that 356 low Don called out. Anything below 384 on a close is going to present bearishly in the short run and really make this trade a positive in Don's view.
Yeah, we're not too far off that 384 right now. We're not even $2 off of that level right now for Microsoft. Microsoft down about 2%. Don, before we say goodbye, though, I know you highlighted financials off the top of this as somewhere to keep an eye on for volatility in the wake of the FOMC announcement today. But what other sectors are you looking at in terms of potential plays for vol today?
Home builders, there's no question about it. I'm looking at like XHB, Toll Brothers. I mean, you're looking at a bid to some of the home builders that has been really quite substantial. You can look at Home Depot as well, Toll Brothers, XHB, which basically Toll Brothers and Home Depot fall into XHB. But he's having a nice bid back underneath them right now. And can you give me a fundamental reason? Are interest rates down? Absolutely not. Again, we're seeing these cyclical rotations, and it's much more defensive. This is money management that's right now, they're running a little bit scared. Like, we bought semiconductors, great, check that box. Some of the monsters of tech right now are not exactly performing very well. We just looked at Microsoft a moment ago, so check that box. They can't go there. They're running scared. That's exactly why I picked, healthcare and Humana. That's why we looked at Microsoft for sell-side activity. But the home builders right now, there just can't be much love in this sector, and yet you're still seeing them rally considerably in the last couple of weeks.
Always appreciate you being here, Don, and I appreciate the insight there, too, and the curveball question I tossed your way at the end there. Don Kaufman and, of course, Kevin Horner for breaking down the technicals for us today. Coming up next, we are going to spotlight how AI is impacting online traffic and the overall e-commerce experience. The team at Adobe has some new data on AI-driven retail traffic and a solution to help businesses stand out. Trading 360 will be right back.
Moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
My man!
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Question is, are we going to break?
Yes. Now we're in the car together almost daily. I started
red
to realize, what can I pick up? Been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every training day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible was that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight AI and how it's impacting online traffic and retailers. According to new data from Adobe, AI-driven online traffic is up 194% year over year in travel, 138% in retail, and 105% in financial services.
She likes
For
that
more
news.
on this report and a look at how brands can stand out, we're joined by Lonnie Stark, the Vice President of Strategy and Product over at
TLTR
Adobe.
up off yesterday.
Lonnie, great to have you with us to take a closer look at this data. I mean, some of these numbers were incredible. As I was writing up my notes, I was looking back to make sure I didn't have typos here. I mean, let's dive in first with this travel. It's up almost 200% year over year. Since late 2024, AI travel traffic up 2,215%. So take us through why you think we're seeing such a fundamental shift, particularly in this sector when it comes to AI usage.
Thanks, Marlene. It's great to speak to you again. Those numbers are tremendous, but we're actually seeing it across industry. In travel, I think that people are looking for advice on where to go, what to look for. And I think these numbers are an aggregate of what we've been seeing in our own behavior. How many times this year, summer travel, you have used ChatGPT or Claude or AI, Google, to be able to find your travel.
This is the third attempt.
All this is really the metrics of a
to break the
real change
orb.
in consumer behavior across travel,
Third attempt.
retail, and we're even seeing it in B2B. And companies are taking notice by needing to do something about it. And this is why we have announced the evolution of our latest solution, Adobe Brand Visibility.
Very good.
that
See how
pulls in
third attempt,
trusted,
one of them,
the largest
2 bits,
corpus,
3 bits,
trusted living data from our
and it's a higher
acquisition,
low,
which
so
we
it's in
closed
ascending.
just 6 weeks ago, and the optimization that we have in our LLM optimization tool to bring together the industry's first trusted solution to understand what's happening in AI,
7550s.
to be able to improve, take action, and then also be able to benchmark it to see how these increases in brand visibility impact things such as your marketing pipeline as well as the revenue.
And I'm so fascinated by this concept of visibility alongside machine readability, which were terms I was not expecting to be talking about, but so important as you break it all down. I mean, as I look at this, machine readability, and you mentioned people playing with ChatGPT or whatever their preferred LLM is to plan their summer travel. When you think about it, we don't actually think through the process of how these LLMs go about choosing the results that they're giving us. When I type in, I want to go to Disney, what's the best itinerary, where should I stay, and which parks do I visit? But there are some very important
Now we're at the
things
200.
about remembering that a robot is doing the search for me.
Yeah,
So
damn it.
break down
Another
this
one flies right by me.
relationship between brand visibility and machine readability, and how it has become so important now to not be search engine optimized, but to be optimized for these LLMs to read your content instead.
Yes, Marley, we think about this and we advise clients in 4 categories around brand visibility. And you touched on the first most fundamental thing, which is brand discoverability. can AI actually find the content on your website? So your website now has become not just for humans, but for AI. And a lot of the content, 80% of the brands we work with, their content that's optimized for humans, they're not optimized for readability for AI. So what Adobe Brand Visibility does is it goes in and it does an audit of this and makes sure that all of that great content is visible to AI. That's brand discoverability. Then there's brand clarity. The brands we work with, they have multiple products, services that are targeted at different groups, maybe family travel, maybe luxury travel, business travel. So being able to also make sure content is legible and readable by these AI agents, and they understand what products and services to recommend for the different categories and target audiences in the conversations. Third is brand authority. We talk about the website, but we know that these AI agents search across the entire internet. So being able to not only understand how your own content is feeding in, but for these AI agents,
we're going to get a breakout.
what key sites, what key authoritative third-party places are they going to get that information? And it differs by industry, it differs by different subsegment, and that's the kind of information we're able to provide with Adobe Brand Visibility.
75
and
50s.
finally, brand trust. We talked in the era of social about social influencers. They were people. Now it's about how do you make AI your number one influencer around your brand. So does AI trust your brand? And why this is a C-level imperative is because all of those signals, including the ones with humans, feed into what we call, and we know, on your balance sheet, which is brand equity, right? And that intangible aspect about brand, whether it's preferred, whether it's trusted, and that accumulates over time. And in this crazy complex world, I mean, think about your summer travel. Think about the last thing you purchased. Inundated with choices. How do you decide? You decide based on the accumulation of brand preference that you have, as well as what AI is now telling you.
So let's look at the trends that you're seeing and who's doing this well and who isn't. What areas are we seeing perform well when they're going into an LLM and being tossed out to the search to me, the consumer, and what areas are really still struggling?
So I think that the area that companies are starting to become aware of is branded search terms. So the companies we work with, they have a greater understanding of, I want to put in my brand and understand how LLMs are talking about what's the general sentiment. So that is the baseline of things that we work with clients on. But the more strategic aspect of it is to look at their whole entire topic space and be able to understand what are people asking about in your category and whether you're showing up there. And then finally, one of the things that with the SEMrush acquisition, we bring in over 289 million prompts that are constantly refreshed of what people are actually asking about. And what that does is it uncovers blind spots. So brands kind of think they know what people are asking about, but with this additional data that we have gotten from our SEMrush acquisition, we're able to also uncover blind spots of things that people may not know what they're asking about. And this past summit, we saw some great examples from GM and Dick's Sporting Goods on how they're starting to use LLM
There's one for
optimization,
790, the 75
and then finally
50s.
being able to bring it into brand engagement. So what happens when you finally get a human who's been searching for summer travel onto your site? What are they doing there? How do you make sure you have their intent? How do you get an increase
There it
your
goes. I knew it
first
was
party
coming.
data
Or
that you
on
have?
its way.
And Lonnie, another thing that really stuck out to me on this report too is you said, you know, as you've got somebody in ChatGPT or whatever their preferred LLM is, and they're now getting to your site, AI is now converting more than traditional sources, which is a change year over year. And additionally, I was struck to see that not only is it converting more, people are spending more when they are purchasing through AI usage. So take me through that, and if that was surprising to you.
Yeah, so it the speed at which it has happened is surprising. The notion that it is higher converting is not. If you think about it, it makes total sense. You're having conversations in ChatGPT or in one of the other AI platforms. By the time you're clicking through, you have already done your research. You have already considered things, and you're obviously clicking through with high affinity. If you have already taken away a brand and said, they're not for me, you're not clicking through. So this is high quality traffic that's coming through. And you highlight the really important thing is that what we show is the average conversion rate, which is higher than regular traffic. However, most brands, you want to compete higher than average. So being able to then personalize that experience and then figure out what are reasons why that person will now directly come to you. How do you reinforce loyalty? So one, show up, be visible, but two, when they do come to your site, how do you reinforce to the human, next time come back directly to me? And that is a source of real revenue because as you are able to grow your direct consumer business buyer channel, you're able to have much more control over the message, the brand story as well through your own channels.
Lonnie, really appreciate you coming to us with this exclusive data and breaking it down with us this morning. We look forward to Adobe's next report, and I look forward to our next conversation. Lonnie Stark, the Vice President of Strategy and Product over at Adobe. Coming up next, we've got the Disruptors. George Stillis will join us to take a closer look at ARM, up more than 260% this year, and it just got a price target hike over at Bernstein. We'll have a full breakdown for you and an example trade coming up next.
There's a little pullback right there. 790.
Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
How's it going?
First day, so.
Sometimes, you know,
Next. Try it again?
you could have done better.
Please?
Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Nicole Pedalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the Disruptors. George Tillis, our senior markets correspondent, here to take a closer look at ARM Holdings today. Stock up more than 260% in 2026. Bernstein just hiked its price target up to $500. Right now, we're trading up almost 6.5% higher at $421.89. So, George, what do you make of this call from Bernstein?
Well, this call makes sense if you consider the context of what's happening with technologies and artificial intelligence. And this is the year where we're actually seeing computational power needs
760.
move from training of models to basically inference and agentic needs. In other words, the vast volume of
Thinking this is the
queries or
last one.
tokens, if you will, that artificial intelligence are deploying to help people who are using them across the board, enterprises, of course, and consumers alike. And so what this is doing is it's creating a huge demand for basically AI workloads that need autonomous execution, if you will, or orchestration of data. And that's really the CPU. It's really the workhorse technology versus GPU technologies, which are parallel-based computational executional programs that are used more for training. So the ratio basically of CPUs to GPUs is accelerating, and this has been going on all year. And this is why we're seeing CPU-based companies like ARM Holdings, AMD, Intel, Qualcomm, all perform exceptionally well. I'm looking at a year-to-date chart, as you mentioned. The stock itself is up over 260%. And Bernstein still sees this ratio improving going forward, as well as the server workloads that CPUs are going to be in need for going forward all the way to 2030. So they raised their target to $500 from $300 in ARM Holdings, which is one of the leading chip design giants out there.
770.
And their memory management technologies and processing technologies are ubiquitous across the board, particularly in the mobile aspects or mobile interface space. But ARM Holdings as well is moving into advanced silicon development and also in the server markets. And so that positions the company right in line with other major competitors in the CPU space like Intel and AMD.
And as we look at ARM right now, with this move to the upside, we're up 6.5%. We're at 422.05. I highlighted that year-to-date move of it's now up to 280% higher. So, George, as you're looking at ARM and trying to trade this name for example purposes here, how would you go about doing that? Is it a long-term trade or a short-term trade?
So I thought about this carefully. Ideally, I'd prefer a longer-term trade going out to August or September. But if you look at the call options for ARM Holdings, they imply volatilities over 100%. They're very expensive. So ideally, too, if you look at perhaps maybe the market's pushing slightly to the upside post the Fed meeting, I'm going to go short-term in nature here, and I'm basically going to offset the expensive component of the call option by selling another call. So I'm basically going to structure a call vertical, and I do think that there's a possibility we see another ratchet to the upside post-Fed meeting, and that's where this trade is in play as well. So I'm going to go out to next week's expiration, June 26, and I'm basically going to buy a $425 call, and then I'm going to sell the $435 call against it to offset the expensive premium of that $425 call. And so altogether, it costs you about $4.50 a share, or $450 a contract. So the whole premise behind this trade is it's bullish. We need at least 429.5 by expiration next Friday for break even, and it's essentially close to 1-to-1 return on risk, slightly higher. 550 return on 450 risk, and that'll occur if the stock hits 435 or higher by expiration. So I know it's about a $13 or so move to the upside from here, but in the context of the price of the stock, it's not very much higher from here.
We're going to find out here.
The mobility we've seen are
we got 200 right here. This is a SPY.
CPU and semiconductor names as
kind of got ahead.
Yeah, and that would actually put us
Left
into
shoulder.
new all-time high territory too. Right now, the all-time high is sitting at 428.60.
George, really
11
appreciate
here.
you
breaking that down for us, and also for your thoughts on the call there from Bernstein on ARM holding today. Again, 6.5%
I
higher
ain't taking it yet.
Coming up next, we've got our
I was
360
thinking
round. Our
790,
panel is
but
going
I
to preview
didn't
what
do
we
it.
can expect from Kevin Warsh's first press conference as Fed chair ahead of today's rate announcement. We'll be right back.
I didn't do it.
Trade powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Dang, there it was. I knew it was coming.
I'm Alex Coffey.
They've been
And I'm
60
Jenny Horn.
bucks.
This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus
The
on what's driving
7550s.
investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network. Hey, Dad. I have a question for you.
Ask.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and
Very
my
good.
advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. The Federal Reserve in focus today as the Kevin Warsh era officially begins when the FOMC announces its first rate decision with Warsh at the helm later today. The Fed expected to hold rates, but investors will be watching closely when Warsh takes the podium at 2:30 Eastern. For more on what we can expect, let's bring in our panel. Joining us now, John Blank, Chief Equity Strategist and Economist at Zacks Investment Research, and Sam Burns, the Chief Strategist at Mill Street Research. Great to have you both with us. John, let's start with you here. I mean, mostly expected, I think, is a 99.6% chance as of this morning that things will remain unchanged here. So what are you looking for from the meeting today and the announcement?
Yeah, so Marley, we've got a reconstituted Fed OMC. There are 12 members, 7 are at the Board of Governors, 1 is at the New York Fed, and 4 rotating regional members. But the difference here is Fed Chair Powell has stayed on, so there's now a quorum of people who are going to be effectively independent of Kevin Warsh, regardless of what he does. So the dot plots that will come from all 12 may or may not include Kevin Warsh, but the dot plots for the remaining 11 people on that committee will be the most material element of this meeting.
And Sam, what are your thoughts there? Because Kevin Warsh has not been shy about his feelings about the dot plot and how much information the Fed is giving to the markets. And it's something we've been very accustomed to. Do you expect him to drop a dot today? Do you expect him to offer any commentary going forward about his plans for the dot plot?
You're right. I think, Kevin Warsh has kind of come out and said that he thinks the Fed gives too much, forward guidance, that there's sort of too much commentary coming from the Fed, and that their forecasts in the dot plot have historically, in his view at least, not been very accurate, and therefore, should have less weight, or at least get less attention. And so it's very possible that he will decide, kind of as a statement, to not include his own dot amongst the amongst the committee members in the dot plot. And I think that's going to be part of an overall kind of strategy of trying to control more of what comes out of the Fed, and generally produce less guidance than what we saw under Powell or Yellen or Bernanke in terms of previous Fed chairs. So I think that seems to be his bias right now. I don't think there'll be any major change to rates or anything, but it does sound like that the committee is probably tilting a little bit more hawkish, and he probably does not want to go along with that right now, at least.
And John, as you look at this, I mean, I had a guest on earlier in the show saying that today is a risk event. I had several people say it to me yesterday, but as Sam just pointed out here, rates expected to remain unchanged. So as far as what you view as the biggest risk here from Kevin Warsh and what we could see move the markets here, is it dropping or not dropping a dot? Is it his tone? Is it a lean, dovish, or hawkish? I mean, what is the thing that could end up really changing the course of the action we're seeing today?
Yeah, so we're going to have to wait for the comment period along with the dot plots. But what we really need to care about is the 10-year U.S. Treasury yield, which will reflect all the incoming Fed decisions over the next couple of years. If that moves up 8, 10 basis points, or 5 even, then the market will materially consider that information. If it's below 5 basis points on the 10-year today, then basically we've learned nothing that the market already thought before we went into this meeting.
And Sam, as we look at the setup going in, getting this announcement of this memorandum of understanding certainly changed the backdrop that Kevin Warsh was coming into his first meeting. As you look at that, how much commentary is there going to be about inflation and inflationary concerns going forward? Because it now looks like, at least on paper, we have a potential resolution to this conflict that we didn't have when we were talking about this last week.
That's right. I think that's one of the reasons why the Fed has, kind of made such a point of basically staying on the sidelines for several months now. Certainly since the conflict in the Middle East began, is because things like this can happen any day. Something could substantially change the outlook, and as of course we've seen that oil prices have come down pretty significantly since the news of this kind of memorandum have started circulating. Now, whether things really work out right away or not, I think the general view is that the Fed does not really want to respond to what is essentially an energy shock or supply shock, particularly one that's so sort of unpredictable,
770
happening politically, and so they're going to look for a reason not to do anything. And I think that the general view is that while inflation is too high right now, certainly, and maybe going to stay high for another few months, looking at a year or more, you could argue that inflation will in fact come back down again at some point, and therefore the Fed maybe can afford to kind of limit its actions and not have to respond too much right now. I think they're kind of looking for reasons to do that. They don't want to really step in and start raising rates. Other central banks have started to do that, but I think the Fed would very much like to avoid that, and this gives them a reason not to.
And John, really quick here, we're running tight on time here, but Sam just mentioned potentially raising rates. I know you suggested a hike might be the next move. When would you see that coming?
Yeah, 60% by December. I mean, I think, the CME Fed funds reaches are accurate. I like to think that's probably after the election in December, though not before it.
All right, really appreciate you both being here to preview the FOMC meeting. We'll get that decision later today at 2:30 Eastern. Will be the press conference there to follow. John Blank from Zacks Investment Research and Sam Burns from Mill Street Research. I want to thank you all for being with us, as always, on Trading 360. I'm Marley Caden. You can download our Schwab Network app. I hope you'll join me again for Market on Close at 3 Eastern, 2 Central.
Good job, Marley.
Schwab, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
8:30. The 7550s at 790 are now at 830.
Schwab coaching is concepts brought to life.
Showing a little bit of strength.
Schwab coaching is learning constantly.
It's relatable, it's practical, clear, understandable, and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to engage with you in chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We go and 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
What the heck?
Stay connected to what moves markets. Download
Seven-
the Schwab Network app
860.
and get live coverage wherever you are.
Right there. From 790.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. It's a noon Eastern coming up on here at the New York Stock Exchange, and Wall Street is range bound as
Boom.
investors await the latest decision from the Fed on interest rates, or rather what they'll telegraph. Let's get into a check of your scorecard as we hit the lunch hour on Wall Street. You are looking at an S&P
Today
500
is small
that
day
will
money.
change this afternoon. We are better by less than 0.1%.
See
The Dow
SP
continues to
SPY
rise
right
its
there.
record. We are well above 52,000 now, better by 0.4%. NASDAQ 100 has a gain of 0.5%. Russell 2000 is off to the races, rallying more than 1% right now. Here's the roadmap for today's show. We'll look at example option strategies for Intel. That stock's been gaining ground today. Plus, the team from Lightfolio will come along with new sentiment data on Kroger ahead of its earnings. And Microsoft is also on our radar today as investors try to read the tea leaves on headlines over its relationship with Oracle. Feels very he said versus she said in the headlines. Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. We've got Tom White in our Chicago studio, and Kevin Hinks also joining us live from wherever Kevin is. I joke. All right, guys.
Where is
So
Kevin?
We got Wall Street trading. We got Wall Street trading sideways today. It does. I mean, well, we've got still some momentum, even though we know we're bracing for the conclusion of the Fed meeting. It's not about where rates go because we kind of have a certain expectation there. But what does new Fed Chair Kevin Warsh telegraph from here? This is his first meeting as the head of the Fed, not his first meeting, obviously. He's been on the Fed before. But Tom, what's your take when you think about the kind of how the market is perceiving in preparation for the end result today?
Yeah, Diane, you know, he hasn't been on the Fed for over 10 years. I believe it's been 14 years. So a lot of things have changed. He had COVID come in there. So, you know, I think if you take a look at maybe the dot plots, the summary of economic projections that are supposed to be released, he probably won't provide a dot. He's previously stated that giving guidance on these dots isn't, you know, something that the Fed should do at this point. So maybe he has a discussion with the other Fed presidents and governors that, hey, maybe we don't need to do this anymore. We still have the SEP that's coming out on a quarterly basis. So maybe some guidance there. You know, one of the caveats that maybe he'll discuss is the balance sheet, right? What if he, you know, pivots and says, hey, we need to start shrinking this balance sheet a little bit? That might throw some volatility into markets, but we've seen some consolidation in yields here.
75.50s are at 930.
That's stabilizing.
Yay.
Retail sales data was above expectation, so the consumer's still out there spending. And
So these are the 79.30s right here. Or 75.50s. Called off this 63. I mean off the orb. Off the 21. Boom, 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 boom. Now you got a new high in that time frame.
and projections moving forward here for the economy. But that being said, we're starting to solidify up here a little bit. S&P bit relatively flat. NASDAQ higher with, guys, check this out, all 7 of the Mag 7 names are in the red right now, and we're still positive.
Well, some say it's the lag 7 now. Now, I can't say we could call them all that, honestly. But, Kevin, your take when you look broadly across the market as we prepare for the conclusion of the Fed meeting today?
You know, the first thing that jumps out at me after 9 of 11 sectors being up yesterday in the S&P 500, but the S&P 500 down because of information technology. Well, today, 7 of 11 are lower, but the S&P's higher. Why? Information technology's higher. But you've got industrials and financials also doing well. So it's a pretty solid makeup of the leadership here, but that's got nothing to do with what's going to happen the rest of the day. Kevin Warsh, I don't know how he's going to come out. Is he going to come out like a lion or a lamb? Is he going to, state changes in policy? And like Tom said, there's a new leadership at the Fed, and he's got different views about interest rates and the balance sheet and communication and how to measure data. And then here's something that we didn't think we'd be talking about. What's Jerome Powell's role going to be in this Fed meeting? Is he going to disrupt some type of Fed meeting? I don't think so, but you never know. He may dissent. We don't know what's going to happen. So I think there's a lot of chances for people to dissent and change and look around. I think there's, 2:30 Eastern time is must-see TV for these markets, because the markets could get really thin and whippy when Kevin Warsh starts trading, just because there's so much unknown about what he's going to say. How much of a footprint is he going to put on the Fed in his first press conference?
Down here. I don't know what's going on. I think something just dropped down here. All right, let's talk about some of the headlines we've been watching. This is on the U.S. versus Iran. We've got more headlines on the draft agreement between the U.S. and Iran. The latest is, according to Axios, the two sides are discussing moving up the signing of this MOU to as early as today. When I saw Wednesday, I was like, wait, we're at Wednesday right now. Tom, your take when you think about where things stand on that front?
Maybe additional volatility over the next couple of days if that comes to fruition. Now, it's a report out of Axios. Who knows if it's true or not? But if you look at the 14-point MOU that they've stated, Bloomberg reportedly came out with something. Iran, their news outlet, basically kind of pushed back against it. It's not accurate. So that rhetoric continues about what he said, what she said. What the two sides have come to any type of agreement on some of the aspects within this memorandum of understanding
my entry here
between the two. But President Trump came out and said, "Hey, if this is just an agreement," and then we started getting into more in-depth discussions. And hey, if it does not go right, we're going to go back to dropping bombs on Iran. So there's still that caveat out there for markets here. Now, the Dow hitting record highs today. The S&P down just over 1% from those record highs after the pullback yesterday. So, how much of this was already built into markets? I think that's one of the questions that traders and investors have to take a look at here moving forward.
Yep.
But I just expect some volatility, not only between what's coming out of the Fed, but maybe this deal getting signed, but is Israel on board here completely? There were some reports on drones flying over the straits. So yeah, there's a lot of minutia in the geopolitical risks and headlines that might come out over the next 24 to 48 hours.
Yeah, and that's the thing, like to your point about is Israel on board, though, it sounds like in terms of the U.S. side, that they're very clear on where they stand and want things to move forward as it stands with the MOU. Though, again, we're still waiting for some of the text. We've seen some Bloomberg reporting where they've seen some of the text. Kevin, your take when you think about what the latest and how you're dissecting the headlines on the geopolitical front between U.S. and Iran as it relates to markets?
Yeah, I think the headlines that President Trump made this morning were just his version of how he negotiates, and that is pressure. He says that this is not perfect. If we don't like this deal, we're going to go back to bombing. And remember, let's realize something. You're talking about a regime, a country that wakes up every day and says, death to America, death to Israel. I don't think that's going to change anytime soon. And so even though we're pressuring them into a deal because we're pressuring them, doesn't mean it's going to change the way they think about this country. I don't think this is going to be a smooth path. Now, I think the temperature, on a scale of 1 to 10, it's come down from a 9.5 to probably a 3, but it's not 0. And it's not going to be smooth. And I think there's still risk out there. But $75 crude oil and interest rates coming down, the market likes that part of it because, make no mistake, the last 2 or 3 CPI data numbers that showed energy jumping, guess what that's going to do next month if crude oil prices stay here? They're going to come crashing down that inflation. So it's good news for inflation. Kevin Warsh has lower interest rates than a couple weeks ago and lower crude oil than a couple weeks ago. So he's got a clearer path than he had about a month ago. So I think things are, much, much better than they were a couple weeks ago, but I don't think it's over. Diane?
Well, right now we have President Trump speaking on the sidelines of the G7 summit to reiterate what Tom just said. And this is what we saw earlier where he said, if things don't proceed in terms of Iran's side, that the U.S., quote, will go right back to dropping bombs. It is a memorandum of understanding. There is obviously some sharp language on the side of the president. The signing of the MOU would extend the ceasefire for 60 days and set up that framework for future negotiations. So we'll continue to watch the headlines as the president speaks right now. President Trump currently speaking. And let's get into one stock that's on the move, Broadcom. Those shares gaining ground today. Over in the analyst space, JPMorgan Chase says the market continues to underestimate Broadcom's, quote, significant dominance in packaging design, cadence of new designs, and its intellectual property portfolio. Tom, your take when you look across Broadcom.
Yeah, before this nice over 5% pop that we're seeing here today, the stock was in bear market territory, now down about 19% from those all-time highs prior to earnings. And the earnings were good, guys. And the caveat was that the guidance was lighter than what the whisper numbers and maybe the street anticipated moving forward. If you listen to some of the CEO comments, he wasn't probably as bullish or positive in his tones, and the market ran with that and started selling off the stock. Now, the stock ran into those earnings with the expectations of that beat that they got, but when you give lower guidance, sitting at all-time highs, this typically happens to it. But yeah, they kept their $580 price target. They to be aggressive buyers at current levels. If you listen to the hyperscalers and the broadening out of what a lot of these tech companies are doing as far as, these special integrated circuits and chips that maybe aren't GPUs and the demand in that space, that, hey, maybe the outlook's better than what the CEO gave at this point, but a pretty hefty price target here on Broadcom. But we did see a bunch of price target hikes, not only in Broadcom, but some of the semi-equipment makers, KLAC, Lam Research, AMAT also today, ARM Holdings. So yeah, a lot of positivity here today in the tech space as far as analyst notes goes.
And then, Kevin, your take on Broadcom.
I don't ever remember a time in my life where analysts and media and they constantly get it wrong, right? I mean, this is a JP Morgan analyst coming out and saying that some of these reports about a breakdown with Google and Broadcom are not true. And I don't remember in my career as much speculation that comes out inaccurate as before. This little sector of the U.S. economy with NVIDIA, Broadcom, AMD. AMD's a little bit of an exception, but NVIDIA and Broadcom, I've never seen two companies so unloved that numbers are so strong, yet these stocks can't catch a bid. Now, Broadcom's catching one today because of this note from JP Morgan, but I think the street, the market is saying all this stuff you're putting out, it's just too good to be true. And only time will tell if it is too good to be true, Diane.
Only time will tell. We'll see. Shares of Broadcom rallying 5.5% right now, so it has some momentum today. Let's talk about the flip of that momentum. Shares of SpaceX, they're coming back down to earth after a meteoric run since its public debut last Friday. And initially, that stock was looking higher, like it would add on to the momentum that we've seen. You know, the big gains that we saw out the gate, that nearly 20% move that we saw in its first full day of trading, and then further momentum. But now it's like we're seeing a little bit of flagging now. Tom, your take when you look across SpaceX?
Yeah, not surprising that we're seeing a little bit of a pullback here. It's only, what, 3% pullback as of right now, just above 195 bucks a share. But one of the more interesting things is, you know, options started trading yesterday, 1.7 million contracts traded on the session. That was third highest out of the big tech names, just below Tesla and Nvidia. But today, you're seeing more of a balance between call and put volume. Call volume is about 474,000 calls traded today. Put volume about 465,000 puts. So almost equivalent at this time. So maybe some people creating some hedges at this point. Weekly options start trading tomorrow in SpaceX, according to reports. So that might, you know, increase those volumes even more because they're only trading monthly options now. But you know, it's not surprising to see a little bit of a pullback after that, you know, a jump from the IPO price of 150 bucks a share. So, yeah, you know, this is going to be one of those volatile names. We talk about Tesla this way, and we have for years. The volatility, the beta that's in this name. SpaceX, because of the valuation levels, the hype around it, the global interest in this stock, I would expect beta to remain pretty elevated in this name, at least in the near term, if not the long term.
Great point, and you wonder if this will be one of those names that ends up being like Tesla, where you have very strong viewpoints on one side and very strong viewpoints on the other, lightning rod, you know, kind of points of view, and you know, some of that often has to do with the leader of both of those companies, same leader. All right, we'll leave it there. We've got bull versus bear coming up. The guys will get their example trades put together for Intel. That one's powering up today. We'll have more Fast Market after this break.
It didn't do what it's supposed to do yet. I'm waiting. Oh.
This is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
here on Schwab Network. Intel back in focus after announcing that its next generation 18AP manufacturing process has entered initial production. This is an important step in the company's effort to reclaim its leadership in chip making. Think of 18AP as an upgraded blueprint for building faster and more efficient chips, both for Intel's own products and for outside customers. The update is especially significant because Intel is trying to grow its foundry business and compete more directly with industry leader TSMC. There are reports that Google and NVIDIA could use Intel to manufacture future chips. That's boosted investor optimism. Now, with AI driving massive demand for compute, Wall Street expects Intel's data center and AI business to grow nearly 40% year over year this quarter. All right, time now for the tug of war on Intel. For that, let's welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. So before we get to your example trade, we've got to get each of your thoughts on Intel. The stock has continued to power higher. Kevin, I'll start with you. Your take.
Well, I look at Intel and I see the 1 year chart showing a low of 1897 was their low. It looks like the rally is about 460%. Obviously, the United States government has an opinion, $8.9 billion stake. NVIDIA has a stake of about 4%. Both of them have stock around the mid to low 20s in terms of the stock. And the optimism, Diane and Tom, is getting a bit expensive, right? It's Neiman Marcus optimism that we have right now in Intel. And I think they need a lot of good news just to keep the stock where it is right now. And so, yes, I believe that Intel is now safer than it's been. I just don't know how much of this good news is priced in and how much this stock has run past its value. So I'm very wary of how far this stock has run. They've got good news coming up. Is it good enough to keep the stock right here? I have no idea, Tom and Diane.
Listen, when I walked into a Neiman Marcus before, I love that analogy. I was like, oh, it just feels like a museum. I'm like, I can't touch this stuff. I don't want to break anything here. Tom, your take when you think about Intel.
Yeah, Kevin mentioned it. It's valuation. It's on the forward PE over the next 12 months. It's 100 times multiple. I mean, it's a lot more expensive on a valuation basis than AMD and especially NVIDIA, which, by the way, just turned positive on the session. But Intel coming out with this new chip, maybe trying to get Apple under its wing. Google Alphabet already said they're going to start buying chips from Intel. NVIDIA, they've invested $5 billion in Intel, along with that nearly 10% stake the government took. SoftBank invested $2.5 billion in the company. So there's been a lot of underlying positive tones for this company, but they're still losing money on their foundry business at this point. But this is trying to broaden out their customer base. Now, if you look at why the stock has had that parabolic move, since maybe March of this year, is the fact that CPU pricing has gone through the roof. Demand is skyrocketed at this point. Now, they, according to Mercury Research, they own about 67% of the CPU market at this point. But AMD is digging into that because just 4 years ago, that first quarter and 4 years ago, they had 88% market share in CPUs. And now, big brother NVIDIA is getting into the CPU market. So valuation's really elevated in this stock, but a good story here today based on the fact that, hey, if they can get Apple as a major customer, that would definitely help in the near term.
I like that characterization too, big brother NVIDIA. All right, let's get into the example trades for Intel. Kevin, let's start out with you. What's your approach today?
So with all the good news that's out in Intel and the news that comes out, it doesn't mean the stock's going up, unfortunately. All right, and we've seen that. There's often a disconnect between news and excitement and then the actual numbers. So what I looked at is the expected move out till next week, June 26th. About $14, I rounded that, and I looked at something in a 2-week put calendar spread. And so for $2.05 is what I put it in at. I'm buying the July 10th 105 put, and I'm selling the June 26th 105 put. And so just looking at where the stock is right now, using that right column on the Thinkorswim platform to help me with my strike selection. And Tom, I gave a calendar spread about $15 below, $16 below where the stock is trading. Gives you about 7.5 deltas. It's collecting theta, and it's long about 5, just about 4.5 Vega, Tom. So something where I can get directional P&L. I can also get long Vega P&L, Tom, because I don't know, they can come out with a lot of news that's all good, and it still may not keep the stock here, Tom.
Yep, yeah, let's break this one down. 23 days to expiration. Kevin went out to the July 10th weekly option series, bought the 105 strike put, sold that same put in the near term June 26th weekly options that expire in just over a week. Now, you're paying roughly about a 205 debit, so there's your risk, $205 for this downside exposure. And you can see here from the risk profile, it apexes out as far as profitability goes at or near the strike that you're doing the calendar on. So it gives you that downside exposure. But you've got a nice wide range for this stock to trade in to be potentially profitable. While 105 is the area you want it to go to, if it trades 110, 100, that's still in the profitability range here. You've probably got a range of about $95 on the downside, maybe 117, 118 on the upside. And Kev's trade is 2 weeks wide, right? So you'll have that opportunity or potential to roll that short option and creating credits. And Kevin, I looked at just the 1 week roll from the June 18th to the June 26th weekly options, and those are over $3.50 on at the money puts right now. So if this stock does fall down towards 105, those credits that you can collect on these adjustments really start to explode. That takes a lot of the risk, or maybe all the risk on it, depending on where the stock is and volatility levels. And that downside exposure, if Intel starts to fall a little bit, historically we'll see volatility expand, and because this is a long Vega trade, as Kevin mentioned, this will expand the price of that calendar also. So you'll get the double bang for your buck here, where, hey, if it goes lower, it's going towards where you want it to, towards 105, but then also if you see a spike in volatility, that might expand that price also. So giving yourself that downside exposure on this one. Kevin, I looked at something a little bit different here that is a little bit more passive, but it's capital intensive, because I looked at a cash secured put here, and I went out shorter term, just to the July 2nd weekly options, and looked at the selling the 110 strike put here. There's a cash secured put. The credit you collect is what you can make on this trade. $350 per spread. If you collected $350 credit on the put that you sell on the 110 strike in the July 2nd weekly options, it takes your break even down to 106.50 to the downside. Now, I mentioned that capital intensive, right? Because you've got a lot of risk all the way down to zero if the stock were to somehow go there. Not out of the realm of possibility, but not high probability that it will. But your max loss about $10,650 if it did go to zero for some reason. So Kevin, looking at this type of trade, it's a little bit more passive. I've got a cushion to the downside break even here. You got to be comfortable owning the shares, but at the same time, if you think like, hey, I wouldn't mind buying the shares if the stock does fall from these elevated levels, and you sell this put here, and even if it doesn't go below the 110 strike, you're still going to be profitable on this type of trade.
Yeah, I mean, the cash secured put has the same profit profile as a covered call, and the covered call has risk down to zero if you're long the stock. This gives you $10 in cushion, $10, $11 in cushion, where you can, the stock can go down and you can still be profitable in this trade. Now, if it were to go to 110 or even lower, yes, you can do one of two things. You can, well, actually one of three things. You can either take the stock, right, and your break even would be 106.50. You can extend duration if the market lets you, or you can close the trade if you don't like it. But this is one that it's collecting theta. It does have risk down to zero, just like a covered call strategy has risk down to zero. But it's Tom, the great thing about this trade is You don't enter at 110. You enter at 106.50.
Yep, and as you mentioned, the fact that, hey, if the market's open, you can close your put if you don't want to get assigned on that. If it does slip below the 110 level, as Kevin mentioned, you could extend duration, maybe roll that short put to another weekly or monthly cycle. That might actually collect credits if you just roll it. But you've got to be prepared to own the shares on this type of position here. So, yep, there's your bull-bear debate there in Intel, Diane.
All right, choose your own adventure. We've got cash tags coming up. The team from Lightfolio will be along. Take a look at Kroger ahead of its earnings tomorrow morning. Stay right here on Schwab Network. Fast Market will be right back.
I'm Sam Bart. Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
When you invest, you are not wagering on an outcome and walking away with either a windfall or nothing. You are a participant in wealth creation. Our purpose is to help investors build and protect wealth over time, not to make financial security feel like Las Vegas. Owning beats hoping. Discipline beats speculation. And the long run belongs to those who invest in it.
Welcome back to Fast Market here on the Schwab Network. I'm Diane Kinghall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, let's bring in our next guest, and that is Andy Swan, co-founder of Lightfolio, joining us today to take a look at Kroger ahead of its quarterly results. So Kroger, the shares, little change this year. I mean, we're off by 1% so far this year. So not a great year, not the worst year. But what does sentiment look like now from you guys' point of view, Andy?
Well, this is the most negative that our scores have been on Kroger in a long time. The trend is really the story here. The score's gone from plus 31 to -5 to -10 and now -25 over the last few quarters. And the big reason you can see in the Lightfolio demand chart for Kroger is just they're having trouble getting any traction at all. And, a pretty steady downtrend when you take the seasonality out of it. And then the big factor, I think, the big kind of yellow flag, red flag for me is when we look at Kroger compared to peers. You've got Dollar General up 20%, Instacart up 19%, Costco up 9%, Walmart and Amazon are positive, and Kroger is negative. And I have a feeling if we had Publix on here, it would also be quite positive. It's just dominating Kroger in every market that I've seen it go to. And so, consumers are trading down, but traditional supermarkets aren't necessarily where they're going. And then the top of the K-shaped economy is finding alternatives to Kroger as well. So we consider Kroger just kind of in that really tough middle spot here. And they've got a turnaround story that they want to tell, but the demand data, that we see on our side and in real life, talking with friends and family, Kroger is just on the decline right now, and it's a very difficult story to turn around.
Yeah, Andy, that kind of fed into my question on that. You mentioned the demand stuff. Your sentiment data is so much farther below the stock, and the stock's pulled back 19% from those all-time highs that we saw just a few months ago after their last earnings. Is maybe some of that downside, data that you guys are seeing already built into the shares on this nearly, bear market pullback that we've seen?
That's true.
Yeah, you would like to think so, but the truth is, I don't think that's
it's not true
yet. We continue to see a continued decline in our data that has been very consistent over the past year, quarter after quarter, lower and lower scores. The stock price has reflected that nicely. We don't see any signs of a turnaround, and we don't think necessarily that the stock market has fully caught up to the negative cycle, the negative feedback cycle that the Kroger customer is in right now, and the alternatives that they're finding. Once you switch grocery stores that your family uses, it's very difficult to get people to switch back. And so, we saw that with Target over the last few years as well. Not on the grocery side, but on the retail side. So this is a tough story.
It's hard to get away from the one that you bought so much from.
Stocks act like
it took advantage of inflation.
A little bit of a value trap. There's the PE ratios get compelling and low, but when the business itself and consumer demand are constantly decaying, then those low valuations tend to become value traps, and that's what we think we're seeing with Kroger right now.
Okay.
So do you think that there's a shift? Because when you look at your chart, consumer demand is very strong over $1 General,
gaps.
Instacart, and Costco and Walmart outstripping, but not to the same degree when you think about Dollar General and Instacart there. So is that the Kroger customer moving over to these names instead? Is that what's happening there?
Yeah, I think so. And just from personal experience, I talk to friends and family. When we got our first Publix here in Louisville, people went in there and they were like, this is the Chick-fil-A of grocery stores compared to going to Kroger, which feels like, the drive-thru at Wendy's, and it's a terrible experience. And that's the analogy that I started hearing. And people are driving past 2 Kroger stores to get to Publix, one of the Publix in town. So I think that this is a common theme. So people that are trading down that lower part of the K-shaped economy, they're going to the Dollar Generals, they're going to Walmart. The people that aren't as impacted are finding better experiences than Kroger is offering, and a lot of times that's at Publix and other smaller grocery chains. So Kroger's in a really tough spot here. I think they've got a new CEO. He's from Walmart. I think it's probably the right person, but it's still a very difficult job that's going to take some significant time to get a real turnaround for this company.
Andy, do you guys have any data about people, in this inflationary period that we've been in?
Well, it's a place where it needs to reverse.
Crack there over the last couple of weeks.
Right here.
As far as fuel prices and the stress on the consumer. Are you guys seeing any data where, hey, people aren't going out to eat as much and they're cooking more at home? Because that could actually provide a lift for a name like Kroger, right?
Yeah, and it's kind of weird because our data says the exact opposite. That people they're door dashing a lot more. They're eating out a lot more. They're actually relying on the grocery a little bit less, which is counterintuitive. But I think it kind of comes down to the point of this is one of those experiences that people want to keep.
These are the 7550s at $7.90
on a new car, and instead keep their entertainment and eating out type of stuff. They might cancel the Caribbean cruise.
Cancel your mouth if you keep talking negative. The 7550s dip down there to a double bottom off the red line, back to the orb on the SPX. 790 doubled down. Now I have 2 of them, and they are at 840. Now we could break this resistance, and that'd be all it would take. This is on the 1 minute. It's a wall. We broke the 63, but we got the 200 EMA and this 21. Does he even know what he's saying? Yes, I do. How dare you? This thing can drop like a rock. So I'm debating on taking it a loss, or taking it out for a take a loss, boss. Eyes. Okay, you're back at $8. This is tough. You can do it. See, just like that. Didn't want to break the wall. That kind of sucked. Yes. Ooh. Damn. Didn't see that coming. Well, there's your big red candle. I said it might come. Yeah, there's solid support.
This, you know, if that sets up with like Folio's data, that'd cost you about 30 cents to do a 1 week wide put calendar, and that would give you exposure to the downside. And Diane, if you don't have a preference on whether it's going to go higher or lower,
Did you just go to 720?
About that one standard deviation that the option market's priced in, you know, $3 in either direction, then you could do a double calendar, just combine them both. But Kevin's example here to the upside. Low risk exposure with that call calendar.
I like the way you guys did that one. Kevin took this ended up being a bull bear debate essentially because, you know, you're taking into account that like folio data and adjusting if you are bearish for this example trade. Thanks, guys. We've got the breakdown coming up. George Solis
Look
will
at
join
his
us
bullets
today
now.
at Microsoft after reports have walked away from a $3 billion Oracle deal, only for Oracle to deny that report. That's next on Fast Market.
790 is even. Are you gonna sell? No, I'm not. It's 11:44.
The Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Hi, I'm Alex.
I'm Jane.
And I'm his mom. Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall live on the floor of the big board. Before we get to the breakdown, let me give you a check of where markets stand as we get closer to the bottom of the lunch hour on Wall Street and closer to the end of this latest Fed meeting. Chair Kevin Warsh's first meeting as the head of the Fed. The S&P 500, little change right now. We are flat, up by less than 0.1%. The Dow has a gain. We are better by more than 1/3%. So similar price action to what we saw earlier in the hour. NASDAQ 100 also better by 0.4%. The Russell 2000 higher by more than 1%. Investors also continuing to try to read the tea leaves on the latest between the U.S. and Iran. We've seen a report in Axios that we may get a signing potentially as soon as today. We shall see if that's what comes to pass. Other than that, the reports we've seen have said the signing of the Memorandum of Understanding between the U.S. and Iran will come on Friday. We'll continue to bring those headlines as we get them. Time now to break down the competing headlines hanging over Microsoft today. That stock was initially dinged after a report from Business Insider said that the company walked away from a $3 billion deal to lease Oracle cloud capacity over security concerns. Oracle hit back to that report via Reuters, saying that report of failed Microsoft cloud talks are inaccurate. An Oracle spokesperson said, quote, Microsoft is both an OCI partner and a customer. We have a tremendously collaborative and fruitful partnership where we often talk about ways we can expand upon our ongoing work together, end quote. Still, shares of Microsoft are under pressure. They're down more than 2% now. Stock has fallen about 20% on the year. Time now for the breakdown. For that, let's welcome in George Solis, senior markets correspondent, to take a look at Microsoft today. So even though you've got competing headlines where Oracle's trying to push back, it feels very he said, she said. The market seems to be paying more attention to this Business Insider headline. How do you make sense of the price action, George? How do you break this one down?
Well, I mean, this is interesting because, for all intents and purposes, if you look at things like valuation on Microsoft or even the analyst ratings, the mid-target rating for Microsoft is around 560, the high target around $870. Stock is trading around $385, so something is amiss with Microsoft. I think the Oracle news and Microsoft back and forth based on this $3 billion deal that may be put on the back burner for now based on government security concerns is really a small issue, to be honest with you. compared to some of the bigger issues that are going on in the software space. Microsoft does own about 30% of OpenAI. And you also have to consider that OpenAI's deal with Oracle is still very large. So my point is that both these two behemoths, Microsoft and Oracle, are deeply tied to OpenAI. So for what it's worth, I think that's a challenge. The other thing is the software narrative is still putting pressure on Microsoft, as well as Oracle, as well as the rest of the group, which includes, other enterprise names like CRM, ServiceNow, many of which actually started falling once again in early June quite a bit. If you look at Microsoft, it really did try to breach the 200-day moving average above the 460 area, but since then, and this is again in early June, it's just been a waterfall to the downside. I think the other thing that's going on with Microsoft, there's a few things. Copilot. If you look at the data on Copilot usage rate, out of the 450 million subscribers of Microsoft 365, only 3.3% use Copilot. That's very low. If you look at Google, for instance, Google is making a lot of headway into custom silicon, as well as spending a lot on CapEx. Microsoft is spending a lot on CapEx, but not necessarily moving in the realm of custom silicon. CapEx for the business, $190 billion this year, 61% higher than last year, and also significantly higher than the $154 billion they estimated to spend this year. And I do think also, if you look at what's going on with Microsoft, that spending also comes inclusive of a lot of component inflation, as well as, again, the agentic AI competition race is creating problems for all software names. So, like I said, irrespective of what's going on with sales and earnings, which are still robust, 16% sales growth, 22% earnings growth, profitability is a lot higher. The earnings multiple trading around 22 times next year's earnings. One would say that's fair value, but in this market, the software names are just not getting attention from institutional investors and have been selling off aggressively.
So there are some analysts who though say there's opportunity here. You mentioned, of course, that Microsoft tried to bridge that 200-day moving average. Is that what to pay attention to next? In other words, if they can claim that and continue past that in terms of the bullish viewpoints on Microsoft?
Yeah, I mean, look, short term, you look at the 50-day moving average, it traded above it, going back to, let's call it March, April, then it reclaimed the 200-day and then failed it. And it failed actually both these moving averages in very quick fashion. So I think that speaks to the movement we're seeing of capital in the mega cap names from one to the next. It could be a function of, the CPU companies, the hardware companies or silicon companies, AMD, Intel drawing a lot of capital away. Also, the nature of agentic AI and the uncertainty around how software companies on a traditional basis are going to integrate it into their business models. Like I said, Copilot has not been successful, at least so far. And it's been very expensive for Microsoft to deploy it, and they're not getting a return on it. And for what it's worth, again, unless the stock is trading above its 50-day moving average at the very least, and the slope of the 200-day moving average is moving positively, the stock is under pressure. There's no other way to put it.
Yeah, there is. All right, thanks, George. That's George Hill, senior markets correspondent, with the breakdown on Microsoft. Those shares trading lower by about 2.5% right now. Let's get Tom and Kevin back in here for example trade purposes. So, Tom, this time you've got the example trade. What's the approach to Microsoft?
Yeah, the stock's been in the penalty box for sure. I mean, it's up 30% from those all-time highs, and they're all-time highs. Even if markets are at or near all-time highs, Microsoft hit an all-time high last summer, about $555 a share. So we've seen a significant pullback into bear market territory for this name. It's just struggled. Before that uptick that we saw earlier this week, I mean, this stock was on like a 7-8 day losing streak and pulled back pretty significantly, now down about 14% so far just this month alone. So I looked at a strategy. They report earnings at the end of July. So I wanted to look into that. If you think it's going to rebound into those earnings while avoiding that earnings event, I've got a strategy here that gives you upside exposure as an example. I went out to the July 24th weekly options. Those expire in 37 days. And we're going to buy a bullish call vertical. Looking at buying the at-the-money 385 strike call selling the 415 strike call. $30 wide, bullish call vertical. You're paying roughly, we've got 1060 debit here on it. It's trading closer to 980 now because the stock has pulled back even more from when I looked at this before. But the debit you pay is going to be your risk. So if you pay 1060, $1,060 in risk, that can expand to over $3,000 if it does go back above 415. If you pay 980 bucks in risk. So keep that in mind. The debit you pay is going to be your risk. Now, if we pay that 1060 debit, that's your risk, but it takes your break even up to 395.60 to the upside. That's only 3% above the current share price in Microsoft. So you're giving yourself over a month in this position for the stock to go up more than 3%, starting to get into that profitability zone. But Kevin, pretty good risk reward setup, but you definitely need to move to the upside to start getting into some profits here.
Yeah, Tom, if you can get this spread for under $10, you've given yourself some duration. You know when the earnings are. I mean, if you're looking for any recovery in the software sector, then this has a chance for a triple, right? It's risk defined. You know what your risk is. It gives you upside deltas, but look at the chart on this on this stock. It is ugly, but it's Microsoft. And Microsoft is probably going to figure out their path along the way. Do I know? No, I don't. No. Software stocks are under pressure, but this stock, in a risk-defined manner, gives you a chance. If you get the move, if your direction is right, you get a payoff of about a triple, Tom.
Yeah, and at the beginning of June, this stock was trading, hit a high of $466, so it's pulled back pretty significantly, but it does have that ability to go higher on this, and maybe a reacceleration in some of their cloud growth that was for Azure was only 29% last quarter. But giving you upside exposure, Diane, you don't need that big of a move. You get over a month in this trade, and then also that 415 strike on this stuff. The upside where you get max profitability, that's about that 1 standard deviation move that the July 24th weekly option series is pricing in at this point. So if you get that move, that's max gained for you above 415.
All right, example trade there from Microsoft. The pressure on Microsoft comes even as the market continues to grind higher. Investors continue to keep one eye on President Trump, who is still speaking at the G7 summit. Among the headlines coming out of that, President Trump saying U.S. only lifts Iran oil sanctions if they do things right. He says if Iran isn't behaving, they will get hit again. So a lot of pressure on and all eyes on the U.S. as we get closer to a MOU between the U.S. and Iran. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hanks and Tom White. You got Next Gen Investing with Alex Coffey and Jenny Horn up next.
What is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience. They help me fill in those gaps as an educator.
People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
You can do it.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Better not have. Don't trust them.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time.
Come on.
With speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data,
Outside,
veteran
not
traders,
inside.
and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere. SchwabNetwork.com. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Welcome to Next Gen Investing, and of course, happy Wednesday. I'm Jenny Horn alongside Alex Coffey, checking in on markets here that actually have seen a bit of a pullback in the S&Ps, while we're not really seeing that same pressure as, of course, we look at some of the other indices like the Russell 2000, which is actually up about 1.2% today. So furthering some of this rotation narrative, as of course, we do have that Fed rate decision coming now just within about an hour from of course, right now.
Yeah, for the first time in a while, it seemed like you've had a moment over the last several hours to catch your breath a little bit. And if you wanted to move some stuff around, the markets have sort of been drifting. That would be the word that I would use. I don't know that that will hold all day long. It just seems like there's a bit of angst and maybe anxiousness just to get through this Fed meeting. Not that there's expected to be fireworks or big changes, but there's just this uneasiness of uncertainty. And it's not a bad thing, but uncertainty, of course, leads to kind of indecision. And when you have indecision in markets, sometimes just nothing happens.
That's true, and that's sort of been, I think, a good way to characterize today's session, as we've sort of just drifted as we do await to hear from, of course, the Fed on their decision at about an hour from now, but then in about 90 minutes, we will hear from Kevin Warsh for his first time taking the helm as, of course, the federal chair. Overall, just the really time we'll get further clarity on his narrative and really what he expects as far as policy and rate decisions as we approach the back half of this year. And so I do think that this will be an actually really interesting presser as far as the Fed chair announcements are concerned, just because we don't really know. I mean, I know we've heard him commentary, we've heard his narrative, but it's his first time really addressing all of the questions and commentary from these market participants.
Yeah, exactly. I think that's the thing. You know, and I heard former Fed President Robert Kaplan earlier on an interview kind of laying out what he anticipated might be sort of the way that this press conference could go. First off, it'll be a discussion of, hey, what did they talk about in the meeting? And that's pretty natural. Sometimes you see that in the press statement that they provide as well. Then it might be a little bit about just generally how does Kevin Warsh assess the economy in real time. But then finally, and I think this is really where the uncertainty lies, is going to be sort of the philosophy of which a Kevin Warsh-led Fed might actually look. And does that mean a little bit less visibility, maybe less things like the dot plot, or less sort of jawboning expectations and a little bit more kind of behind closed doors discussion and kind of truly a meeting of the minds as opposed to a constant sort of moving of market expectations. Look, I don't know what's going to happen, but that's why it's fun. That's why we talk about things like this.
That's true. I guess we get to sit here and talk about expectations all day long. We will at least finally get some clarity and some numbers to all of the various
narratives in just under an hour from now. So as always on the show, we'll kick things off with some of these movers to keep on your radar, especially as we do see this sort of pause right now in overall markets, it seems. Well, I will say, though, that all of our stocks that we're looking at the top of the show today, every single one of them, the average price target amongst analysts actually would imply weakness, despite the fact that some of these are really our market leaders as far as AI is concerned. So we'll start things off here with Intel. As Intel did announce beginning production of its most advanced chip node, bringing the company then one step closer to a possible deal to make some chips for, say, Apple devices. So they did announce they're making their new chip node 18AP in Honolulu on Tuesday. Its foundry head did say this development is a signal to Intel foundry customers and partners that they are fully committed to leading-edge process innovation over the long term. But right now, this is in the risk production phase, which is an early production stage where data is indicating it will be able to meet customer requirements upon its final qualifications. And after years of missteps, Intel did tout 18A as a key turnaround that would finally convert the company into more of this competitive chip manufacturer for its non-Intel products. Bernstein addressing this, actually raising its price target on Intel shares to $100 a share from $65.
Yeah.
Market performed ratings. They
You know it can be
believe
done.
The company should benefit from
Oh
stronger
gosh,
server
look at here.
demand. So this name commands, widely about a hold consensus. If you take the 50 analysts polled by FactSet roughly, there's 32 holds, there are 13 buys, 3 underperforms. There's no outright sells, but the majority of the analysts right now that cover this name do definitely have a more reserved tone still on its conviction going forward.
Hard market for Jimmy trade.
This is, I think this is an important story because a lot of Intel's story, at least over the last year, has been promising and finally being believed. Where a lot of the 10 years leading up to that were a lot of promises that the market wasn't so sure about. And so this is a meaningful step forward, but kind of hidden within this is the reminder they have still not officially secured any real external foundry clients of any significance. And this is not a stock that is trading at multi-year lows. I mean, the stock has gone like 5x in the last year and a half, and it's off its highs. So it's not just price for a turnaround, it's price for winning market share and becoming a player in this space that is so dominated by TSMC. Look, there's certainly demand for it, but a company like Apple, a company like Google, a company like NVIDIA that relies on scalability and high quality and efficiency and making things on time, Intel hasn't done anything that really proves it can do that yet. And so for these big companies, Apple's the one that's being floated with this story as like, oh, is this a move for them to get Apple business? Apple's not going to divert capacity and attention to an Intel until they're certain Intel can deliver.
That is very true, and I would say that, again, after having broken up as far as Intel producing Apple's chips for its MacBooks and various computers, it would be an interesting move of Apple to go somewhat back on that more in-house stance that it took upon several years ago, is, of course, developing now its own chips and its own really advanced chips for some of these processors within their computers and personal computers. But now to look at one of the close rivals to Intel, at least as far as the market reads, and that's AMD, which is also up today, not as substantially, but another 2.7%. Mind you, after falling nearly 7.3% in Tuesday's session, before now seeing a bit of a bounce back. So Bernstein did raise its price target to 600 from 525, kept an outperform rating as they believe the company should benefit from this stronger server demand. And their existing AMD model is already consistent with stronger server CPU environments and estimates that are moving more marginally. It does also follow this new AI infrastructure agreement, which we did discuss actually on the show yesterday between AMD and Rackspace that have signed a definitive agreement to deploy an initial 30 megawatts of AMD-powered AI compute across Rackspace's data centers from 2026 to 2028. And so the deployment does formalize the moratorium of understanding that was previously announced back in May. It will be combining AMD's Instinct GPUs and EPYC CPUs to then help power Rackspace's enterprise AI cloud for some of these regulated industries like healthcare, for example. And so AMD, bit of a different analyst story. We do have 44 buys, 9 holds, no bears, no underperforms, at least, again, per FactSet. But right now, the average price target is $469, so that does imply some downside from where we are currently trading, but 600 does definitely put them at the higher end of the analyst coverage here.
Yeah, no doubt about it. And so sometimes I kind of go to it and say, is that story one of a stock that has gone too far too fast? Or is it a story of sort of stale price targets that haven't been updated in a few months, dragging down that consensus rating? And maybe for this stock, it's a little bit of both. Because if I just looked at the 12 analysts that Bloomberg had listed that have updated their price targets in the month of June, so let's say the last 2.5 weeks, the price target consensus of those 12 is about $550 per share. Of those 12, I only see 2 neutrals. The rest are buy or outperform ratings. And so they're bullish, let's say. Well, even at $550 per share, you're only implying $30 more of upside. So, that's less than 10% for this stock. If you're overly bullish with as much volatility as AMD carries, is the juice worth the squeeze if that's where you think it's going to end up? So I think it's a little bit of both. There are some stale price targets, certainly, that are dragging things down, but this is also a stock that has been on an incredible run.
It has, and I mean, both of these names, frankly, impressive. AMD now up 144% this year, and we pulled back now about 6.5% from highs that were made actually just 3 sessions ago. But now to shift our attention to Jabil, which is actually an earnings mover today. Now we have seen some of this strength, erased here in real time. We have pulled back even from these highs made earlier today by about 10%, while still remaining up about 2.7%. And so where this company falls as far as its push into AI, it is a contract manufacturer. It designs, builds, and delivers tech products to other companies. So they're more of the behind-the-scenes builder, if you will. Say like Apple, cloud companies, automakers, or industrial firms come up with these products. Jabil does help actually make it at scale. But now, interesting enough, building hardware tied to AI data centers and infrastructure. So as a result of this, we saw a clean top and bottom line beat, strong AI-driven growth, and raised guidance. Revenue rose 12% year over year. Management did continue to highlight this extremely strong AI infrastructure demand as really the key growth driver, as well as improving fundamentals across their segments with stronger performance in these previously weaker areas like automotive and connected living. Margins and profitability also held up relatively well, and they gave a pretty strong forward outlook with adjusted earnings that are considerably higher, expected at least now, above expectations on revenue of $35 billion for the year. Previously, it was expected around $34 billion. So the growth is increasingly tied to AI infrastructure capex. That does create a degree of concentration risk, but the key debate is really about the sustainability of this AI demand versus its valuation and margin profile. I will say a lot less coverage on this name from a sell side perspective, but the average price target right now, around 367, does imply some modest downside from where we are currently trading at just around 385 a share.
This is a really fascinating company because we talk about names, and this is not the first time we've discussed this name, but you might type it in and say, oh, JBL, Jabil. You might say, oh, it's a manufacturing company. Like, I wonder, how big it is, let's say. I don't talk about that one much. $40.5 billion, 135,000 employees as of August of last year. There are so many names and so many companies nowadays that do not get discussed at all. And when you think about how big they are, this is a massive company that employs a massive amount of people, and you could borderline call this an overlooked stock.
I know. It's also up, 69% nearly on the year. And I mean, making new highs today, pulling back. Like, we're even seeing the volatility from just an intraday standpoint be pretty amazing. A name that's now climbed 96% nearly over the last 52 weeks. And I think it's fascinating the way that it falls in the supply chain. But we talk about so many of these like AI plays. It's almost like there's so many that you even forget about that are massive companies.
Yeah, this is like shocking because like $40 billion. Look, I know that there's names that are trillions of dollars now, but this is not small. I mean, any company that employs thousands of people is a big company. Hundreds of thousands of people. I mean, this is a very important company headquartered in St. Petersburg. I love to call out the near 70% rally that we're seeing already this year, but just a monster company that overlooked as it may be, but really impressive move once again for this stock. And doing so in a day, again, where the market's kind of drifting and it's just sort of, having a little bit of a moment to outperform. But let's close things out with ARM, because in many ways, I would argue that this stock is as big a part of the story as this Intel news that we got, because a lot of the discussion is, okay, Intel, great if you can do all that, but can you do it with sort of the ARM-based technology, because so many of these companies are plugged in with ARM.
They are, and I will say ARM is actually, of the bunch, our best performer on a year-to-date basis, now up nearly 290%. And so to accommodate this, we are seeing analysts update their price targets, like Bernstein raising its price target pretty substantially to $500 a share from $300. That does obviously imply at least upside from here. But they do believe that ARM is the structural beneficiary of the renaissance of CPUs for agentic AI. They went on to say that this architecture is suitable for the agentic AI workloads given its unparalleled power efficiency. And in addition, ARM is shifting from just an IP provider to a CPU maker, aiming to capture roughly $15 billion in revenue by year 2030. But they now forecast roughly $22 billion as they do revise their CPU total addressable market to roughly $223 billion by year 2030. And so no surprise to see that the analyst community does favor a bit more of the bullish skew here. There's 25 buys, 13 holds, but there is one underperform and one sell. And the average price target from here does imply 38% downside at $259 a share. And so it's amazing. This is now at least on par with the street high target at $500, but ARM is also expensive. It trades at a forward PE right now of 191 times. Yeah, that's a really, really good point and a good call out. And I'm just looking at the names. I didn't do the math ahead of time, but if you look at just the analysts since June, I mean, there's a ton of them in the 100 handle. There's a 94 handle here for this stock. So this is absolutely not a story of, hey, this stock you just has some stale price targets. There's some doubt surrounding what this stock should be trading for, and incredibly, it traded $100 a share back in February. So for those who are willing to step in to this name and sort of the onset of the conflict in the Middle East and sort of the peak uncertainty, I would say, for markets in 2026, and still have those positions, massive performance since that moment. Yeah, and it's really been incredible to see. I mean, ARM also has had like really nice moves in the back of earnings. Now we have seen some pullbacks, but I mean, still really healthy uptrend as far as its 250-day moving averages are concerned. And again, an expensive name on a forward basis, but hey, many could argue that the growth is at least anticipated there on a forward basis. But we'll leave it there for the top of our show today. Now, coming up next, time to talk two other names that have been on a run as of late. Micron and Western Digital have been two of the biggest winners in the memory trade, but after massive moves in analyst targets that do now imply further downside, is there still room to run? Kevin Horner joins us next with the charts and some key levels to watch going forward.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls,
Your fancy coffee, your giant TV.
it's everything in one place. It's like
Schwab. Everything investors need,
all in one place. Come again?
Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now.
Invest your way with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Yeah.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Very good.
I'm Kevin Green, and I track options flow daily.
Blah, blah, blah.
Who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Next Gen Investing. It's now time for the Chart Master, and today we are talking to 2 of our leaders in broader AI and tech, but within the memory space, of course, Micron and Western Digital. Joining us now for a fresh look at some of the technicals to keep on our radar is Kevin Horner, Senior Manager of Trading Services at Charles Schwab. So, we talked 2 big winners of the year. Micron has been an impressive name, and today it's no exception. We're up another 4% today.
Yeah, it's been fantastic, obviously. We've been running beautifully, working against a 20-day moving average here on the daily chart. I've drawn that in at 930. Obviously, that's about 130 points of risk for a short-term trader looking to balance it against the trending moving average, but not to be terribly concerned about it, because we've also got some horizontal support in here at this gap ledge. So today's low is real interesting to us. We've got that test of support at the gap, challenge now coming in, a beautiful hammer candle. We'll see if we can gain any additional clearance here the remainder of the session. But I thought the daily chart on this was pretty instructive, but perhaps not as instructive as what we're seeing on the shorter term time frame here, Jenny.
Yeah, and so walk us through that, because I do think that with a name that is as volatile as Micron has frankly become, each day is almost like a week packed into one. So what do you see from, again, more of that short term hourly time frame?
Well, as always, it's important to evaluate trends over multiple windows of time. And what I've noticed here in particular is we recaptured or grabbed hold of it with conviction, the 100-period moving average on this 4-hour block back on April 8, which is coincident with the market's improvement when the broad indices all recaptured the 20-day moving average. So we've been riding that up beautifully here. As you can see, we've got a clear test of support right here. We've got another test of support right here along that same 100-period simple moving average, and horizontal support at 875. We have managed to slingshot off of all of that to make this brand new all-time high there in Micron. And now you've got a short-term test once more. There's that breakout level I mentioned, that gap zone, and we came down, tested it intraday. Now, if we get possibly dovish commentary this afternoon, this could lead to new highs in the near term.
It definitely could. So a lot does hinge on, of course, what the Fed does say and what's really next as far as overall policy is concerned. But Micron has been, frankly, an impressive one to watch in memory, and I would just say the overall market at this point. So now, as we do look at trading Micron for example purposes, The one caveat is it does feel like the price targets, again, as we discussed in the top of our show, have not caught up, where the average price target does imply right now some weakness, but we did see at least a fresh $1,200 price target, which is actually well below the high, which is just over $1,700 a share.
I really appreciated how Kevin showed that this stock hasn't been a straight line. It has had tests, but largely it's held support, and that support has been upwards trending. And so if that same style of trade for Micron persists, something like a neutral to bullish short put vertical below the market could play out nicely as an example strategy, and that's what we looked at here. So if you use that moving average like Kevin showed as a potential support zone, this is below that, giving it some room to continue to test that support as it continues to potentially trend higher. So in this case, it just goes out to the end of next week. It's a relatively short-dated trade. It's a June 26, 9:59.45 short put vertical. So it's your minimum quantity rather in terms of distance between those strikes, allowing you to control the risk, be a little bit smaller in a stock that continues to become more and more expensive per share. But say you're able to collect $1.70, you can see that max profit over Jenny's shoulder there, 170. Break even would be below the market's current price at 948.30, and a max loss of 330. And so with this trade, it's neutral to bullish, looking to continue to kind of ride the momentum that we've seen with Micron.
And of course, we get earnings on June 24th, and so that will be something, as they do report late in the cycle, but a very critical event still nonetheless. But as we look to one of its closely linked to memories and storage peers, we look at Western Digital, which is actually frankly even more impressive when you look at, say, the last 52 weeks, and I know that that's even amazing to say we're up something like 1,100%, but walk us through what you're seeing as far as this recent chart and what sticks out to you.
Yeah, a lot of the same stuff on the Western Digital chart, of course, Jenny. Now, we're in a 6-month window in lieu of the 1 year because I didn't feel it was necessary to go back 6 months prior and show those low-level prices that aren't participating or giving us any value here today. So what we do have is a lot of the same stuff. 20-day moving average test, 20-day moving average test, an incredible strong move here straight up into the 730 new highs that we created this week. Now the question is, of course, do we maintain that level? Where can we get the pullback in the interim and in the short run? And that's going to be potentially very deep, obviously at the 610 level, which was prior highs, and then we slingshotted through it. So now it becomes a question of where can we manage short run trading, short run support.
Yeah, and I think a good point there. And also when you assess different time frames, I'm sure very similar themes, but unique to Western Digital than what we just looked at with Micron here. So what do you see when you zoom in and look at, say, more of that near-term intraday time frame?
So we've zoomed into a 30-day window now, still utilizing 4-hour candles on this. Down below, once more in blue, we've got our 200-period simple moving average. We exploded off of this, Jenny. This is mid-June, like June 9, June 10, and we've gone up 50% from there. That's been an immense rally. Now, short-term, we're watching this 20-period simple moving average. All of this volatility in here was telling us that we needed to figure out price, get that value, or get the price validated here, essentially. The fact that we have held that 20-period SMA the entire way stands out to me because this is almost vertical, and even though it was vertical, we managed to basically build a little bit of a pennant in here and took that out to the upside. So once more, as stated as it related to Micron, dovishness out of the Fed today could lead to new highs through that 730 level that are all-time highs on Western Digital.
Yeah, wouldn't be a bad place to break out from, of course, 730 and some change would be then making a new all-time high for a name that's ripping, up 6.3% today. So no sign of sluggishness for Western Digital or, frankly, Micron, but so appreciate it, Kevin Horner, for all the technical help and setup today. Now, as we do think through trading this name, again, for example purposes, Alex, leading into, what has been a really strong bullish trend, really since even just, earlier this month.
Yeah, so this is an example, in this case, a little bit more bullish, needs some upside, but constructed in a way for those thinking more highs on the way. It's a call butterfly spread, again, just going out to the end of next week. But in this case, the idea is to risk a little with a chance to make a lot on a relative basis. And she'll see that over my shoulder here, the max loss being 200, and of course the max profit being 1,800, break even 732, 768. So how do you get that? Well, you go to the next week expiration, you would buy one of the 730 calls, sell two of the 750 calls, and buy one of the 770 calls to round it out and define the risk. So it's a butterfly spread, and the best case scenario is they move right to the short strikes like it is with many option strategies. And so you see that peak out at 750. So that would be your scenario where you make that 1800, not the highest probability event. So really what you're looking for is a move into the profitability range and then a chance to, as it gets closer to expiration, potentially close this out with an offsetting transaction for more than you paid. So most traders would go into this, say they establish this trade at a $2 debit, Jenny, they would have a price in mind. I can't say what that would be. It'd be individual to each different trader, but they would look to close this before expiration more likely than not, and ideally for a profit.
Yeah, and obviously we would be hoping for some further upside from here, although this name has been kind of an unstoppable force. Obviously, we could see if, though, the Fed changes any of that sentiment, but it does not seem like much can get in the way right now of this momentum. But we'll leave it there for Chartmaster today. Coming up next, it's time for FOMO, and we're looking at another tech play that is also ripping today. Broadcom's up now 5.3%, as JP Morgan says that right now they would be aggressive buyers at current levels, and they see 25% further upside.
Earnings breakdowns and hot takes that teach you about stocks and markets. Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met him 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back. It's now time for FOMO, and Broadcom is in focus after JP Morgan defended the stock and pushed back on concerns around Google's TPU program. So for more on this call for another 25% further upside, we're joined by Jeff Pierce, Senior Manager of Derivatives Trading at Charles Schwab. And so Jeff, walk us through this development from JP Morgan where they are saying, hey, you know, we are not seeing this as a major competitive threat, and actually that they quote them to say that they're aggressive buyers at current levels.
Yeah, those are some big words, especially after we've seen the stock, you know, hit those all-time highs in early June, pull back aggressively. Post earnings, some of that might be profit taking, but a lot of it has been around the debate on whether AI growth expectations are going to continue as aggressively as they've had. To your point, they reiterated that overweight rating. They maintained that $580 price target. JP Morgan seems to believe that their dominance, Broadcom's dominance in the AI packaging, their custom AI chip design capabilities, their intellectual property portfolio, and more are all reasons to be bullish on the company. It really addressed some of the major concerns that we've seen. Obviously, some of the selling post-earnings is because of the growth we've seen in these AI names and concerns about valuation. But one of the big concerns that I think was addressed a little bit in this note is the Google side of things. So there's some concern that Google's going to be looking to diversify who they're utilizing. This narrative says that even if they were to start adding suppliers, they're not replacing Broadcom, and everything is on track in terms of their program.
Jeff, you and your team, you speak with clients, and I'm sure you see sort of themes, types of companies people bring up, interest in different things. And, I've sort of noticed just performance-wise, amongst the semiconductor names, it's almost been like a relay race where, for a while it was NVIDIA, it was Broadcom, it was AMD, and it's like they passed the baton on to Micron and Western Digital, two names we just talked about in the last segment. From a client interest or just the discussions you have with Schwab traders, is Broadcom still a name that gets a lot of attention, or have they moved on to other names?
Yeah, it's a really interesting question. Certainly investors are looking at more and more angles and different companies to be involved in this AI play, right? It's not just about chip making, it's not just about chip design anymore. That said, Broadcom is certainly still a name that you hear a lot about. I mean, obviously they're one of the largest beneficiaries of the AI spend we've seen out there. We're seeing that in the earnings report. I think what investors are starting to look at and really question is, we see these really strong Q1, Q2 reports. I mean, if you look at AI revenue just in the last report, it was up over 143% year over year. They're wondering, why is this stock falling? And again, it's coming down to guidance and really overreaching. The expectations are sky high for this stock. And investors want to know, is there a risk to play a name that even they may feel strongly has really created a niche for themselves?
Yeah, and so I think it's interesting, especially as like this looming threat from, say, Alphabet and its GPUs and how that competes with Broadcom. I mean, if there's all this unprecedented demand, if CapEx is at record levels, which it is, and AI is building at a pace we've never seen before, I mean, wouldn't this be like the rising tide that lifts all boats, and perhaps not necessarily one winner in like the GPU or the more advanced chip space?
Yeah, if you look at it, I mean, you would think that certainly would be the case. Again, as you look at what the expectations are, investors saw a great report, last report. They saw guidance at $16 billion on AI revenue. They saw them reaffirm that long-term $100 billion AI opportunity. But again, many investors wanted they wanted above $16.3 billion for that AI revenue. They wanted a raise on that $100 billion AI opportunity forecast. So it becomes, we're seeing really great quarters, we're seeing really tough expectations, and so investors are again trying to find a place that they can safely benefit from AI.
All right, and Jeff, you got an example trade that you were looking at here in Broadcom. Stock's been under a little bit of pressure, let's call it, over the last several weeks, but all in all, still a really, really nice performer as you extend out time. What were you looking at?
Yeah, under pressure, it looks like this thesis coming out of JP Morgan might be partially tied to that, right? So is there an upward opportunity with that in mind for the trade, example trade here? I set up a bull call spread, buying the one of the AVGO August 21 400 strike calls, selling one of the August 21st 500 strike calls, adding net debit at the time $24.95, so the cost is around $2,495 for the trade. This is into the 65 days, gives us some time for that to run up. A trader that may be looking at this is moderately bullish. They think they're going to profit if Broadcom continues to recover from this post-earnings sell-off, and it really they're aligned on this JP Morgan thesis of aggressive buyers.
Yeah, and I mean, the market is also fairly aligned today. As I know, we pulled back about 20% from highs, but we are also still up about 5% on the session. So appreciate it, Jeff Pierce, for all of that rundown on, of course, this very bullish note from JP Morgan on Broadcom here. Now, coming up next, bond yields are back at levels we have not seen since before the financial crisis. But is this finally the moment for fixed income to shine again? We'll discuss where investors should be positioning ahead of the Fed after the break.
Position. Here's a 63 again. 7506.89. Oh gosh. Hang on for a second. Oh.
about?
She's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need, all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to Next Gen Investing. Now, after a sell-off in bonds this year, yields are offering some potential opportunity. But with inflation elevated, credit spreads still tight, and the Fed facing a tough road ahead, positioning in fixed income is becoming increasingly challenging. Joining us today for more on bonds and opportunities in the back half of this year is Joanna Gallegos, the co-founder of Bond Blocks. So, Joanna, thanks so much for joining us today, of course, ahead of this key Fed announcement, which is coming up relatively shortly. But with yields back near multi-year highs, why do you think that fixed income is starting to look attractive again relative to, say, equities?
Yeah, I think that they're offering attractive income, and so that is an improved forward return potential relative to the past decade where rates were at zero. And so I think fixed income wasn't something that people were considering for their portfolio. And at the same time, bonds have their traditional role where they provide diversification and downside protection. So if economic growth does slow, it makes them a stabilizing counterweight to the high valuations in U.S. equities. You definitely want to pay attention given the rates are starting from a great place right now.
Joanna, one of the things that exchange-traded products have done is kind of increase the accessibility of many of these different types of products for the everyday investor. But they have kind of changed the risk dynamics just a bit when it comes to fixed income, since traditionally if you went directly to the treasury, got the fixed income, you would get that return at principal at the very end. Is there a little bit more principal risk when it comes to maybe using like an ETF to get that exposure? Is it more of an expression on the direction of yields than the traditional exposure just going directly to the source?
I think investors have been using ETFs for over 20 years for that express purpose, but they've gotten very comfortable that it's a place where they are putting and investing their cash into. They're moving their fixed income allocations around with these markets. So that's what we really focus on with ETFs, is your ability to be precise in these markets with bonds, and also the cost effectiveness of buying an ETF in bonds in an ETF form is really compelling for investors. So I don't think that you're changing your risk at all. It's still the same exposure. It's as if you're having a manager maintain that position for you over time. And that's important. So people are looking to build their portfolios more so than invest through principal. But there's other ways to do that. There's some ETFs that even allow you to have that principal maturing experience as well. And I think there's just something for every portfolio.
Okay, and credit spreads are still near historic lows despite all of the volatility. So does that signal confidence in the economy or more complacency in the market?
With the credit background right now, when credit markets remain very resilient despite all the rate volatility, and so when credit spreads are tight, it also signifies economic strength in the economy. And most of corporations have had an opportunity to refinance their debt through the pandemic. Their balance sheets are strong, and so we think that it's a really good time to consider credit. Especially if rates. Depending on rates and where we see in about an hour, you don't want to overlook the opportunity in corporate credit, specifically if you're managing on the shorter duration side. Even in high yield, we're making recommendations there too.
Yeah, so this is where it's a really fun conversation that's a little bit different than equity investing, where you're thinking about maybe sectors or categories, but within fixed income, there's the credit question, and then there's the duration question. And typically, the further out on the duration you go, the more a reflection it is of long-term inflation and growth expectations. So, Joanna, when you're looking at both your recommendations, maybe, or just where you're seeing general market interest, how far out on duration are you seeing investors peaking?
Yeah, so we recommend overall an intermediate duration exposure, but if we take it through the lens of what happens with rates, if investors think that the Fed's going to raise rates, they should favor more short duration investments or even in floating rate investments. Short duration U.S. Treasury, short duration investment grade corporates, and even high yield bonds, because high yield bonds typically have shorter duration. These securities, they price higher as rates rise, and so they suffer like minimal price erosion because of their shorter duration profile. If investors think things are going to be stable or falling, and we'll see that shortly, extending duration into intermediate maturities, that can capture some price appreciation. What we don't necessarily recommend, we've seen a lot of folks take some lumps over the last few years, is extending duration too far out. The long side of the curve and long duration assets have really suffered due to the volatility in the markets and this persistent growth and different events that have happened. So we say intermediate for a balanced approach, and shorter if you think rates are going to rise over time.
Okay, and so looking at, say, the second half of this year, how do you think that we should be thinking about, say, fixed income positioning, and obviously broad strokes, but obviously in an environment of elevated yields and very stubborn inflation, and of course, a lot hinging on the announcement coming in now just about 16 minutes?
I mean, I think you just don't want to overlook fixed income. That's what we should do in the rest of 2026. You know, there's some compelling entry points in fixed income that should be in your portfolio. If anything, to take advantage of these historically high yields that are really important for income-seeking investors. And that's, I think, the biggest takeaway that we talk about a lot is, you know, there's a lot of focus on the equity returns, there's a lot of focus on the RIPs and what that does for your portfolio. But you may be overlooking some compelling ways to support your portfolio and take away some income this year.
Joanna, we've kind of danced around it. We got the Fed coming up here in 15 minutes or so. We'll get their, of course, press release. We'll get the decision. Not a lot expected from that. But I think there is a lot of angst and uncertainty surrounding maybe what a Kevin Warsh-led Fed might look like. How much time do you guys spend, you know, maybe stressing over maybe what the Fed may or may not say? Or is it just a situation where we sit, we watch, we find out, we react from there?
I think we can see that the markets tell us daily how strong the economy is. We can watch the economic metrics, and we can stay ahead of that. Hey, it's the first meeting. It's the first press conference. We're going to see exactly what the tone is going to be like. What we do know is rates are high, spreads are tight, companies are in healthy positions, and so we focus more on that trend, and we watch that very closely quarter over quarter, and that's how we come to bear all of our recommendations, even in the face of some exogenous events and geopolitical events. So let's see what happens with the first meeting. We're all waiting, but I think there's a pretty well baked in expectation of what we'll hear today.
So you're not necessarily hoping for any fireworks because, of course, Kevin Warsh's first time really taking the stand. We're not really expecting anything crazy. You look past that and try to get the bigger picture is what my takeaway is there.
We came to market in February of 2022, and we've lived through a lot of different volatility events and been asked a lot about what was happening in the bond markets, and what has been a common thread is the resiliency of this economy, the resiliency of the American company. And so we tend to focus on that just in hindsight of what we've experienced so far within our business being completely focused here.
Yeah, and I think a good way to look at things, especially given the timing, of course, of when you really started to enter some of the volatility of this overall market. But so appreciate your time today. Really great setup as, of course, we approach this Fed event and Fed announcement. Thank you so much to Joanna Gallegos, the co-founder of Bond Blocks. Now, coming up next, EOS Energy is expanding now its battery storage footprint across Europe. We will break down what that means for the company and the energy storage trade coming up next.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. Now, EOS Energy is moving higher after announcing a new long-term storage partnership with Germany, Austria, and Switzerland. So for more details today, we're joined by George Tillis, Senior Markets Correspondent for the network. George, how significant is this for the company? And also, more importantly, how is this playing into Europe's growing role in this long-duration energy storage?
Well, I think this is important for EOS Energy. I mean, if you look at the deal that they announced, there's a master supply agreement with multiple countries under a CPAP agreement, which essentially provides more market share to EOS Energy outside the United States. I think one of the things about this business that's unique in the sense that, first off, they do compete with bigger players like Fluence Energy, Tesla. Tesla's actually making a large growth area into the battery energy storage systems. But EOS is a little bit different. Their technology, they call it Z3 battery modules. These are zinc level battery modules using a different chemistry than lithium ion. And in fact, one of the benefits of this particular type of energy storage is it requires less coolant to keep the batteries cool. And that again is more cost effective for major installations across, the commercial space, especially in the AI data center space, which generates a lot of heat. So that's the value proposition. I think the business itself is growing. If you look at the sales last year, 160 million. They're estimated to grow the sales this year to nearly double, 300 million, and next year, following this year, 600 million. So they're expecting to double the revenue sequentially this year as well as for next year. I think the challenge really lies in the technology, not just the technology, but the cash position relative to the cash burn, because it's very expensive to produce this type of technology. If you look at gross margins for EOS, they're actually negative. They generated 160 million sales, like I said just a moment ago, but the cost of that revenue was 324 million. So the gross margins were negative, and the losses last year were $1.1 billion. Now, a lot of it has to do with the fact that it's an expensive technology. It's a new technology. It's not necessarily ubiquitous yet, like lithium-ion technology. That may end up being a long-term advantage, though. But right now, it may be a disadvantage compared to some of the other majors out there, like Tesla and Fluence Energy. But nonetheless, partnerships in Europe make a big difference because they're willing to try out this new technology, and I think this is a broad move for EOS in terms of expanding their market share globally.
George, whether it's EOSE, whether it's Oklo, whether it's NuScale Power, T1 Energy. There's a bunch of these sort of lower price, volatile, kind of alternative, I guess we could say, power or energy names that get a lot of correlation to the AI trade and the need for electricity and clean power. When you look at these names on a day-to-day basis, month-to-month basis, how much of this is about the need for energy beyond AI, or are they solely just sort of AI correlated trades?
Well, I think it's beyond that. I think, first off, there's a lot of volatility in many of these names that aren't generating profits. And you can see that across the board with some of these other nuclear scale or modular nuclear companies. We talked about Oklo before. I mean, that business is still not generating a revenue. So it's almost like you have to, look at these, not necessarily just individually, but look at the structure of their top line to bottom line financials. So you first have to generate revenue, and that's important in the context of decision making for investments. EOS is generating revenue, Oklo is not. But the next thing you have to determine is what's your cost of that revenue. In EOS's case, it's still negative, unfortunately. And that's why if you look at, the price action since, let's say, October, it's been down. It's having a nice day-to-day, there's no doubt. But there's a lot of pressure, financial pressure on the stock because of the fact that it has negative gross margins. There's other competitors out there that are profitable, that are also generating large revenues, that have positive gross margins, that have other businesses too. That's inclusive of Tesla, Generac, for instance. They're moving into battery energy storage, and they're more of a legacy company that's moving higher on a steady basis. So my point is that there's a lot of technologies that are going to help power our economy globally going forward. I think what's unique about this company is, and this is something anybody who's really inquisitive may want to research, what's the economic and engineering benefit to zinc battery modules versus lithium ion? So that's what you want to look at in this business, and also look at the adoption of zinc ion batteries versus lithium ion, and see if there's traction in this particular chemistry battery versus the long-standing use of lithium ion, which in and of itself is improving in terms of economic and energy yield.
Yeah, I think a really good point and a good thing to do some research on that I am definitely writing down as we speak. But to pivot here completely away from EOS, as we are seeing a nice move today, we have to talk the Fed. Really quickly, George, wanted to get your thoughts on all the Kevin Warsh expectations and the announcement coming in now just about 5 minutes.
Well, it's a tough one because, we want to look at Kevin Warsh as an independent, Fed chair that is going to be backing the institution of the Fed, irrespective of pressure, I suggest, politically. And then, of course, they're going to be looking at the economic data, because we do have not only his inaugural, conference and Q&A, but there's also the summary of economic projections, which come out once a quarter. So there's a lot today to process. Again, based on two-year yields or treasury markets suggest right now that the federal funds rate should go higher, but that might be something they're going to talk about as a wait and see situation to see if, again, energy prices do come down between now and, let's say, the end of the year, so that they can manage federal fund policy relative to the needs of consumers and those who need cheaper financing.
Yeah, I think good place to leave it. So appreciate it, George. And that's going to do it for Next Gen Investing. We're just minutes away from the FOMC announcement at 2 p.m. Eastern, followed by Kevin Warsh speaking for the first time at 2:30 p.m. Stay with the Schwab Network for that full coverage. The watch list is coming up next.
Schwab, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome to the Watch List. I'm Sam Barter, sitting in for Nicole Pedalides. It is 2 p.m. here in New York at the Stock Exchange. We are moments away now from the FOMC announcing its latest rate decision. We will have wall-to-wall coverage of the FOMC announcement and Kevin Warsh's first press conference as Fed chair at the bottom of the hour. But for now, let's take a look at where the markets are trading with just 2 hours left in the day right now as we get this decision. We have got a pretty flat performance for the S&P 500, looking for some direction from what we're getting from the FOMC this afternoon. Here, the Dow Jones has hit another record high, extending on the gains we saw yesterday, up 0.25% right now, putting on almost 100 points. We are off the highs right now, with the Russell 2000 up 1%, the NASDAQ 100. The tech trade back in rally mode today, pulling ahead to the tune of 0.3%. Let's take a look at these futures products as this decision is imminent now. We have, of course, had yields and oil backing off. We've got the dollar index firmer right now at 99.7 at the moment. Gold futures are pointing upwards 0.4%. Crude oil 75 bucks a barrel. Bitcoin is lower on the day. All right, let's bring in Tom White, co-host of Fast Market here on the Schwab Network. It seems like no surprises here, keeping this rate unchanged here. Keep us up to date with what you're seeing, Tom, and the market reaction.
Yeah, market a little bit weaker here after no change here to rates. That wasn't unexpected at this point, right? I think everything needs to be focused on Kevin Warsh and his presser that starts in about a half an hour here. But one item of note, 9 out of 18 FOMC participants pencil in a rate hike for 2026. Now, we all know what their projections mean.
We ain't gonna get
those
it.
typically go away relatively quickly, and maybe that's why Kevin Warsh has been pounding the table ever since he left the Fed before, where, hey, less transparency might be better, and maybe getting rid of the dot plots might be something better that they have to look at. They lowered their median 2026 GDP projection to 2.2% from 2.4% previously. And then if you look at, the next 2 years as far as the Fed medium rate forecast, 3.375%. The forecast was for 3.125%, and that was the previous level also. So we're seeing a little bit of weakness here. Looking at the 10-year yields here, 4.46. They've ticked up about 2 bips, so not much movement there. So that's the thing. One of the reactions initially that I saw, that they removed one of the statements from the previous Fed release when Fed Chair Powell was in power at this point. So I think you're going to have to take this with a grain of salt. I think the press conference, and typically those have gone pretty muted, right? Softball questions for Fed Chair Powell. I think the opposite's going to happen today here, Sam, where I think he's going to get some hardball questions because he's been critical of the Fed. Kevin Warsh has repeatedly over the last decade, and they're going to want to know what his outlook is for inflation, for the jobs market, for maybe giving up maybe some of that transparency and guidance that the Fed had instilled under Fed Chair Powell. So there's going to be a lot of questions to answer here when this press conference starts in about 25 minutes.
Absolutely. I mean, obviously, those who knew him in his previous life at the Federal Reserve knew he was an inflation hawk, and then that's really obviously been the big focus because he was seemingly a little bit more dovish, you could say, within that process of interviewing with President Trump. And so the big question this afternoon is, who is the real Kevin Warsh here? And, will he bend to political pressure? I think that's been a really big question around, obviously the independence of the Fed. But there are so many other burning questions, as you say. I mean, does he submit his dot? Is at the end of forward guidance? Does he say anything about shrinking the balance sheet? I mean, how does he actually see the economy right now? Interesting because we continue to see the data coming in. I mean, with the retail sales this morning, I mean, it continues to point to this economic resiliency. I mean, particularly with the consumer. Obviously, some would view inflation as a problem that's been a problem for 5 years, that predates the Iran war. And so you might have this sort of temporary supply shock right now, but you also have, from all the AI investments, this idea that you have this sort of positive demand shock also feeding into the inflation picture as well. What is it that you're looking out for as far as some of the language here? Because you raise a really interesting point. I mean, is this going to be a case where he's the new kid on the block, he doesn't want to shake the boat too much, he sort of comes out and he acts very balanced, or does he really, really make his mark and put his stamp on it, given everything you've just said about, his criticism of the Fed leading into this time?
Yeah, and I think you make a good point because he wants to set a new tone. He said, and he stated this before, that there needs to be changes made. Maybe some of the models need to be a little bit different. They removed a whole paragraph from what I was just kind of glancing down at from the previous Fed statement. So, yeah, he's going to have to put his stamp on where he thinks expectations are going to be. You mentioned, retail sales have been pretty robust. Earnings have been blowout, Sam, and that's supported this risk-on aspect into the equity market at this point. And now we've got crude oil that's falling with a potential deal getting signed this week. So what does that do to inflationary pressures that have been going the wrong way? They've been going higher. And how does he balance the two Fed mandates between, hey, robust jobs market at this point and inflation rising, but most likely to start to come down relatively quickly at this point? I think you're going to see a real big bifurcation in some of the commentary from the Fed after this meeting and after, Fed Chair Warsh speaks today, is that, hey, you're going to see more division. And maybe that's a good thing because he's stated before, hey, going into these meetings, I want it to be like a holiday argument or holiday fight when you bring up topics maybe you typically talk about. And maybe that's good for the Fed moving forward.
Maybe it's not.
Absolutely. I mean, people would say Kevin Walsh walked into a very divided Fed. Yes, okay, it was divided, but it wasn't around the decision. It was around the language last time around. And as you say, he wants to see family fights. He said that explicitly. And so obviously he wants to see healthy debate around this economy. So obviously we'll be taking that press conference at the bottom of the hour and listening to what he has to say in his first press conference as the Fed chair. Tom White, really appreciate it. Thanks so much for the reaction. Now let's take a look at the bigger picture with Jeffrey Cleveland, Managing Director, Chief Economist at Payden Regal. Jeffrey, thank you so much for your time. What did you make of the decision and some of the comments we're getting out? I mean, it's obviously a unanimous vote here. Convenient timing with oil coming off and yields giving them a little bit of relief here. Just walk us through your initial thoughts.
Well, initial thought, first and foremost, that FOMC statement, I guess brevity is clarity. That's a much shorter statement than we're accustomed to in the past. The last sentence of the statement with the committee promising price stability being the key takeaway. So maybe that's more of what we could expect ahead. Less is more. Less information coming out, but more clarity, more to the point. We'll have to see. I thought it was interesting that 9 of the 18 folks that submitted dots, so I think we're missing 1 dot, should have 19 dots if my math is correct. We only got 18, so, but be that as it may, half of them saw a rate hike in 2026. So that's quite interesting. My only thing is I would say we have a ways to go in the year. It's quite possible we have continued economic growth, as you pointed out, a stable unemployment rate. And then I think it's possible at some point later this year, core inflation starts to cool. And then to me, that's a Fed on hold, not necessarily hiking. But obviously the committee has differing views, and there'll be good discussions at subsequent FOMC meetings.
Yeah, I mean, if this is a data-dependent Fed, I mean, how would you be characterizing the numbers
Beautiful
that we've been
rebound.
getting? I mean, I obviously mentioned
Tweezer
the
bottom.
retail sales out this morning. We've seen the Atlanta GDP tracking
Nice.
3%. That was revised again today. You know, this is a strong economy, it looks like. I mean, it is showing signs of resilience. And so how do you think that is likely to feed into the calculus here?
Yeah, I mean, you said it, resiliency. So we have a resilient economy. We've had, last year we had the tariff shock. This year we had the Middle East and oil shock, and still the economy continues to grow. Obviously, we're getting a nice tailwind from tech. The U.S. is a big beneficiary of that story. So continued growth. I would say the second big point, stable unemployment. The unemployment rate, despite softer hiring trends in the last 18 months, the unemployment rate's still around 4.3%, and the FOMC expects it will stay there, throughout the year. So that's great. And then we have a little bit sticky inflation. Now, I think we could debate how bad the inflation story is. I mean, we're above target, but on core PCE, we're about 3.3 relative to a 2% target. I think I'm going to be keen to hear what the new Fed chair says during the press conference. Does he mention an alternative measure of core inflation, which is the Dallas Fed's trim mean measure of inflation, which is up 2.3% in the last 12 months. So it shows a little bit less of an inflation concern. So it will be interesting to see how he frames that. Altogether, though, I think this is a situation where the Fed can just be on hold. They don't need to cut. They don't need to hike. Just wait and see how things play out. If you have a resilient economy and inflation does eventually cool later in the year, then that'll be a great story. And you don't need to stamp out the hiring. You don't need to push the unemployment rate higher with rate hikes.
Well, that's right. I mean, there seems to be a view that the Fed is likely to try to avoid having to hike and sort of sit on its hands throughout the rest of the year. But, I mean, the data could very much change that course of action, obviously putting more pressure on the Fed to have to reconsider what happens. But what flips the script, do you think, to consider then, once again, rate cuts?
Okay, I would say you have risk in both directions. For rate cuts, it would be an unemployment rate that starts to rise. Again, we saw that in 2024. The unemployment rate moved up 30, 40 basis points, so 0.3, 0.4 percentage points, and then the Fed was cutting rates. So I think that's really a key metric that could bring things back into the cutting frame. On the other side, what would drive hikes? What would really build the case? So not just 9 of 18, but 15 of 18 or something. I think wage growth needs to reaccelerate. So far, even though the economy's been resilient, wage growth has been pretty tame. Average hourly earnings have been cooling. So I just don't see this overheated economy, this overheated labor market where the Fed would need a hike. But that could change as well. So I think you have risks to both higher and lower rates from here.
We're about 20 minutes away from Kevin Walsh taking the stage and the microphone for the very first time at the Fed as the chair. What changes are you expecting? Do you believe he comes in all guns blazing, tries to really make his mark and put a stamp on his first press conference here, or does he take a sort of more measured, balanced approach?
Well, I have to tell you, I've never been a fan of these dot plots, so I think I've been on the record for a long time. They issue these dots, these projections, where they think interest rates will be this year, next year, in the long run. And then what happens at every press conference is the assembled media, the press say, hey, well, the dots say this. And then the Fed chair always says, oh, but the dots are just a collection of just whatever we thought at the time of the meeting. They're not a policy, communication tool. So then I'm always left with, why do we have these dots then if they're not serving some purpose? So I can see him moving away from that. I'm not a big fan. I can see also, hey, do we need 8 press conferences a year? Selfishly, as a Fed watcher, and I'm sure yourself as well, we like to have all of this new information. We can tell stories. We can talk to clients about it. But does it really help monetary policy? You'll recall just less than 10 years ago, when Powell came in as Fed chair, we only had 4 press conferences per year, and Powell chose to go to 8. Could we go back to something more like a quarterly press conference? Would that be so bad? I don't know. So something along those lines. And then, as I mentioned, I want to see, if he's going to point to alternative measures that investors, that policymakers should start to look at or look closer at. And I think the trim mean inflation measure is one. I'd like to hear his stance on that. He did mention that, I believe, in his recent congressional testimony.
Yeah, I think that is some of the expectation. It's just, I guess, how much appetite there is to obviously shift to looking at that as sort of the guidance here. But really appreciate the instant analysis. Jeffrey Cleveland, Managing Director, Chief Economist at Payton Regal. And I just want to mark these markets very quickly because we've had the dollar strengthening. We're at 100 now. We've got stocks are selling off now. We have turned into the red. Coming up next, and at 2:30, we will bring you Kevin Walsh's press conference live. Please stay with us here on Schwab Network.
Win. Kroger, Meta.
This and lose. This and lose.
Meta.
This and win. This and lose. This and lose. This, lose, win, lose, and lose.
So I like it when stocks look more reasonable. We got Meta looking reasonable. Walmart. Let's go to Walmart, pick up shopping cart, pinball, bird seeds, and all the things you need. Let's go to Walmart now. Hey, Washboardjim singing the Walmart song. Oh, by the time I get there, he'll be done with it. He said he'd do it later on in the next concert. Oh. Apple down $2.78. Oxy taking a spanking. Sammy has a little bit of cleavage. Not much. To warrant a duck dinner.
Dot plot, and as one guest we just had on pointed out, missing a dot, dropped the easing bias, and the statement I'm looking at has a lot of lines through it, so obviously revised significantly and much shorter as anticipated by some analysts. What are your initial takeaways here?
Mine are?
I think a couple
Are
things.
you asking me?
So, a bit of a hawkish dot plot, but the good news on that front is if
Too
Kevin
much
Walsh gets his way over the course of the next
propaganda.
couple of days, that'll disappear. And I think that when we think about the summary of economic projections and the forward guidance, that was a very useful tool post the great financial crisis when the only stimulus we had in the economy was monetary policy, and we wanted to make sure we were reassuring the marketplace that the Fed was going to remain easy unless and until we had an improvement. It just hasn't worked in normalized times, and the dot plot doesn't have much of a predictive value. It actually is a pretty terrible predictor of where Fed funds are growing. So I think the removal of that would be fine. What I would argue with that might be coming down the pike as well is that getting rid of the press conferences, I think, does more harm than good. And I think that the chair of the Fed does a great job, or has the ability to do a great job, of describing what it is the committee's thinking about and what it would take for them to change their mind. The reason we went from 4 press conferences to 8 was the marketplace just assumed
pulled right back to a good support.
Wasn't going to make an action. So we had live meetings and meetings that weren't live. So I think getting rid of the press conference might be a mistake, but I think in the near term, getting rid of the summary of economic projections is long overdue. I think that you spend too many questions saying, oh, you've penciled in 3 rate cuts for this year, and the chair always has to say, yeah, that's not really a prediction. So don't pay attention. Don't look at the guy behind the curtain.
Yeah, I mean, Kevin Walsh has been pretty explicit in, his dislike for wanting to be at the mercy of the dot plot and that forward guidance. And so I'm just wondering, as far as the changes we're likely to hear this afternoon, what are you looking out for? I was speaking to the folks over at Charles Schwab earlier today who said they wouldn't be surprised if he makes some sort of mention of the changing, at least in the communication strategy here. You've been doing this for a long time. I mean, how are the markets likely to react to that just because they've been so conditioned more recently with those press conferences and that forward guidance?
You're a babe.
Well, I'll tell you this, everyone that's in my position,
you are a babe.
The blackout period when we can't have any Fed speak. So if Fed speakers are fewer, not more, and we have less Fed speak on a regular basis during the off weeks when they actually can go out and talk, I think that'd be a healthy thing. So if that's part of the communication strategy where there's going to be changes, I would certainly be on board for that. I think that makes a great deal of sense. I think the summary of economic projections and the dot plot haven't served a useful purpose for the last decade, and them going away would be fine. I think the press conference, though, keeping that intact, especially when you have a room full of very intelligent people that write on this matter and help the general public understand where the Fed's thinking, that would be beneficial. I think the big elephant in the room will be the desire to shrink the balance sheet and the process with which they do that. And there's a couple ways to do that. You can do that passively as the runoff matures.
Shut up.
That's that, but I think that it's got a useful purpose in the here and now.
Shut your mouth. Why didn't you remind the room here of AMD this morning? Tweezer bottom there on 30-minute candlestick. Where were you? Oh, it is pretty. That's a pretty one. Tweezer bottom on 30-minute. So we take it to the 5. Now hold on. Snake breakout pullback, inverse head and shoulders. Boom. I hope Miss Prepolini dressed appropriate today. Or should be getting reprimand from the office. Ever since Marley's got on the job, there's been a difference in her appearance. Yeah, a lot of people noticed it. Oh boy, all these opportunities I'm seeing. That AMD was a good one this morning. Is that dip right there? The tweezer bottom. Okay, now it's 38 minutes left into the worst hour of the day for Washboardjim. 38 minutes, and then we go into what you call power hour. That's the hour of the time of the day where you prepare yourself to maybe set up yourself for the next day in trading. You're just now getting off work. You want to hurry up, make it home before this closes so you can get in there and do you an hour's worth of trading. Maybe you can get that one trade in day that you like. Or you're getting ready to go to work. You've got the graveyard shift and you've got it scheduled where you go in at 5 or 6 o'clock, and you get off, you work 12-hour shift 4 days a week. And you're lucky to have Monday off. Yeah, that's a good day. Oh, Monday would be a better day to have off than Friday. I think Monday would be better to have off to trade stocks, my opinion. I'm watching the tape, see what kind of volume we're coming up with on a lot of this kind of lumption. This doing Boeing. Boeing. Okay. You're feeling sorry for Microsoft this morning? I don't. It'll run after enough pumping. Just sometimes you gotta go with conviction, and if you don't like the CEO of a certain company, which is Bill Gates, Microsoft's got a new low coming in. Just ain't that a poor sin? Bill Gates, he ain't my kind of friend. Well, Bill Gates in high school, people kicked him around. Made fun of him. He was some kind of clown. Women thought he was kind of weird. The guys thought he was kind of queer. You didn't know which way that guy steered. Bill Gates, you suck. Bill Gates, you suck. You've made a real good buck. Bill Gates, you suck. Bill Gates, you suck. You made a real big buck. I can't tell you the last time I ever traded this piece of crap. I just throw it on someone else's lap. So have some kind of decency behind you. And don't trade Microsoft. So there's that new low that I was just talking about on Microsoft. Yeah, it's true. He drugged his wife. He's out there screwing little children. Bill Gates. Oh yeah, he did. Bill Gates, you suck. Bill Gates, you suck. In high school, you were nothing but a little ugly fuck. Bill Gates, you suck. Bill Gates, you suck. Good luck. Whoa, thank you very much. Yeah, it's true. Another gold labeled album just come out of the records launch of Washboardjim and the Persuaders. Just watching Nulo come in on Microsoft singing about Bill Gates. How much he sucks. Woo! Oh, look at that knife. Well, you know, the market wants a rate cut, rate hikes. I don't understand. I don't understand why they want rate increase. It's bad enough how much I paid after that last regime. I used to go out and pay $3 for a dozen eggs. Under Biden, they went to 12. I find myself writing songs about Protein Palace. It's hard to eat these days, but I try. I just turned out, looks like a bunch of malice. Protein Palace. That'll be one raw egg. A little bit of sardine. And a couple of garlic. Protein Palace. Whoa. Okay, now we've got a lot of snakes and a bunch of pullbacks. You got snake, breakout, pullback, IWM, 3 black crows on the 1 minute, 5 minute, 5 minute, 5 minute. Oh, well, it changes everything. Yeah, see, that tweezer bottom would have been a good one right there. So would that one. That's my go-to trade. Do-da. should we start? Oh, here he is.
The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years.
Yes, it has.
Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives.
That's true.
My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something, a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy.
You can't be doing that.
First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles.
It ain't gonna work that way.
Ask hard questions. Examine current practice. Consider alternatives. And ultimately propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications.
Really?
This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the Task Force on Productivity and Jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future.
Well, you think so?
And with that, I appreciate your attention. I'm happy to take your questions.
Oh.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall, and hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles.
Oh, sure, he said his urine.
Review of the 2% target itself. You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that in.
Oh, sure, he said his urine.
EMED is, what are the drivers of inflation? What's the Fed's
It ain't your
responsibility
urine.
for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
I have a problem here.
Thank you so much. Colby Smith with the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So
that's a very good question, young lady. You're hitting right on the spot.
And commitment to deliver on our price stability.
Your eyes are dark brown.
That's exactly what we're going to do.
I really like you a lot.
The Fed's review of its strategy over the last any number of years.
Let's
in
go
January,
out to
the
Shakey's.
Fed, including the strategy that we're still bound by.
Have a piece of pizza,
The
baby.
statement says that inflation is primarily determined by monetary policy.
beers.
Bet it is. I've said for years inflation is a choice. Bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that.
Unambiguously.
The rest of your questions sounded like a
It's too
encouragement
big
for
a
me to
word
give forward
for
guidance.
me.
We've dropped forward guidance. Some along the committee I think
Unambiguously.
dropped it. I suspect from our discussion the last
I don't
couple
know
of
how to
days,
spell it.
because they said at this moment in time, It doesn't feel as though providing forward guidance
these
is
kind
right.
of guys in your
Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current.
I've got a problem here. Unambiguously means in the way that the obviously clear in meaning and can only be understood in one specific way, leaving no room for doubt or multiple interpretations. You unambiguously understand what I am saying. It's either yes or no.
It's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. The good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
TARP.
You said you don't like
wait for all that TARP
from the statement this time, but with the dot plot, 9 members suggested that they want a rate increase by the end of the year.
Fuck them.
The markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of
oh, that's a good question.
What the dot plot's future is?
That's a good question.
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, you know, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly, through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve And the best people I know in business and economics and the academy and technology and the rest to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question, so let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision. That is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy.
Monetary policy
is what's happening right now.
Gosh.
What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first...
Okay.
That might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions.
4 scores and 7 years ago.
I'm really open-minded that there is a lot of
There's a man called Walsh
that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Thanks. Welcome, Mr. Chairman. Edward Lawrence, Business. So if you don't give a lot of ongoing forward guidance, won't the markets have
forward guidance?
Shouldn't Americans have more access into what you're thinking going forward?
Yes.
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets
then your
are
job
paying
is nothing
attention to what's happening in the real economy, deciding what's good data and what's less good data, The more financial
The more he
markets can
speaks,
price what they believe is the most
I'm gonna
likely
have to give
and
him
what
an
are the
F.
tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information.
AMD
We're
had a new
blind to
high.
it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions. With ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do, and that we've got to get in the business of doing.
If I could take you in the meeting a little bit, this is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been
Unambiguous.
practice of this central bank and others to have a range of alternatives.
I have a feeling I don't know what that word
Today we had
means.
one. I thought it furthered discussion, deepened it, and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was
It'd be
only one big
unambiguous
subject
if
for
that was
us.
true.
We took it on. We had a good family fight on it for a couple of days.
So, do you think he should have his family involved in his job? Or is he just calling his co-workers family? I don't think it should get too personal to work on the Fed chair. What the hell's wrong with them losers? Do they really even care? Will they ever get audited? Like a normal human being, I dread not. You'd probably just find me on a Walmart parking lot begging for some jelly rolls. I was forward thinking 20 years ago. All it's done is stuck me in this Walmart parking lot. With nowhere else to go. Oh, it's another shame. Forward thinking. What the hell are they talking about? There's your AMD pullback to the 200. And we've got 3 minutes to power hour. So here comes the wind down. We have a triple bottom set up on Amazon. Where's Microsoft? SPX. Oh man, it looks nice. 74 right around here. Right about in here. Somewhere here. Randy, prepare ye. Randy, oh Randy, the king of the wild frontier. He wanted to make sure that you had a roof over your head and a floor to stand on. His name was Randy. Randy, Randy, Randy. Just a little bit more of a drop. That's all I want. That's right about here. So buckle up, baby. As Jim walks over, puts on his Randy underwear. Okay. We have a problem. Problem executing the price of these frickin' options. Ugh. $6? You know, I don't want to spend more than $6. Take your time, Jimmy. You're not in no hurry. Chair Walsh policies views as Iran warns Israel over Lebanon attacks. Yeah. Well, debating if I want to try to ride this out. I think I'll wait. If we get one more big fat red candle. God, look at that. It's 690 all of a sudden. Just the 7490s bounced like incredibly. Right there's $100. And I didn't take it. It's a triple bottom. 1 bis, 2 bits, and a freebie, and that's about where I said we were going to get in there. Somewhere right around in here, and I didn't push the trigger. Be more accurate with it. Go to your price trend line. And go to that body right there. I mean, that's perfect. If it holds right there, that keeps it very bullish still. So what you gonna do? I'm afraid to buy one. These spreads are like 50, 60, 70 bucks. It's tightening up now. 620. Okay, Washboardjim. I try to do my best. Oh man, look at that. 620. It was there a couple times. I should have grabbed one. 820, 870, I'd be out. If I could get out, because these things are all over 870, 830, 860, 880, 870, 890, 820, $8. You got some wide spreads like your ex-girlfriend. She's been around. Your ex-girlfriend, she always got down. Oh, see, all of a sudden it went down to 570. I was up there talking about $8. So now would be the time, if I thought the market was a little bit bullish. It's 3 minutes post power hour, so it's not the best time. Yeah, my name's James Howard. I'm related to Merle Haggard. Well, I fell asleep in school parking lot. There's 570. Now, this would be the spot if you think it was going to hold. They're 570. 74.90s. If you think it's going to hold. If you have doubt, you get one or none. $74.90s at 570. No. Hold it. Very important you hold this support level. Looks like I'm not shit. Break. We're up $100. Now, if you're new to trading, there's your one trade of the day. That's how you do it. I tried to tell them that. 570 to 670. It might be hard to get out of now. Come on. We can easily drop down. I mean, I'm not out of the water yet. I just see a nice little head and shoulders right here, kind of developing. Kind of. These candles don't look too promising. God. 570, 640. Ugh. Just give me a breakout. I can scub it. Mm. I've never had a guitar sound so tame. So, I got this in what year did I get this? $2001, maybe sooner, 2001. So this is my 25th year with this guitar. Well, Elizabeth, she stands by my bed, stares at me as I go to sleep. Elizabeth smells like wood, and the rhythm, it just can't be beat. Some call it a Taylor, but I call it Elizabeth. We got another knife here, getting ready for the powwow. What is today, the 17th? Well, kind of, dang it. That hurt. I couldn't read that, added on that dip. Your green gem, should you sell them? Think about it. Interesting.
Headlines. We'll see if they continue to do that, because what I heard was a Fed chair that doesn't want to do that.
I heard, yeah, a Fed chair who said, I will speak if and when I have something to say. We will see once we get the rest of the speakers who have had quite a bit to say in the lead up to him taking the helm, if they adopt that. Alex, really appreciate you being with us to take a closer look at everything that we learned from the FOMC today and Kevin Warsh's first press conference. That's Alex Coffey, co-host of Next Gen Investing here.
To do here. Coming down to triple bottom. Okay, here we're coming. We're testing support. Testing support. Three black crows on a 2-minute time frame. Nothing's ever the same. Feel all that pain. Three black crows. 2-minute time frame. I might just pick up one day and just take off. I've always had a challenge. Become a beach boy. Well, baby, come and sit right over here. We're coming to Double Bottom, dear. We're coming to Bubble Bottom, dear. I wanna make it clear. Okay, he's gonna make it clear right here. Whoa! Damn, Jimmy. Jimmy! We'll be looking at the 7460s. Jimmy, 7460s or the 7450s if I can get $7 out of the 50s. Oh yeah. Okay, prepare ye in the name of the Lord. I'm taking a risk trade here at $7 and something. 7450s. There it is, right now, right there. Woo! He's going for it. I've never seen anything like it. The guy's a badass. Yep. I tried to call him up, tell him that my mother was single and she needed a husband. $7 sounds good to me. I tried to get it cheaper, but it wouldn't let me. Now it's starting to fuck around. Okay. Uh-oh! They're now at $8.50. $8.80. $9. Now they're back to $7.90, just like that. Oh, God. No. No reason for that. Oh, God, 7:30. Oh. It's not going to look too good. We need 7 here. Okay. You know what to do? Jimmy here. How dare you? Come on now. It's not working out too good. We got another fat finger on the old jigger ringer. It's old big body, man. I need to break this up to the double bottom mix so I can cash in on the lottery. Oh man, down $70. Well, I can't take it no more. God, my feet hit the floor. My heart just hit the floor. Wow. No, it's supposed to work out like that. Zoop. Okay. Well, buy 2 of them. There's 420. Randy 420. 74.50s. Come on. Well, I'm down $190. Rent's due. We gotta get diapers for the baby. Some bird seed for my birds. Well, I'm down $120. And my rent's due. Uh-oh. I'm up to... Uh-oh! Oh, Jim. Instead of being a rock star, you should have bought another contract. We got a TTM squeeze happening right now. I know you can't see it, but it's there. The yellow stripe there to the right. Whoa. What's going on here? This is getting me a headache. If it dives down another candle, I'm hurt. So I gotta make a small decision, get out with a small loss, or buy a dip and watch it rip. Now see, there it is again. Back where I can buy into it. But if it just doesn't do it, bleh, and the floor falls out of the ceiling, come on. Jim. At this price, I'd buy 3. What would Randy do? What would Randy do? You don't want to do that. Oh. We've got 31 more minutes to trade. Ugh. Not good. How dare you? Wow, look at that. Told you it'd be down there. Big knife. When I get an alert. LDOS, I had an alert set. LDOS. That's an old one there. Damn. Saying let's go.
in these task forces that lead decisions, data utility and communications will be the most important ones.
Yeah, the data one really stuck out to me because that was another moment where I felt like he was a bit more open in some of the changes that we might see here. He even called some of the collection methods outdated. I was talking to Alex Coffey while the press conference was still going on air and talking about how one of the methods of measuring a potential rent metric is to call a homeowner and ask them what they would charge to rent their house if they were to rent it, but it wasn't currently rented. As far as that data overhaul, so let's say we take the full 6-ish months through the end of the year to decide what our new data sources are. Is it an overhaul of the standard operating procedures of the current data gatherers we have, or are we looking at wholly new data that's already out there, or is this the creation of entirely new data? I mean, where do you see this going?
Yeah, I think the idea here would probably be to augment traditional data sources, government data releases. Let's augment that data with the broad swath of available private sector data that continues to roll out, right? We're in this world of information technology. AI relies on large pools of data, mass data sources to collect and come up with ideas. Data can provide a lot of insight, and there is a large number of existing private sector sources of more real-time data that can be incorporated, not replacing existing data sources by the Fed, but maybe augmenting them, adding to them, right? I don't think anyone would suggest that more data is a bad decision. Having more insight and more data on how the economy is operating, what types of inflation pressures are at work, how the labor market is responding, having more
You think by now they don't have this shit
is going to
down?
be a good thing.
And as we look at the Fed speak going forward, we got very clear commentary from Warsh that he only believes that it's worth having a press conference if he has something to say that's worth being
look at
heard.
the spy.
We have certainly seen different approaches in the Fed speak of the last year, where we've gotten a lot of heavy opinion from Fed speakers across the nation. Are you viewing this as we may see a broad adoption even before we get to the end of these task force findings and some of these overhauls where people may hop on the bandwagon? Or do you think we're going to see some of these Fed speakers continue to be outspoken in their opinions?
Well, I think that's going to be a challenge on how the FOMC operates. You can't have a Fed chair who is looking to have, a little less public explanation of the kind of inner monologue or inner dialogue of the FOMC, and then have FOMC members out there speaking publicly frequently.
That looks very tasty.
I believe that question came up, or it was kind of addressed slightly in the press conference. But I think at the end of the day, if the goal here is to moderate forward guidance, retain optionality on policy decisions, let the markets process data rather than process Fed responses, then yes, I think you're going to have to see FOMC members kind of rein in their public comments. Sure, you can comment on the economy, but in terms of vocalizing what that means in their vote or view on where we need to take policy over the next 3 months, 6 months, 9 months, I think it's going to be difficult to have that happening while the new Fed chair is trying to rein in forward guidance.
Well, he managed to get a unanimous vote on the policy statement, which hasn't happened in a while. So we'll have to see if he can get a unanimous decision on the communication standards. Thomas, really appreciate you joining us to take a closer look at the reaction here and some of your takeaways from what we learned from the announcement today and also from that press conference. That was Thomas Urano, co-CIO and managing partner at Sage Advisory. Coming up next, we've got Options Corner. Kevin Horner will be joining me right here in our Chicago studio to take a look at the options activity in Delta Airlines after a price target hike for the air carrier. That's next on Market on Close.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
Welcome back to Market on Close. Delta Airlines lower today despite a price target hike from Bernstein. The firm boosted its target on the air carrier to $93, up from $88, noting demand has been steady, and it doesn't believe any consumer-driven weakness has shown up in the numbers. Shares of Delta are up nearly 75% year over year and sit just 6% below the record high. It's now time for Options Corner, so I'm going to bring in Kevin Horner, and please pardon my rhyming. I've been waiting to do that all day. I'm so excited for you to join us for this one. You know, the airline stocks and the cruise stocks all had a really nice day when we saw oil fall down below 80. Now under a little bit of pressure today, but more broadly with the rest of the market as we look at Delta. But as we look at it stacking up against some of the other airlines, how has it been performing?
I mean, it's clearly an outperformer versus the rest of the airline space. As you can see, probably, 15, 16 basis points above what UAL has done, and LUVAAL both lagging quite clearly. But obvious to everyone who's been watching oil, you know, we had the crater, if you will, back here in the middle of March, and then we found our footing when oil more or less topped out, and then it's just been off to the races higher, of course, over the last 2-3 weeks.
And as we look at Delta just on its own, we highlighted it's the outperformer here, and it's so funny because I think your airline, your preferred airline, is just determined where you live, and we don't have a Delta hub here, so I'm always United or American. But let's talk about Delta today and their takeoff that we've seen over the last year. An outperformer, but what are you seeing in terms of the technical setup that we have right now?
Well, you're absolutely right. I think what you said there is perfect, because I fly out of Denver, and so therefore I'm a United guy, of course, because that's the hub. But wherever you are, it's probable that you fall into the comfort zone with your area. But as we're watching this pattern here, I think the break to the upside was what's most notable here. Broke through 76, a very important level of resistance. Then we built a flag over 2 weeks, pulling back to the 20-day moving average beautifully. You've got $80 there. Now, 3 days in a row, we had the top at 87.39, and we've just basically spent 3 days in what I would assume to be profit taking and a pullback to what could be the 20-day for a test of short-term support here. And ultimately, the interesting thing from the options stats, as we'll see in just a second, is basically that there's just not a lot of enthusiasm here today, and that's okay, because we've made a strong push to the upside. And so let's not discount the fact that the stock has rallied from 68 to 87 over a fairly short-term window.
Yeah, I mean, we've seen that a bit too. I think we got this peace deal. We saw the oil prices fall off on the potential for the peace deal, then the memorandum of understanding, and we've been a bit sideways as everybody's sort of waiting. And I was just looking at the JETS ETF while you were talking there, and pretty much sideways across the sector. So as far as the options action, have we seen any increase or decrease? And we're sort of in this lull period as we wait to see if there is a resolution here.
Yeah, I think that's right. Lull would be the great term here today. The sizzle is actually under 0.5, which tells us that average today's volume is 50 basis points under the average we've seen over the last 5 days. So it's a slow day, to say the least. Now, that could be due to the fact that we are in pullback mode. That's one thing. Two, we saw oil come off the 200-day moving average, a good area for long-range support for oil specifically. So that makes sense as well. I did find a trade that stood out. It was 249 contracts on a spread, apparently, utilizing the 105 calls on the upside. So, and that came in at 379. So it's just shy of a 25,000 share allotment, essentially. What I believe to be going on here, Marley, is probably a rollout that gives a trader, and this is, by the way, the December contract for 2026. So this is likely a trader who saw an excellent move, probably got them into a scenario by which they might lose their shares on a short call, and simply rolled it out for a 20% premium for the next 6 months, with the hope being that it gets to that 105 strike that they've selected. So it makes sense to me. It remains relatively bullish to neutral, but today just kind of quiet.
An actual resolution, probably a key part of that thesis for that options trade there. But Kevin, really appreciate you being with us today for Options Corner. And please pardon my rhyme time with your name, Options Corner with Kevin Horner. I mean, it branded itself. I had to do it. Appreciate him joining us to take a look at the technicals on Delta, which is trading about 1% lower today. Coming up next, I'll have George Tillis joining me for Overlooked Stocks. Today, we're going to focus on Cummings heading into the close. We'll break down the news and what you need to know, and Market on Close comes back.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
How's it going?
First day, so. Sometimes, you know.
Next.
Try it again. You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab. Instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at npetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
She looks like you, Dad.
Got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little...
Man, everything's out of support.
We invest with Schwab now. They have everything we need.
Even AMD.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back back to Market on Close. I'm Marley Caden. It's
9
time
more
now for
minutes.
Overlooked Stocks. Power systems company Cummins rallying to a new record today after a price target hike. Joining me now to discuss, George Tillis, senior markets correspondent here. Now, I'm looking at Cummins, and it looks like they have announced a new deal here, a partnership with Circle Energy to deliver natural gas-powered generators starting this year over the next couple years here, George. So walk us through this and why this is so significant.
Where's my drink?
Well, I think it's significant. I mean, just look at what's going on with the company today. Cummins International as well as Caterpillar. I think both these names are hitting some new highs. So there's something of a tie-in between the two companies. And Cummins is one of these companies that is in the heavy machinery, construction, and transportation business. They're really right now a secular AI winner, especially when it comes down to what's going on with power generation needs. So the company's been a traditional diesel, natural gas, and now they're actually moving into electrified power systems. So they supply things like engines and turbines for generators, as well as electrified powertrain systems for heavy equipment, whether it's fleets for like buses, automobiles, heavy machinery, if you will, that use diesel technologies. And so the news today is, again, compelling because one of the things I've noticed is that companies that generate power on site, whether it's Generac, which is a generator company, or Cummins, which is one of their mainstay competitors, these companies have done extremely well as of late based on backup power needs for HPC or high performance computing. And so they secured a 2 gigawatt power deal with Circle Energy, as you mentioned, Marley. This is in West Texas to supply their technologies to high performance computing AI data centers in Texas. So this is helping anchor, the high performance computing build out in data centers in Texas, which is very large amongst many other states where we know data centers are becoming more prevalent and ubiquitous. But nonetheless, I think this industry space is typically cyclical in nature, but they're really, generating a lot of revenues and earnings on a secular basis because of the construction needs, equipment needs, not just for building data centers, but to help maintain them. And that's where essentially companies like Cummins International fit in.
It's so fascinating to watch the turnaround because, I mean, traditionally when I saw Cummins here, I thought, oh, they're like the diesel engines for railroads and trucks. But this is their pivot, as you mentioned, into the AI boom. But as they've pivoted, they're actually sort of keeping themselves out of the bottleneck because you mentioned that on-site generation there, meaning that they're not relying on the public utility grids. I mean, is the expectation here that we're going to see a lot more of these types of deals because we continue to have these conversations about the grids in some of these areas not being able to support this massive build out and that energy is going to be the bottleneck of infrastructure. But with this kind of play, you sidestep that.
Absolutely. I mean, if you think about the bottleneck transmission grid for electric power, there's a lot of red tape, regulatory, easement, if you will, needs, and there's a huge bottleneck there. So if you can bring what's prevalent in West Texas, which is natural gas, I mean, for all intents and purposes, a lot of natural gas just gets flared out or burned off through extraction of oil and other hydrocarbons, or petroleum-based hydrocarbons. There's plenty of natural gas. So if you can pipe in natural gas to an on-site location and generate your own power, bypassing the electric grid, that's a huge win, both from an engineering standpoint, but also from an economic standpoint. And I think that's important in the context of what Cummins Technologies can provide, especially with on-site power generation that is very blended in terms of diesel. If there's diesel availability, they have that, natural gas, but also they're building out electrified power systems, including backup generation, backup storage as well. So they're balancing their technologies. Their end markets have been growing, and this is a huge catalyst for the business. Not to mention the heavy equipment side of building these things, these data centers, which is also in high demand. And that's where companies like Eaton, if you will, have done extremely well. Caterpillar in the heavy equipment space, and the analysts too, like Wells Fargo, has the high street target now of 874. They continue to see these secular tailwinds for companies like Cummins to move forward based on the high capex build out of AI data centers in the next few years.
Well, George, really appreciate you breaking down that one for us for Cummings and the response that we're seeing here to that deal. We are seeing the markets move lower in reaction to the FOMC and the press conference here, but Cummings holding on to its gains, still up 2 1/3%. Really appreciate it. That's George Tillis. We are close to the end of this market session. That means Alex Coffey will be joining us to break down the action we saw today, the reaction we're continuing to see from the Fed decision. That's all next on Market on Close.
Very good.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break.
Is that it?
For this stock.
Oh, shit.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Okay, well, kind of a mediocre day. I got stuck in 2 trades again, but I'm getting in and out of them. Market's not as easy as it usually is. So they're not holding up to their support levels, and you got to get in and out, which kind of tells me that it might be sell the news event. Nobody else is talking about it, but I'll keep talking about it. And we'll catch y'all later.